Also in today's trading session. But on that note, we're going to slip into a very short break, and after the break, we'll get you details that Finance Minister Nirmala Sitharaman and RBI Governor Sanjay Manotra addressed the media after the customary post-budget meeting.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
This growth inflation dynamics opens up policy space for the MPC to support growth while remaining focused on aligning inflation with the target. At the same time, the MPC felt that excessive volatility in global financial markets and continued uncertainties about global trade policies, coupled with adverse weather events, pose risks to the growth and inflation outlook. This calls for the MPC to remain watchful. Accordingly, it decided to continue with a neutral stance. This will provide MPC with the flexibility to respond to evolving macroeconomic environment.
Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. Now let's move on. The Finance Minister Nirmala Sitharaman and the RBI Governor Sanjay Manotra addressed the Central Board of Directors of the RBI in a customary post-budget meeting on Saturday. The Finance Minister said that the new income tax bill will be tabled in the Parliament this week. And speaking on the rupee depreciation, the Governor said that the RBI will let market forces determine the level of the rupee. Listen in.
Yesterday, the Cabinet has cleared the new income tax proposal. I hope to have it introduced in the Lok Sabha in the coming week. Post that, it will go to a committee. And as you know the process is, the committee gives its recommendation, it comes back, and then the government, through the cabinet, takes a call whether these amendments are to be taken in or some of them or more need to be added. It's only after that it again goes to the parliament. So once the parliament after that passes it is when we'll decide on when best to roll it out. The orders for fast-moving consumer goods for the period April to June are already getting booked, and industry is clearly seeing the signs of a possible recovery of consumption, and as a result, many of them are looking at reviewing their capacity utilization itself.
Most of the depreciation is driven by the uncertainties which have come about because of the global and especially the Trump related tariff announcements, and hopefully that should settle down, and that should help us in the downward movement of inflation. For the rupee price depreciation is something which the market forces, as I mentioned, determine. We have a number of instruments at our hands to control and manage liquidity.
Okay, and let's move on to some updates on the election front in Delhi. And the BJP storms are back to power in Delhi after 27 years, sweeping the election with over a two-third majority following a hyper-localized campaign. The Aam Aadmi Party, battling 10 years of anti-incumbency, saw its leader Arvind Kejriwal lose a New Delhi seat to BJP's Parvesh Verma. The AAP's Party's Manish Sisodia also loses his seat, but outgoing Chief Minister Atishi won her battle in the Kalkaji constituency. And let's move on. Manipur Chief Minister N. Biren Singh resigned on Sunday, nearly 2 years after ethnic violence erupted in the state. The resignation comes a day after he asserted his government had been making all efforts to restore peace in the strife-torn state, reportedly citing the ethnic violence that broke out in May 2023. Around 12 MLAs have been strongly pushing for a change in leadership. According to the government figures, over 200 people have been killed in the violence so far and 60,000 have been displaced. Okay, on that note, we're going to sip it a very short break. Don't go anywhere. We'll tell you what's happening in the world of commodities after this break.
The MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%. The MPC also decided unanimously again to continue with a neutral stance and remain unambiguously focused on a durable alignment of inflation with the target while supporting growth.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back to Power Breakfast on CNBC TV18. Now let's go across to Manisha, who's waiting by to tell us what's happened in the world of commodities overnight. Manisha?
Morning, Mini. Thank you for that. Well, I'll start with the gold prices, which are trading near all-time highs of 28.85 that we saw on Friday itself. Well, easing policies from global central banks and the expectations that China would follow with retaliatory tariffs today also has led to some safe haven buying coming in for the gold prices. But the major gains clearly continue in case of metals as a sector. So steel, aluminum, zinc and copper clearly continues to be the top performing metal here. We are looking at 4-month highs in case of copper. We've seen 7% of gains in copper prices in the previous week, and this has been the best weekly gain since the month of September. There have been important statements coming out of Chile, which is cautioned on tightening supplies and rising demand for copper from energy transition and electrical networks, and that really seems to be supporting those metals there.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, Bazaar Morning Call.
countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Monday morning, fresh new week. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rupee. Guys, hi, good morning.
Hi, morning folks. Well, two major events out of the way, the budget, the RBI policy. Yeah. But those tariff headlines, they're definitely not stopping. So plenty to keep us busy.
Well, that's right. And it's a very special day for me because today I complete 14 years here at CNBC-TV18.
Congratulations.
It's been a long, long while. 10th of February, I recall walking into the newsroom. So very, very special day for me. It's been amazing being part of the channel. And thanks to both of you. Every morning we wake up together. So great journey. And thanks to all the well-wishers and, you know, everyone who supported me in the last 14 years. So I'm very, very excited about today, but we got plenty of trading action, so let's get straight to that.
We'll discuss where the party is
exactly.
a little later. So, you know, all right, congratulations, Nigel. Let's just quickly run you through the top things, right? And top of mind, I'm not sure how much top of mind this is, but I just wanted to sort of get this over with. Is there a big impact because of the Delhi election victory? I mean, a lot of commentary, lots of, you know, opinion, etc. It's sentiment positive. I mean, sentiment, mood positive. But is there any real implication from a market, durable implication for the market? I don't think so. And I think you can see that up on the GIFT Nifty, which we will put up a little later as well. But it's big news, of course. I mean, the BJP is back after 25 plus years in the national capital. So that, of course, very, very significant in that sense. But from a market standpoint, don't link it too much. Now, in just sort of straight up after that is, of course, all the tariff news flow. Trump saying, and this is, you know, you got to contextualize when he said it, because he says one thing one day, 2 days later he says something else. So on Sunday, he essentially said that, this is yesterday, he plans to impose 25% tariffs on all imports of steel and aluminum. This is applicable in all countries. This is essentially what he said. Most exposed to these steel and aluminum tariffs, if they were to go through, are countries like Canada, Mexico, Brazil, and UAE. Actually, but even for these countries, as a percentage of the GDP, it's not much. But these are the countries most exposed if this was to come through. Then last Friday, if you have to go back, he said that he would impose something called reciprocal tariffs. Now, reciprocal tariffs are nothing but tariffs which, you know, if they were to be imposed, you know, US would be able to sort of impose a tariff on countries which have tariffs of say 10, 15, 20%, whatever the rate is, on products which they import from the US. So this is just reciprocating those tariffs. Now, the only way this can be a positive is if the countries which are being threatened with this reciprocal tariffs lower their tariff rates. So that it actually does not hurt trade, it maybe betters trade. But it's not so easy. It's not so simple. We'll have to see what really happens. He said that, you know, a conference will be held on Monday and Tuesday, and a decision will be made sometime after that. Now, and of course, Bloomberg is reporting that tariffs are likely to go into effect soon after this conference. So he's very clear he wants to do this. It's something he's spoken about in the first term as well, and through the campaigning process when he was campaigning for presidency. And now it looks like it's going to happen. Now, dollar index through all of this between Friday and this morning, because after these steel and aluminum tariff news flow, it went up a little bit more. It's gone up about 0.7% Friday and this morning. We are at about 108.4. So we'll have to see, because this is, of course, negative for emerging markets broadly. US non-farm payrolls were mixed. This is the jobs number. No clear signal. Markets very hesitant to interpret data as net hawkish for the Fed. Because, I mean, you know, we'll not go into details here, but pricing, etc., has not changed. For the full year 2025, 37 basis points worth of cut has been priced in. The first full cut from the Fed is only priced in the month of September. This is, of course, market pricing. Equities in the US ended in the red, 1% in the S&P. NASDAQ was down about 1.3%. There's a very important meeting. Prime Minister Modi will meet President Trump this week, and this happens in the backdrop of tariffs, right? And we'll have to see whether, you know, what comes off it. The one opinion is that we've already started to lower tariffs in the union budget, customs duties, etc. But we'll have to see if there is more talk around that. A plan for Russia, Ukraine. I've been sort of talking about this for the last couple of days. Maybe sometime on Friday we'll hear. Just to circle and tie in the levels here, Nifty is bounced on Friday from the 61.8% retracement, but not close on the positive. We had a slightly negative close. We need to break above 23,807 on the upside. On the way down, the level to watch is 23,443. That's the recent low. Bank Nifty support is at the low of 49,871, and then downside level is 49,569. And we need to sort of break above the high of 50,642. These are very, very near-term levels. I mean, levels, highs and lows which have been made over the last 2 or 3 days. But this is essentially what we are dealing with. A very ranged market without very much by way of triggers in that sense. Surabhi.
Absolutely. Yeah. Prashant, I just want to, before I talk about Asia, I want to pick up on that point on the mixed US data that you were referring to. Just to go into the details, why is it being interpreted as net hawkish? Because if you saw the number, the payrolls number, that actually missed estimates. If you're looking at non-farm payrolls, the number was 1.43 versus estimates of over 200,000 job increases. But it was still taken as hawkish, was still taken as strong. Why? Because the unemployment rate came down. It's trickled down to about 4% versus the estimates, which were 4.1%. And not just that, hourly wages are running at a very strong rate. And those numbers topped estimates. 4.1% year-on-year increase in hourly wages and about 0.5% month-on-month increase, and both were ahead of estimates. So wages are strong in the US. Another important point I want to just pick up on is the expectation of future inflation. And those expectations are surging in the US, and a lot of it on the back of a lot of the tariff action and the tariff noise that we're hearing. Now, this is a University of Michigan consumer survey, and it has the 1-year forward inflation expectation. And the 1-year forward inflation expectation is 4.3%. This is the February figure. Just a month back, it was at 3.3%. So clearly, consumers in the US are worried about rising cost of products and services for them with the tariff wars underway. Speaking of tariffs, China's tariffs on US goods. This was announced last week. It's kicking in today. The reciprocal tariffs that China announced, which means 15% tax on import of US coal and LNG, 10% tax on US crude oil that's coming into China, agricultural equipment, as well as certain large cars. So the tit for tat is really continuing on that front. And plus, we have to see what Mr. Trump decides to do this week, the universal 25% tariff that he's talking about. Some inflation numbers out of China as well. And after many, many months, CPI inflation in China is picking up. That number has risen about 0.5%. In the latest print, which is January, versus just about 0.1% in December. But producer-level prices are still under pressure in China at the factory gate level. So the producer price inflation number, that's still in declining territory. In fact, in January, it's fallen a little more than expected, down 2.3%, minus 2.3%. For us here, it's been a week of consolidation, and it's a week where the Nifty is struggling to get past this level of 23,700, about 800. That's become a bit of a congestion zone for the market. The last 3 trading sessions, we saw lower highs every single day, Wednesday, Thursday, Friday, where the Nifty could not conquer this level. So can it happen this week or not? Let's see. The flows are not entirely supportive, but the net selling number from the FPIs, that's come down. So that's the good news to look at. In fact, if you're looking at the net number, net sale was just about 470 crores from FPIs, and net buying by domestic institutions was about 454 crores. At a net level, it's a lot better than we had. But if you're looking at the total tally so far this year already, the net selling, there's no respite. We thought 2025 will get a respite. That's not happened. Look at that big number, over 85,000 crores sold in the cash markets. In terms of news flow, of course, we'll have the tail enders of the earnings season. We'll talk about that. I'll once again watch out for Hitachi Energy. This is not entirely unknown by the market because they were talking about another big HVDC order, and it seems it's coming through. And it's the same consortium, BHEL and Hitachi, and they've won this project from Adani Energy Solutions. This is a link for renewable energy transfer from a place in Rajasthan to Uttar Pradesh. Large order, and we know the market's gotten. The stock has been completely re-rated, Hitachi, on the back of these HVDC orders. So let's see if there's any further announcement, any further excitement on today's announcement. But Nigel, Nifty's been in a congestion zone, trying to take out 23,800, not quite there.
Well, that's right. And the global setup is a little bit gloomy, but I'm a little bit positive on the markets. And there are 3 big reasons out here. First is the state election outcome. Well, that is positive because there were some jitters getting into the weekend. What's going to be the outcome of the Delhi elections? A small state, but you want the the BJP who's ruling at the center to rule in more states as well, because that ensures some kind of policy continuity. So that is good news. The budget 2025, it addressed, we had a problem in terms of economic slowdown, and they have addressed that, and also the RBI. So when you address a problem, that's rather good news. And both the government of India as well as the RBI, they have put their hand out and they're willing to get counted. So all those three are positives. What's uncertain? Trump's tariffs. That can swing any which direction. Even if you look at some of these metal companies, yes, there are going to be tariffs, but most analysts, they're scratching their head. They're wondering which way is it going to go, because there could be a supply shortage that's going to be out there, could push up prices. But the other sense, some of these countries will start pushing most of their supplies into other markets. So Trump's tariffs is a bit of an uncertainty. And what will big central bankers like the Fed as well as the Bank of Japan do from here on? Both those 2 points, they are uncertain. Looking at the FIs, what do they do in index futures? They sold a marginal amount in the cash market, but on the future side, on the short side, they added close to around 6,000 contracts, which takes the short position now to around 1.6 lakh contracts. Remember, sometime of last week, that net short positions had come down to around 1.4 lakh contracts. That's back to a negative. The FIs are net short by around 1.6 lakhs contracts, while the clients, they are net long. That's hovering around that 1.4 lakh contracts or thereabouts. So both of them on opposite ends. The two goalposts that I'm looking at, on the upside, the 23,800 call, well, that's the important mark. And on the downside, the 23,200 put. That's the important mark. So just plugging in the numbers from the options data and looking at the technical levels, you're getting your reference point. So on the upside, this 23,800 odd mark becomes a bit of a resistance zone. But since that's seeing some writing, the 20 DMA, that's the important mark on the upside. On the downside, you had your reference point at around that 23,200 odd mark. So that's the broad range that you're looking at. The bulls will want to go ahead and, break past the 23,850 odd mark, while the bears, they are looking to go down and, in fact, look at testing those recent lows. What about the Nifty Bank? That's got a reference point at around that 49,800 odd mark, which incidentally is the recent low that we saw. And it's got its work cut out, because at around the 50,800 mark, that becomes a bit of a resistance zone. So I think it's a bit of a positive bias. You'll want the Nifty to build on to the gains. The global picture is a bit murky, but otherwise you've got cues going in favor of the bulls on the domestic front. The stock that I'm looking at is ITC Hotels. That saw massive volumes. Now it's out of the Sensex as well as of the Nifty. And volumes are very, very high. So most of that selling that had to take place, that's got absorbed. I'll keep an eye out on that stock. Nearly 5 crore shares traded on the NSE itself.
Okay, all right, got it. ITC is going to be on the radar as well. Thank you for that, Nigel. Let's get started then with the equity call of the morning. We have Aswad Damodaran coming in on the call, and he says the most expensive market in the world is India, and no amount of hand-waving about the India story can justify paying 31 times earnings, 3 times revenue, and 20 times EBITDA in the aggregate for Indian companies. Okay, that's pretty straightforward, saying the Indian market's still very expensive.
Absolutely, and that's someone who knows a thing or two about valuations, right? Now, Ed Yardini is president at Yardini Research. He's with us now to take some questions. Ed, good to have you with us here back on the program. Prime Minister Modi will be meeting President Trump this week. The general opinion before this budget has been that India is one of the most tariffed countries. In terms of high tariffs, import duties, etc. We've started to ease some of that in the 26 budget that was presented, the union budget which was presented. Do you think that'll dominate conversation when that meeting happens this week? What's your sense?
I think it'll be a very important issue that will be certainly raised by President Trump. President Trump wants reciprocal tariffs, so he's going to go around the world, country by country, that's important to the United States as a trading partner, and basically start to negotiate on what kind of tariff relationships other countries want to have with the United States. I think what Trump is really trying to do is get tariffs reduced across the board and negotiate America's importance to other countries to accomplish that. But of course, there'll be other issues, including, of course, China's role in the world, and whether India, which side India wants to be on the Chinese side or the U.S. side. And I guess the answer is India would prefer to be on neither side, prefer to be on its own side. But Trump may put some pressure on Modi to align more with American interests.
Well, Mr. Yardini, and I think India is going to try and figure exactly that out this week when the high-profile meeting happens between the two leaders, right? It's just ahead of Valentine's Day, so maybe they'll, I don't know. We're hoping there'll be some love in the air, but we'll find out. on tariffs, however, from an equity market standpoint, I mean, this is real. Earlier, it was a lot of rhetoric, it was brinksmanship, but now it's getting real because those reciprocal tariffs from China, they're coming in. I was reading that out earlier. It's on coal imports, LNG, so on and so forth. So it's becoming a reality. At what point does it start hurting, U.S. equities in terms of sentiment? I was also looking at the future inflation projections, 1 year forward, inflation projections, and those projections are already surging.
Yeah. Well, I think in the next few weeks, next few months, we're going to get a little bit more clarity on how much of this is negotiation and how much of this is going to be retaliation. Clearly, it's in everybody's interest to lower tariffs and to have freer trade, and the United States wants to participate in that kind of process. But if instead we get retaliation and an escalation of tariffs, that would be very bad for the global economy. During Trump 1.0, the tariffs did in fact slow global economic growth. The advantage the U.S. has right now is the U.S. economy is very, very strong, and certainly has a lot of economic clout vis-a-vis our trading partners. So I think there will be a lot of negotiations. I think there'll be a lot of ups and downs in this process. So I think what it means for the stock market in the United States is we're going to have choppy waters for a while. But I think by the second half of the year, some of these unknowns and uncertainties will be clarified. And I think on balance, I'm optimistic that the U.S. economy will be fine and that earnings will be fine and the market will go up along with earnings.
So positive on the U.S. markets, Ed, and I think you've made that point as well earlier. You expect the S&P 500 maybe pull back a little bit, but ultimately head to around 7,000. I think that's the point you made the last time around.
That's correct.
That's
my view.
What about the U.S. dollar? Going by the tariff implementation, going by the economic data that's coming out there, it's cooled off a little bit from the recent peak, but you believe that it's headed higher from here on, and you're sticking to that stance that the Fed will not be factoring in any more cuts, no more cuts from the Fed in this calendar year?
Yeah, I think there may be no more cuts this year. Maybe I'm currently in the none and done camp for 2025. I think the economy will continue to show enough resilience. I think on balance, all those employment numbers that came out on Friday, including lots of revisions, showed that the labor market doesn't really need lower interest rates. It's doing just fine without lower interest rates. So that should be a plus for the dollar. So should the relative strength of the U.S. economy compared to the rest of the world. And on a more immediate situation, higher tariffs do seem to push the dollar higher. But meanwhile, we've got gold at a record high. We've got Bitcoin relatively volatile. There's the currency market isn't just foreign currencies. It's also gold. It's also Bitcoin. So there's a lot going on. But on balance, I think in terms of currencies, I think the U.S. is going to continue to be strong, especially relative to commodity currencies.
All right, Ed, we'll leave it there. Thank you very much for joining us. It's a pleasure. And look forward to our next chat. It's always interesting. We'll take a quick break here, but let me just quickly run you through the corporate interactions which are lined up, and there's a lot. So 8:35, PG Electroplast Management joins in on the back of the third quarter numbers. Vikas Gupta. As always, 9 o'clock, the management of Zaggle Prepaid will be with us on the back of their third quarter numbers as well. Nitin Basine of Ambit will be talking to us at 9:20 post-opening. Anish Shah of Mahindra Group will be speaking with us at 9:40 to discuss their earnings and road ahead. 9:50, the management of Viatech Vabag. You don't hear from them very often. That'll be the other management, and it's the economy with Lata. Will be in a conversation with Suresh Ganpati of Macquarie Capital and RBI Policy Impact, banks, NBFCs and more. So that's coming up.
All right, well, time to slip into a quick break, but we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. We'll look at LIC, NHPC, Vartech Vabag, Fortis Healthcare, First Source Solutions and Religare. They'll be reacting to positive news flow. On the flip side, All India, Amara Raja, Honeywell, as well as Delivery will be reacting to negative news flow.
ये जो 27 साल बाद दिल्ली में बीजेपी दोबारा आई है, ये बहुत बड़ा बनवास काट के आई है। केजरीवाल तो गए, केजरीवाल का पॉलिटिकल करियर भी खत्म है, केजरीवाल जेल में भी जाएंगे। जो पैसा कमाया तो इसको एंजॉय कर लें और उनके पास
Welcome back. So the cues across Asia are pretty mixed. We've been saying that a lot of the markets are, blinking red and green. The Chinese markets are actually doing pretty okay, considering they're at the center of the whole, tariff talk and tariff storm. Look at that. The Hong Kong market's up about 1% at this point in time. The mainland Chinese market is also higher. Let's pull up the implied open and see what we are getting. It's, there we go, about 62 lower. So going more with the caution on the implied open. Let's get down to individual stocks. Plenty of names to track. And as always, we have our team standing by with the CNBC-TV18 list of top stocks for the morning. Guys, good morning to all of you. Yash, let's open with you. LIC numbers, how do they look?
Well, Surbhi, as far as LIC is concerned, there has been degrowth across parameters on a year-on-year basis. But I'm still going with green on the stock. That's because if you compare it to what Street was anticipating, the top line has been a miss in terms of total APE and the retail APE, but the operational performance in terms of value of new business and margins have come ahead of Street estimates. The Street was anticipating a higher miss on the margins, but the miss on the margins is much smaller than that, about 64 basis points. The margins have come in at about 19.36% versus 20%. This is one reason. The second reason is also the fact that the stock has corrected significantly. It's down 33% from its 52-week high and trading at its 52-week low. These are the two reasons why I'm going with green on the stock.
Okay, all right, going with green out there. Thanks a lot for that, Vivek. Well, let's, for that, Yash, let's hop across to Vivek. He's here to tell us about NHPC and VA-Tech Fabag. Morning, Vivek.
Well, good morning. NHPC, it's a very mixed quarter. A lot of one-offs, a lot of provisions that the company has made, and some key projects commissioning that was awaited continues to be in limbo, and that is something that the Street continues to await clarification on. However, the core hydropower generation in the months of October, November, December were quite strong, which led to a revenue growth of almost 11.3%. Multiple one-offs, but however, EBITDA up almost 36% on a year-on-year basis. Margins 44.7 versus 36.6, and profitability impaired or marred by one-offs, especially much lower other income at 330 crore versus 495 crore. Profitably went down 50%. Now, the other important aspect to keep an eye out for was the interest expense. The interest expense this time around was almost 5.5 times higher at 650 crore, and this was at the back of multiple adjustments that the company paid. Prior period employee expenses of close to 200 crore and arbitration claims of close to 100 crores. Going with the green only on the back of the fact that there was some growth seen as far as hydropower generation is concerned, but the Street will be worried about commissioning of key projects. Now, coming to VA-Tech Fabag, let's put this particular company into two separate developments that we are tracking. The first one is the results itself, and the second one is an order inflow update that the company has given. Let's have a look at the results. Top line grows. However, the Street will be slightly worried about the margin compression that the company has seen even compared to Q2 as well as Q1. Revenues higher by 15%, EBITDA up almost 1.5%, but margins at 12.4% versus 14%, profitability higher by 11.6%. Now, the order book at the end of Q3 stood at 14,200 crore. Now, very interesting, yesterday the company announced that as part of a consortium, the total consortium won an order of a little over 3,250 crore. Now, this is for an independent sewage treatment plant and has come from Saudi Arabia. Remember, in December, the company had lost a large contract. Given the fact that they've received one more contract from Saudi, it will assuage a lot of investor concerns. The management will be joining us later today, and we'll get a lot more details, especially as far as the order inflow outlook is concerned from Saudi as well as India.
Well, as Vivek said, thanks Vivek for that. 9:50 is when you'll hear from the management of VA-Tech Fabag, so stay tuned for that. Well, Oil India and Amar Raja are going to be the other companies in focus. Sud is here with details. Good morning.
Good morning, Prashant. So for Oil India, it was an all-round miss. Revenue was down 0.1% versus expectation of an increase. Even EBITDA has slipped 2% versus an expectation of 12% rise. And because of that, margin has slipped to 40.7% versus expectation of 46%. The reason? Crude realization has fallen 7% sequentially versus expectation of 1% fall, and crude sales were down 2% versus expectation of increase. Even apart from weak earnings, even company has cut FY25 crude production target. Now it's expecting crude production at 3.48 to 3.49 MT versus earlier target of 3.60 MT. So that's the reason I'm going with red for Oil India. Second is Amara Raja. Company has reported operationally weak set of earnings. Margin has slipped below the targeted level of 14%. Now adjusted profit was down 21%, EBITDA was down 4%, and margin has come in at 13.1% versus 15.1% in the same quarter last year. And company says margin was impacted due to fuel and power purchase cost adjustment recovery that was approved by Andhra Pradesh Electricity Regulatory Commission, and that has led to increase in electricity expense, and that was the reason margin was impacted. And because of that, I'm going with red for Amara Raja as well. So both red for Oil India as well as Amara Raja.
Okay, it's not looking too good for these two in the third quarter. Got it, Sudarshan. Thanks very much. Let's move on to Fortis Healthcare. Vinny is tracking these numbers. Vinny, morning, looking healthy?
Absolutely. A strong set of numbers that has come in from the company in Q3 of FY25. Strong growth in terms of revenue, 15% growth. Margin seeing a very good expansion of around 250 to 300 basis points. So yes, the expansion mainly in margins is also something that is leading to a strong operational performance. Now, revenue growth, why is that seeing such a good growth? The hospital business, which accounts for more than 84-85% around of the revenues, has done quite well for the company. They've seen a good growth in ARPOB also of around 9.9% for the hospital business. So all in all, good numbers coming in from the hospital business side. Occupancy that has improved to 67% versus 64% last year. International patients revenue has seen a growth of around 17% to 132 crores, as well as the focus specialties of the company. So neuroscience or robotic surgeries, that has also seen a good growth. That is better margins for the company as well. If that sees a good growth, that leads to an improvement in terms of margins. Both of these have improved by neuroscience has seen a good growth of around 23%, while robotic surgeries has seen a growth of 77% on a year-on-year basis. So good performance on that front as well. And diagnostic business, that's a bit subdued, but that continues to see recovery, and that is what we're watching out for. We're expecting green for Fortis Healthcare.
Okay, all right, Vinny, thanks a lot for that. Let's hop across to Vamakshi. She's going to tell us about Honeywell's numbers. Vamakshi, a little bit of a subdued set?
Well, absolutely, Nigel. A weak set coming in for Honeywell. When you look at the revenue, that's on an uptick of only 2% on a year-on-year basis. This is much lower than what the street was anticipating. The cost of goods sold has seen a much higher jump of almost 14%, putting pressure on the margins. EBITDA margin has seen a decline of almost 198 basis points to 13%, and the net profit too is seeing an uptick of only 3%, but most of this uptick in the net profit is being driven by other income, which saw a very sharp jump of almost 78%. But overall, when we look at the numbers from Honeywell, a weak set it's a miss as compared to street expectations. In addition to that, there's a note that came in from Novama. They say that intense competition, persisting supply chain challenges, and adverse product mix continue to be negative catalysts for the company. They've gone ahead and trimmed their FY25, 26, and 27 estimates by 7%, 8%, and 9% respectively. And given that they've retained a reduced rating on the counter, cut their target price to 36,675 rupees per share. So overall, I'm going with the red for Honeywell.
Okay, all right, got it. Vamakshi, thanks very much for that. Let's now head across to Mangalam to figure out if delivery has been on the mark or not. Mangalam?
It's actually not been on the mark. Delivery this quarter hasn't delivered, which was a seasonally strong quarter. Remember, e-commerce companies see a lot of business, but that has been eaten into by quick commerce. So delivery, the revenues were absolutely, feeble at around 8.5% in terms of growth. Remember, typically in the third quarter, the company shows mid-teen sort of growth, and that's reflected in the EBITDA as well. It's been flat. Margins have come off by 70 basis points. The net profit, yes, it has increased. It's doubled on a low base, but that's largely because depreciation has come down. And the company, remember, 2 quarters ago had changed their depreciation method. So as a result of which, the depreciation is actually lower by 66 crores. If you add that back, then even the net profit has shown a decline. What is the key disappointment out there? Express Parcel, which accounts for nearly 2/3 of their revenue, their shipments grew just 2.4%, and the margins came down from 20% to around 15%. The company did try to manage that with the other business, which is the part truckload business, where tonnage increased by 16.5%, and we also saw margins improve. But that's too small a contributor right now to mask the weakness that we saw in express delivery. So see some red on delivery today.
Right, Mangalam, thank you very much for that. Well, First Source is the next one in focus. Rima is here with details. Rima, morning.
Hi, good morning. So the key highlight is the company has raised the full year revenue forecast. So Q3 has been good on the top line, 8% quarter-on-quarter revenue growth, a near 30% jump year-on-year, margins expanding to 30 basis points. But as I said, FY25 revenue growth forecast has now been now stands at 22% at the midpoint versus 20% earlier, and margin guidance has been retained at 11 to 11.5%. Back to you.
Okay, all right, Rima, thanks for that. Well, let's go back to Vivek. He's here to tell us about Religare. Vivek, good news coming in.
Well, good morning. Quite a lot of uncertainty actually has dissipated as far as Religare is concerned. One of the biggest worries, or the main agenda, in fact, as far as the AGM was concerned, was one of the points on the agenda on which shareholders were expected to vote, which was the reappointment of Dr. Rashmi Saluja as the MD CEO or as the chairperson. Now, what's actually happened is that amidst high drama, eventually the voting has taken place, and as per the votes that was uploaded to the exchanges last evening, 97.53% of the total voters actually have rejected the reappointment of Dr. Rashmi Saluja. Now, what this means is that, number one, most likely she will have to move out of the company. Now, the second important development that has taken place is that the Supreme Court has actually asked the Berman family to go ahead and extend their open offer till February 12th. This is basically to pave way for, number one, giving Danny Gaikwad enough time, the competing open offer, to go ahead and put 600 crore as earnest money. However, this does not mean that the open offer has been approved as far as Danny Gaikwad is concerned. There are multiple regulatory approvals that are required, including SEBI, IRDAI, CCI, as well as Ministry of Finance. So one key part of the puzzle has gone. However, the open offer continues to remain in limbo, whether or not Danny Gaikwad's open offer goes through or not.
Okay, all right. So let's see. The open offer battle still seems to be on, though the question of Ms. Rashmi Saluja, maybe that's been settled. At least that's what it looks like for now. Vivek, thank you very much for the details over there. Let's quickly recap our list of stocks to watch today. The ones that have positive news flow around them are LIC, NHPC, Viatech, Wabag, Fortis Healthcare, First Source Solutions and Religare. The ones that have negative news around them are Oil India, Amara Raja, Honeywell Automation and Delivery, largely on the back of disappointing Q3 numbers. Okay, so that's our equity list for the morning. Let's move on to commodities now. We have Manisha joining in with the roundup of all the action. Manisha, good morning and happy Monday to you.
To you too, Zurvi. Thank you for that. Well, I'll start with the crude oil prices because we are back above $75 a barrel for the Brent prices there. Well, there are new U.S. sanctions on Iran crude exports. That is keeping the prices higher. And then the U.S. may announce new global tariffs on steel and aluminum today. China tariffs on U.S. goods also take effect today. So there's just a lot to deal out with, and that is what is keeping many of these commodities on the higher side. In case of tangible commodities, you have base metal prices also trading firm. Copper is trading at a 4-month high. We've seen copper prices gain up by 7% in the previous week, which was the best weekly gain since the month of September. And then you have to take a look at the gold prices also. While we have seen an all-time high of 2886 an ounce, it's trading around 288.80 right now, so not too far away from its all-time highs. The easing policies from global central banks and China perhaps could follow with retaliatory tariffs today. There's just so much uncertainty that's keeping safe haven buying continuing in case of gold.
All right, Manisha, thank you very much for that. Absolutely, lots of uncertainty, and the price of gold keeps going up as a consequence of that. We'll take a quick commercial break here. We're going to come back. Prakash Diwan will be with us with some fundamental stock conversation. We'll also be we'll also have the management of PG Electroplus join us a little after that. Stay tuned.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
This growth inflation dynamics
Welcome back. Hope you're having a good morning. As promised, let's get to Prakash Tiwan, our market expert, who's going to help us out with some fundamental analysis. Hi, Prakash. Good morning and good to see you in as always. Prakash, let's talk about LIC. That's been a big underperformer. It showed some signs of life. I remember it going to around 1,100. From there, it did sell off as well. These numbers, look pretty okay. Your view on the stock, given it has that cushion of valuations as well, close to around 820 odd?
Good morning, Nigel. No, absolutely. I think LIC is giving you that, finally giving you that opportunity where the turnaround seems to be imminent. And remember, we are getting into a stage where, given the bond yields and in the backdrop of the interest rate cuts that could come through and have already started, there could be a very smart pickup in terms of their bond portfolio. And remember, the fact that LIC also has been consolidating its operations in terms of network and distribution reach and all, there's been a lot of repair that's undergone. And things could be very different once they start launching products which are more promising than what they have. They've not done anything new in the last 6 months, 12 months radically, whereas the private sector has been really doing a lot of things to fill gaps. So I'm quite positive on this, and this is a stock that you hold for at least 5 years. You don't look at it on a quarter-on-quarter basis, but things have started looking very positive, especially in terms of the total APE going up and especially contribution from retail.
Okay. All right, Prakash, hi, morning. In the next, I think, couple of minutes, we'll have the management of PG Electroplast joining in. I don't know if we have them already right now. I think we'll connect with them in just a bit. I want to get your take on the stock. I mean, it's been absolutely scorching growth, right? They revised their guidance higher as well for the current year. But again, it's the same question. Do valuations offer some support? Now, the stock has cooled off a bit from the top. How do you find it?
Good morning, Sarbir. No, I think most stocks which were very expensive have come down, and they're still expensive. And this happens to be in the same category. We'll of course have to wait for earnings to keep catching up. They have a good footprint in that sense. There's nothing disturbing that. But if the stock has lost about 6-7% in the recent month, it really doesn't yet make it very viable in that sense. I would believe the market is not in the mood to buy into stocks which are still expensive, given the uncertainty that still exists and the kind of valuation risk that still we carry. So when we say India is one of the most expensive valued market, these are stocks that actually come to the fore, and these will have to correct more than the broader markets, which are probably already corrected. So wait for some more time, and of course we'll hear the management in terms of what salience and timelines you could attach to it. But I would definitely wait even when things are very positive.
Yeah, absolutely. We've got looking at a longer term chart of PG as well. Stock's done so well, up over 300% in the last 1 year, and then it's cooled off around 18 to 20% from the peak. There you go. It's been a dream run for PG. Can the dream run continue? That's the question. Can the numbers match these tall expectations? Well, the company reported a very strong quarter, Q3 that is. The business grew about 82%. I mean, it's largely coming in from the product business growth. The room AC segment, of course, has been leading this from the front. Not just this, the company has increased its guidance for FY25 as well on revenue and profits. To talk about this and the outlook ahead, we have with us Vikas Gupta, Managing Director, Operations at PG Electroplast. Mr. Gupta, great to have you on. Thank you for joining in. So the math has already been done because you've raised your full year guidance. I think the expectation is now 100% revenue growth in Q4. 48% revenue growth in Q4, maybe 100% growth in PAT. Just the back of the envelope calculations. But I want to start, before we talk about room ACs where your order book is swelling, I want to ask a bigger question. The market is expecting, fantastic, the superlative kind of growth rates to continue, which is why you get the valuation that you do. So what is a realistic growth rate that you'll guide for FY26? You're also getting into newer areas like EVs, etc., right? You're also looking at new tie-ups. What can PG Electroplast do on a steady state basis over FY26, FY27?
Good morning, Surabhi. It's always a pleasure to be on your show. Actually, if you look at the past history as well for our company, and we have been able to deliver the performance of almost around 30 to 35% of CAGR over a period of the last 8 to 9 years. And I know now the base is much larger, and we have to work a little more harder to achieve a CAGR growth of another 30-35% for coming 3, 4, 5 years as well. But what we see, the opportunity size in our all product categories is very huge, and we see a lot of growth potential in all these categories. Other than that, we are also working on other product categories and other businesses as well. And I think we should be able to maintain the growth rates of almost around 30 to 35% for coming 2, 3 years as well. So we are already working on that. There are teams working on developing new products, getting into new categories. So we are very optimistic on that.
So, if I talk about this target of sustaining 30 to 35% growth, how much will it continue to be room ACs, which is obviously, your best growing segment? I think washing machines is pretty big. And also tell us, since we're talking washing machines, what conversations you're having with Whirlpool. I mean, Whirlpool is a sort of big name, big marquee brand for you. But the company is going through its own motions. I mean, with the global parent looking at selling down more of its stake, and maybe there's a bit of a strategy churn going on. I'm not quite sure. But tell us what you're expecting in washing machines, with Whirlpool being one of the big brands that you work with.
So in washing machine particularly, we are expanding our capacities further. In fact, we are already in the middle of CapEx for expansion of our capacity in washing machine. And we will be taking it to a level of almost around 200,000 washing machines per month. Regarding Whirlpool specifically, we have already started doing pilot runs. We expect to start the mass production by end of this month or the first week of coming month. We have discussed, and we do not see any challenges for our business with Whirlpool on washing machines and other product categories. Okay, there might be some movement internally. There is some churn at their end. But Whirlpool is a very strong brand in India, and we see a lot of promise for them.
All right. Hi, Vikas. Good morning and good to see you. And I want to focus on another point. You're in advanced discussions with the strategic tie-up for RAC compressor. Could you tell us how is the agreement shaping up? Is it royalty-based? Is it fixed outgo? And also, what kind of RAC compressor volumes do you expect to consume in-house?
Good morning, Nigel. So the RAC compressor discussions is in very advanced stage. It will not be appropriate for me to give the specific details about the nature of that agreement, but definitely we are at very advanced stages. And our idea is that almost 60 to 70% of the production of compressors will be consumed by us internally. So it will be a margin accretive for us. And maybe around 40% of the compressors will be sold by us to outside entities.
So margin accretive, how much? That's exactly because it's backward integration. So what should we expect in terms of margin improvement for the RAC business once your compressor business is up and running?
So, Surabhi, we are still doing the number crunching. It will be not appropriate for me to give those details right now. We'll be making a very detailed announcement on that once we are able to close the agreement.
All right. Because we're running short of time, had more questions, but we'll leave it for another day. But we look forward to hearing on that agreement on the RAC compressor side. soon, and we'll talk more. Thanks very much for joining us for that quick chat this morning. So 863 stocks, of course, done phenomenally well over the last many years. Well, we have our techies with their trading ideas after that quick commercial break. We're going to take Sudarshan and Mitesh with us in just a bit.
Policy space for the MPC to support growth, while remaining focused on aligning inflation with the target. At the same time, the MPC felt that excessive volatility in global financial markets and continued uncertainties about global trade policies, coupled with adverse weather events, pose risks to the growth and inflation outlook. This calls for the MPC to remain watchful. Accordingly, it decided to continue with a neutral stance. This will provide MPC with the flexibility to respond to evolving macroeconomic environment. The MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%. The MPC also decided unanimously again to continue with a neutral stance and remain unambiguously focused on a durable alignment of inflation with the target while supporting growth.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influential.
Okay, welcome back. There's 8 minutes to go for the market pre-open to kick off. Sudarshan Sukhani and Mitesh Thakkar are with us with what they want you to do as we kick off a new trading session. Gentlemen, good morning. Great to have both of you here. Mitesh, how are things looking? The Friday session was disappointing. I mean, we came off a little bit. I remember till about Wednesday, Thursday, you were saying, the bias is still to the upside. What's the view? Is that still the way to look at this market broadly, and what would you do?
Good morning, Prashant. That's right. I think, I've been maintaining a positive stance, and that's for many days, starting from around 29th, 30th of January. So we've had a rally, we've had a 2-3 day kind of a pullback. One, I think, this rally, which had a lower about 22,829, If you were to look at the retracement levels after hitting a high of around 23,807, which is about nearly 1,000 points, we haven't even done the 38% retracement. That's at about 23,420. And there's a gap which happened on the 4th of February at 23,380 to about 23,420. So for me, there are multiple supports around this 23,420 level. So as long as that doesn't get taken out, I'll maintain a positive stance. In fact, while the last 2-3 days, the buy on decline trade hasn't worked well, but broadly, I still believe that anything closer to about 23,450, 420 zones would be an excellent buying opportunity with a stop below 23,380. So I'll maintain a positive stance, and I think eventually, good chance that if this level holds, we'll not only retest 23,800, but this time even manage to get past that.
Sudarshan, hi, good morning to you as well. What's your approach? A call on the indices?
Good morning. Well, the markets are in an uptrend, and now it's very difficult for me to say that because it sounds so difficult. Quite contrary to what Friday's price action was. But the fact remains that we are higher than the lows we made at 22,800. So far as those lows hold, I am assuming that the market is moving sideways. It is trying to build a base upon which it will eventually move higher. Now, our Lakshman Rekha, the line in sand is 22,800, the lows that we made. If that low is broken, then this analysis goes awry. It doesn't work anymore. But till then, we wait patiently. Because the markets were subdued on Friday, there is no need to rush into any kind of long positions. You wait patiently for the second half. If the markets stabilize, it's worth buying into. Otherwise, we'll wait for tomorrow. But I would not go short. I would still assume the markets are in some kind of an up move.
Got it. Okay, all right. What about individual stocks though? Sudarshan, you go first. What's on your radar?
Well, it's an all buy list again. CDSL is a buy with a stop under 1310. HCL Tech is a buying opportunity, stop under 1685. And two stocks where, all those duties are coming now. Jindal Steel is a buy with a stop under 825. And Vedant is a buy, VEDL is a buy with a stop under 445.
Okay, got that, Sudarshan. Couple of metal picks in there, Jindal Steel as well as Vedanta. So we'll keep an eye out on both of them. Mitesh, coming across to you. What's your take?
I have more buy calls as well, despite the fact that the GIFT Nifty is suggesting a mildly negative opening. So a buy on SBI cards with a stop at 803 for targets of 850. Chambal Fertilizers is a buy on decline. Disclaimer, we have some call options spread with a bullish bias, so there's vested interest. But I believe that the stock has a good chance to head towards 580, 585 zone. So in case you get a negative opening, try to buy around 552 to about 550. Keep a stop below 540. And as I said, 580, 585 is the target area. Also buy on Bajaj Auto if it crosses Friday's high of 90.27. So buy about 90.30. Keep a stop at 8950. Look for targets of 9,200. And one sell call, that's Britannia. Sell here with a stop at 49.21 for targets of 47.70.
Okay, all right, gentlemen, talk to you soon again. Mitesh and Sudarshan, thank you very much for joining us. 3 minutes to pre-open. We have the management of Zaggle Prepaid join us on the other side on their earnings.
Celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Well, in a few minutes from now, we'll get the pre-open rates to start trickling in. But in the meanwhile, let's get Prakash Sivan back on the show. Prakash, I wanted to ask you about Religare. The long-awaited open offer, it appears, it's going ahead now. Ms. Saluja has been voted out. And it appears now that the Burmans are all set to go ahead and take control of the company, which has taken very, very long. Your view on the stock at around 250 rupees?
So, Nigel, I think this is a big overhang that gets out of the way. And, this whole thing where the open offer got stalled because of the counter offer that came through. And, this is going to actually separate the chaff from the wheat. And my sense is for investors who have held on to the stock and to the promise of this company getting institutionalized and backed by stronger promoters is finally, unfolding. So I think given where they are in terms of each of their businesses, particularly the insurance piece, the way it's kind of shaping up in, the pre-IPO market, there's enough demand. And my belief is that this is definitely got the makings of a strong play. It's just that, you don't know how long you'll have to wait for the numbers to start kind of adding up once this is out of the way. But it's extremely positive. And this seems to be probably the beginning of the end in that sense of this long saga that we've seen for the last 2 years.
Okay. All right.
Maybe, Nigel, OMCs, right? Oil marketing companies is another area. Prakash, any thoughts that LPG fund has been established, half now, maybe half next year? It does remove that overhang.
Oh, absolutely. And importantly, Prashant, what it does is it kind of starts getting them to do things which are accretive in terms of growth and earnings both. There are a lot of new projects each of the OMCs have underway. And particularly the replacement cost basis, I keep saying you can't get these kind of businesses, large businesses, so easily. So you will have to kind of look at buying into some of them. My favorite is, of course, IOC for obvious reasons because of the mix that it has between marketing and refining, but extremely positive on that. But this is, again, a slow, long haul. There's nothing which is going to happen overnight.
Okay. All right. We'll leave it there. Thank you very much, Prakash, for joining us. Good speaking with you here on CNBC-TV18 as always. Well, rupee is opening up. The first rates are there, and we are at a new low as compared to the dollar. The dollar, of course, continues to move higher. On the broader dollar, which is the dollar index, we are now touching 108.5 or so. So 87, almost 88. That's a 50 paise fall against the dollar this morning. Let's connect with the management of Zaggle, which reported numbers, very, very strong set of numbers. Mr. Avinash Godkindi is with us, co-promoter and managing director, CEO at the company. Avinash, good morning. Good to have you with us here. Prashant this side. I'm just looking at the investor presentation. You are guiding between 58 and 63% top line growth for FY25. So that looks like it's in the bag. Tell us, what will that number be in 26? Because markets want to know a year forward.
Good morning.
Broadly, if you can give us a sense. And you are saying with that money that you've raised, you are very close to an acquisition. How close and in what area? Go on.
Yes. Good morning. And thank you for having me on the show. Yes, we are very thrilled to share with the community that our guidance has been upped. We are now able to confirm that it will be in the range of 58 to 63%. The confidence stems from the momentum that we are seeing, right? The next year also looks extremely positive. We had already given some guidance for the next year, but in terms of, doubling in 2 years, but I'm pretty clear and certain in my mind that we'd be able to do much better than that, just given the reads. How much, it's a little early to say, but we'll be able to do much better than that. And in terms of the deployment...
Better, Avinash, much better than what?
We'd spoken, Prashant, that we'll be able to double every 2 years, right?
Okay.
So last year was 775. This year, we are already growing at 58 to 63%. So you do the numbers there. And the year later, which is FY26, which is what you're asking, we'll definitely do much better than just doubling, right? From the FY24 numbers.
Okay.
From the perspective of the capital that we have raised and deploying that capital, look, things are going very nicely. There are a couple of conversations that are in very advanced stages. Overall, we are looking at 5 targets. We'll obviously do 2 to 3. And we should be able to announce some closures in the next couple of quarters. That's how we're looking at it.
So you'll do 2 to 3 acquisitions?
Yeah, that's what we largely raised the money for, Prashant. We are profitable. We're profitable for the last 5 years. Profits continue to grow very healthily. Right. Overall, this year, if you look at it, our overall profits in 9 months have grown about 123%. Right. So it's not just about top line. While a lot of people talk about the top line growth, it's the profits that are growing very strongly. And that's something that we work diligently towards.
How much will you use to acquire these companies? And will this be in the enterprise software, SaaS kind of areas?
Yes, it would be in the SaaS space, payment space. We're looking at opportunities in the merchant card system space. So a lot of companies which are very EBITDA accretive, which are great multiples for us in terms of the acquisition, and also some businesses which are basically tech focused, tech led. That's very critical for us. So that's the play that we are looking at, and we are finding great opportunities, to be honest.
All right, let's talk about business then. Avinash, what about Zoyer? The revenue contribution has been increasing. Where is that headed?
So it's growing very rapidly. Within Zoyer also, we are seeing very brilliant use case in Brome, which is our branch recurring operating monthly expenses. So we've had some fabulous momentum there. We stumbled upon this use case that, petty cash, utility bills, rentals for corporate customers who have branches or stores is a big pain point. And we didn't anticipate it to be that way. But when we started to talk to every single CFO who had branches or stores, this was a key pain point. So we have customers today signed up like Subway, we've got Dr. Batras, we've got Blinkit, we've got Zepto. We've got a whole host of these. We also spoke in detail about a very large retail chain for reasons, we can't disclose the name, but it's one of the largest. It's one of the largest retail chains in India, and they have a massive base today. And this is just the ones that we can share. There are a whole host of companies that are signing up for Brome. Zoyer overall also is doing very well.
Zoyer itself is doing very, very well. Any other sort of new, because you over the last many quarters when we've chatted, there are always newer areas that you are, for example, I think on the trucking side, payment side, tracking, etc.
Yes.
There was you entered that quarter, 2 quarters back. So when the TAM keeps expanding,
yes.
Will that any new areas in that sense?
So we've seen a lot of traction on the fleet side, Prashant. We went live with AGP, which is Pratham and Think Gas, one of the largest in this space. And that was a big launch event that they did in 4 cities where the chairman of AGP Pratham launched the card. Very successful launch. Torrent obviously is already live. There are a couple of others that we have signed in that space, which are very big names. And where we are going live. So I think the traction there as well on the fleet side is phenomenal. It's just amazing the amount of momentum that the business is gathering simply because there's this untapped opportunities of areas which are not glamorous, right? I mean, how many people really want to go after fleet? Looks like not many. And we are happy to look at these deep profit pools, healthy recurring businesses with large TAMs.
Sure. All right.
Just one quick word. Margins, you want to put out any guidance for 26?
So margins, we've already said in the next 3 to 4 years, Prashant, we'll hit an EBITDA of 15 to 16%, right? And obviously that trajectory can't be, one spike. It's going to grow over time. So margins will, grow over time, and we are very focused on that. That's something that's top priority for us.
All right, Avinash, we'll leave it on that note for this morning. Thank you very much for joining in. That's Zagal. By the way, the pre-open has settled very quiet and very flat on the Nifty. Nothing seems to be happening on the screen for now. 16 points lower. Mid-cap index is also extremely quiet. But one of the most exciting stocks to watch or to track at the open probably is going to be VA Bag. And not only because of the numbers. Numbers is one thing. But this order that they've won in Saudi Arabia, the market seems to be getting really excited about that. It's part of a consortium. The total order value is over 3,000 crores, and I think that could be causing a bit of a flutter there in the pre-open, up almost 11%.
So it'll be especially because this was the order which was cancelled.
Yeah.
Yes.
And now, and I think after that we had reported also that maybe this will come back maybe in a different size and shape. So it's back. I mean, that order is back. And that is the reason why you got a bit of a bump up coming through. 5 minutes to market open. Sudarshan and Mitesh are back with us with what they want you to do. That's the management of VA Tech coming up at 9:50 actually. Sudarshan, what do you have? What to do?
Well, HCL Tech can be bought. Consider buying HCL Tech with a stop under 1685.
Okay. And Mitesh, what about you?
Buy on SBI cards for targets of 850.
Got it. Okay, thanks a lot for that, gentlemen. Well, let's focus on a couple of big stocks then. Hitachi as well as BHL, that consortium is likely to have bagged a big order. Vamakshi joins us to tell us more. Vamakshi?
Well, that's right, Nigel. Both of these counters, Hitachi Energy as well as BHEL, will be in focus because Hitachi Energy-led consortium has received an LOI for Bhadla Fatehpur LCC HVDC. This LOI has been received from Rajasthan Part 1 Power Transmission Limited, which is in turn an SPV of Adani Energy Solutions. Now, keep in mind that this is the second HVDC order that they've won in the last 3 months. Earlier, it was the Khavda-Nagpur HVDC order that they won from Power Grid. Now, keep in mind that both of these orders have been won by this particular consortium, and the management, when they joined us earlier, had said that in this JV, that is this consortium, Hitachi Energy has a 70% share while BHEL has a 30% share. So therefore, while it is beneficial for both of these counters, it is more in favor of Hitachi Energy. In addition to that, very recently after the Q3 numbers, when the management had joined us, they said that another HVDC is expected to be ordered out in H2 of FY26. Now, why are HVDC orders so important for the company? That is because they provide very good fillip to the order book. Keep in mind that Hitachi Energy's order book was already at a record high in the third quarter. BHEL's order book also saw a very sharp jump of almost 47%. And in addition to that, it also provides good revenue visibility over the medium term. They're long gestation projects, and they are they last for around 48 to 54 months. So given this news flow, expect both Hitachi Energy as well as BHEL to be in focus today.
Okay, absolutely. And those stocks are excited in the pre-open. Thanks for that, Vamakshi. Hitachi is up another 4% in pre-open, and BHEL is putting on about 3%. Well, before we hit market opening, let's address another important story. We have our colleague Sapna joining in on the LPG and fertilizer subsidy, what shape and form it's going to take in the new financial year, because it's a new fund that the government is setting up to make good any losses that these companies incur. Sapna, good morning. Tell us the details.
Yeah, Sylvie, good morning. So basically, this is a well thought out action plan in terms of, better targeting of subsidies and better utilization of the funds. Any reserve fund that's set up under the budget, as we are aware, this is for a very specific purpose. So the purpose mentioned in the budget papers this time is basically taking care of any gaps, any shortfalls that can incur on fertilizer and LPG subsidies. Now here, when you say LPG subsidy, is very specific. This is the Pradhan Mantri Ujjwala Yojana that we are talking about. We're not talking about anything else over here. Similarly, in terms of fertilizer subsidies, the government has a massive budget allocation every year, though it's been trending down since the last 2 years. So that's also something we need to keep in mind. The third that they mentioned as a purpose is also the incremental share that the government has to give in terms of boosting the oil reserves basically. So around 5,300 odd crores has been set out in the budget. So this year that money will go out. The fund will be left with somewhere around 12,000 odd crores worth of balance. And in that you add the next year's budget allocation. So these are big numbers that we're looking at, around 17 odd thousand crores this year, around 19 odd thousand crores next year. Now the important point here also is that this fund is being set up in the midst of the demand that is coming from the Petroleum Ministry for compensating the OMCs for the LPG losses. We are getting to understand that that's a separate aspect altogether, and the government will be examining that proposal.
All right, right in queue, market open coming up on your screens. We've got the first rates, 23,536. It's in the red as the pre-open was showing, 15 points low, nothing major. Bank Nifty is down about 0.25%, so that's a bit more, that's about 100 points, 50,048 or so on the Nifty Bank. Advanced decline is positive, but again, I mean, it's more mixed, really. IT index is up about 0.25%, sectorally speaking. The Nifty at about 23,500 now. So that's a 100-point cut now. So 0.25%, that's in line with what the Nifty Bank is opening up as this morning. So that's essentially the overall picture, at least at the index level. The heat map should come up on your screen. It'll give you a sense of how we're likely to start. And at least on the Nifty, how many up and how many down in a bit. But let's get straight down to stocks. Survi.
Yeah, and before the Nifty stocks, Prashant, just if we can bring up Zaggle once. I think on my screen at least it's showing down 10%. Let's see what the traded rate is. Yeah, Zaggle's down 10%. One of the reasons could be that, the operating expenditure has gone up 70%, and the market cannot ignore these kind of things. And the margin has come under pressure quarter on quarter, year on year, the margin compression, even the adjusted EBITDA margin is down over 200 basis points, and all things put together, the new logos are great, the top line growth is great, but margin is falling and OPEX is up 70%. The market doesn't like it. That's the sum and substance of it. And the other stock that we mentioned, VA, of course, is doing really well, about 11% up. On the Nifty, the cut is now 80 whole points. So let's see what's taking it down. Some of the global-facing stocks are nervous with all this tariff talk happening. JSW Steel, Tata Steel, all of them are on the lower side for the starting point at least. There's Cipla, there's Hindalco on the lower side, there's NTPC, there's Dr. Reddy's. The Bank Nifty is not offering much support. We saw that on Friday as well. I mean, all excitement on that 25 basis points rate cut completely fizzled out, didn't take the market anywhere. HDFC Bank is on the lower side to begin with. Let's see where ICICI and SBI are. Also lower, about 0.25%. State Bank is the one that's an exception. It's up about 0.5%. Reliance is the other big stock that's taking the market down. There's Maruti, there's Nestle. There's a lot in the mix on the downside. In fact, on the upside on the Nifty, BEL and M&M, which is sort of great performance, and we'll be speaking to the management soon. That's the one that's up. And there's maybe Britannia and iShares. But apart from that, only 3-4 positive names on the Nifty. Otherwise, some pressure.
Well, that's right. And from the broader market, just a couple of stocks. Reliance Infra, the stock is up close to 5%. They announced that settlement with the CPL of around 6,500 crores. I think it could be a book entry. For the time being, though, that one is up close to around 5%, and it was up close to around 6-7% even on Friday. So that's one of the top volume movers. On the flip side, actually, we have Jyoti Structures that's down close to around 15%. So that's one of the top volume movers. SCI is down close to around 5.5%. Ola Electric posts its numbers. That stock as well is lower. And the other one we pointed out earlier today was ITC Hotels. Massive volumes the last couple of sessions. Got exited from the Sensex as well as the Nifty. Well, for the time being, volumes very, very high on that one. The stock is up only 1%, but volumes very, very high for the first minute of trade.
All right. Sorry, go on.
Well, that said, let's welcome our guest. We have Nitin Bhasin, Head of Institutional Equities at Ambit, who joins us on the show. Hi, Nitin. Good morning and good to see you. And I believe you're joining in from Boston. And the million-dollar question out here is what's happening with the FIs? They have been selling lock, stock and barrel. If you wanted some support from the government, you got it in Budget 2025. The RBI obliged and cut rates, and the BJP appears to be on a firm footing, particularly with that bin in Delhi. What's your take? I mean, what's the interactions you've had? Do you expect the flows to come back to India?
Good morning, Nigel. Pleasure to be here today morning. Yes, joining in from Boston. Last 1 week of meeting global investors, many of them. Actually, a lot of them are finding India becoming attractive after the last month or two of correction in terms of the especially mid caps and the small caps. Most of them have actually been investing in India in the last 1 or 2 years in mid caps and small caps, but found valuations expensive. Some of them have either gone underweight or some of them have reduced their overweight, keeping an eye out for good quality companies which may be available with attractive valuations, given what's happened in our country in the last 1 or 2 months by FI selling. So we got a sense that overnight or in the near term, the money may not be coming back very soon into the mid cap, small caps by the FIs, perhaps waiting for a little bit more direction from the macro and correction in valuations.
Hopefully they don't sell as much though. If they're not coming back, it's okay. But they have been selling, very, very aggressively. Okay, talking about the macros, let's talk about Budget 2025. It had something for the consumption names. Capex, maybe a little less. How are you all viewing this? And would you all recommend switching portfolios around, tilting more towards consumption names?
Exactly. I think, one of the big questions that came across in this entire week of meetings with the global investors was that, what's happening to the consumption in India, how to read the budget given the government's perhaps very muted investments on infrastructure investments. So what we also highlighted on the day of budget in our strategy note for the investors was perhaps it is the time right now to look at some consumption names which will get benefited from the income tax cuts. We were expecting closer to about income tax rate exemption to all the way to million, but I think the government has surprised everybody by going to 1.2 million rupees as the starting income tax. I think consumption clearly, which helps, middle of the pyramid, bottom of the pyramid, discretionary, slightly, electronics, durables, we find, and even entry-level motorcycles, and to be benefited. So hence, we have advised investors to increase slight weightage in consumption names from earlier, where we were overweight on IT. We have reduced our overweight on IT to go more towards FMCG consumption right now, and perhaps pull back a little bit more on the capital goods and construction names.
Nitin, hi, morning. So when you say, go a little more overweight on consumption, are you referring to staples or discretionary? And staples, do the valuations not bother you? Given that growth is still single digits, low single digits in most cases, are you okay with the valuations?
So clearly, we've been highlighting for the last month or two that we think in the times like this today, when there is an earnings uncertainty, we have a deceleration perhaps in the Indian economy. Markets would actually tend to move towards more quality companies and more mega cap companies. That was what I was highlighting to you about a month back also, that we believe that the perception on the quality factors is more towards FMCG, followed by IT and some bit of other consumer discretionary names. So it's less about the call of where the valuations are today. I would actually say that it's more about where there is an earnings, perhaps less possibility of cuts. Consumption earnings anyway are not supposed to grow very materially. So hence, I would say that our team believes that perhaps one should be more towards consumption, very well knowing that in India, many things are expensive, but we have to look at where is the earnings risk least perhaps to be over there right now. Quality factors.
Okay. What about financials, Nitin? We've seen the RBI policy. It's on expected lines. The 25 basis rate cut has happened. More promise of liquidity measures if and when needed. but the entire BFSI space is not quite enthused. What are you doing here?
Clearly, we are also the same camp like many others out there, that the earnings perhaps are looking much good for the banks right now as compared to many other sectors in India. Hence, we have been highlighting that you should be overweight on banks right now, because clearly, if you look at the share of profits versus share of market cap, so completely in stark contrast to what's happening in the small caps in India. So we have been advising for a while now to be overweight on banks, especially banks like SBI, banks like Axis Bank, followed by ICICI Bank. So very well knowing that ICICI is a punchily valued stock right now, but we find comfort in valuations of, let's say, an SBI. So banks is something we are advising overweight, not so in the NBFCs, given that we see that there are credit risks in many segmental NBFCs.
Okay, by the way, the market seems to be listening to you. There's some recovery in the large cap space, and the recovery is coming in a lot of consumer names, actually, from the opening lows. Britannia, for instance, is 2% higher. There's buying in ITC. Then you have names like Lever, which are looking better. And even the financials, they're stabilizing. There you see the charts. I mean, how the stock started pretty low, and then now we're looking at some green over there. And financials also, the Bank Nifty itself, Nifty Bank, look at that. I mean, it's a smart recovery that's underway. SBI is leading it, but even other names like ICICI Bank are pulling back. IndusInd Bank also at the flat line. So good recovery in financials. Nitin, so finally, I mean, you're saying that there is a lot of interest in FPIs and, they're finding India more attractive, but we're not seeing the money come through. So, what's the tipping point?
I think valuations and perhaps seeing what happens to the small cap and the mid caps, because the fact that in the last 2 years a lot of funds flow in India, whether it was domestic or whether it was international, has come into the small cap and the mid caps, where the valuations have become very, very punchy, very, very, I would say, unattractive to make money. They're all aware, they all understand that the base rates of returns in the market are not very high if one was to look at the last 9 years of performance in the Indian market. So clearly, where interest on India, because of its high 6.5% to 7% GDP growth over the next decade or so, the large population, China plus one, many themes work for India. Presently, many of them find valuations expensive, and hence either reducing their overweights or going underweight. And that too, especially, I would say, in the large caps and the mid caps. Oh, sorry, in the mid caps and the small caps.
Got it, got it. So valuations are still a spot of bother. Take that point. And I think that's what the market will have to deal with, at least in the near term. Thank you very much for joining in and giving us perspective on how things look here in India. Well, with that, let's move on. The story, of course, is the market's trying to pull back, and there's a bit of a recovery from the opening lows. So it's looking better now for the Nifty. The next company and stock on our radar is actually AkzoNobel. Now, the Akzo reported another muted quarter, which is no different from most other paint companies. Moderate volume growth, pressure on margins because of raw material inputs, etc. But the more interesting aspect is what is happening with the business reorganization and the slump sale of the industrial paints business to the parent that's in the works. To talk about this and the further business plans, we have with us Mr. Rajiv Rajagopal, Chairman and Managing Director at AkzoNobel. Mr. Rajagopal, thanks for joining in. Let me start with the decorative paints business first, because that's all official. And we keep speaking to a lot of your peer companies and who's interested and who's not. But where are you on the sale of the decorative paints business?
Good morning, Surabhi. Good morning to you and all the viewers. First and foremost, as far as the entire strategic review is concerned, I still think we are in fairly early stages, really. And at this point, I've nothing really to comment on the transaction or the scope of the businesses within the transaction, except what is already in the public domain. I mean, you've got to appreciate the fact that given my role, obviously I get information, and when I get information, that has to first go to the board, to the stock exchanges, our employees and our partners and distributors, given this sort of scope. At this point of time, it's a global strategic review. I think there are various reasons and as I said earlier, the idea was to see how can we catapult the brand, to a top 3 position, which is what we aim to do globally. So that's really why we sort of initiated this. I understand that we are in the early stages, and as and when we have something material, Surabhi, I'm sure we will come back to you and
No,
give you an
absolutely.
update.
I understand that, Mr. Rajgopal, that it'll have to go through the due process. But what we're just trying to get at is whether bids have been received, and typically, what is the timeline that you're working with for this strategic review to happen? If you could also just throw some light on the other piece, which is the sale of the coatings business and the industrial business to the global parent. Where are we on that?
So again, both are running parallelly. As far as the bids are concerned, I mean, honestly, that's something that I do not have a clear update on, and it's not fair for me to sort of speculate at this point of time. There is a process. How long will it take? It could take anywhere between 6 months to 9 months, the way I see it. Could be faster, depending on how quickly certain parts move. On your question on so it's not the entire industrial coating. If you see the announcement, that was limited to powder coatings. Where we are a global #1 player. And so we've sort of segregated the liquid and the powder coatings business and our International Research Center. Now, the International Research Center in Bangalore supports our automotive and specialty coatings business. They basically what they do is we produce colors for all the automotive brands, including the McLaren Mercedes F1, with whom we are engaged. So those are the two businesses that the global parent has asked to sort of look at. As far as, the process, again, there is internally as AkzoNobel India, we reach out to SEBI-registered players, and we are trying to seek a valuation, which should take a couple of weeks. And as soon as that comes in, again, we will have to go to the board. So, Surabhi, the only point I'm saying is these things take time because, we want to do it in a fair manner. As I said, the endeavor is not to rush it. And we have to follow certain due processes in this. I think also while doing it, we have a business to run. As you say.
No, exactly, Mr. Rajgopal. Coming to that, I mean, if we can get some more clarity on the businesses that you will be left with once these two strategic processes are over, which you're saying could take 6 to 9 months, and then what's the thought process? I mean, whatever is a residual business, will the entity remain listed, or could you look at simply delisting at some point? Is there some clarity on that?
Yeah, I mean, at this point of time, again, Surabhi, for me to sort of articulate, look, these are propositions. We have to look at what is the valuation that comes out of the second part. And we have to see whether it is attractive enough for us to siphon it. Assuming only that happens, the other things will fall in place. Yeah. But as far as delisting, etc., is concerned, at this point of time, no, I think we continue to be as is. We continue to run our businesses. We've given commitments to our business partners, our customers at large, that we take responsibility as a responsible company for whatever we do in the country. Our focus is continuing to, under the sort of conditions that you're seeing, and you explained earlier when you opened across the businesses, making sure we deliver strong growth and profitability. That's really the focus. And the other activities are happening parallelly. And as soon as we have something material to inform all of you, we will be the first to tell you.
Okay, all right. Rajiv, should be tried, but at least we got a timeline, 6 to 9 months or thereabouts. In fact, some of the other conglomerates have said we have thrown our hat in there, but for the time being, you're saying that you're not sure about that. You can't disclose it. We'll wait by first stock exchange filing. So got that. Let's focus on business. Could you tell us how's demand shaping up as of now? What kind of volume growth are you looking at? And what's the updated market share?
So, Nigel, good morning. If you remember the last interviews we had, and you and Mangalam were there, I had sort of clearly said that we would start getting into a mid-single digit and before moving to a double-digit volume growth. And that's what we've sort of done. I think we are now, if you look at the last quarter, both on the paints and the coating side, we've registered strong volume growth. And the reason I use the word strong is because if you look at the paints business this quarter that went by, our performance in the putty and the lower end products actually had dropped. So really, the team has done a fantastic job. In fact, we had some good performance in the premium side, which is where, which is our raison d'etre, which is the reason why, we have a strong profitability versus the other players in the industry. And that augurs well. What are we doing on the decorative side? So we continue to, bring in our products, innovations, focused on sustainability, focused on differentiation as far as decorative is concerned. And we continue to drive our distribution. We've got approximately about 160 distributor partners. Almost 90% of them are more than a decade old in the company and associated with us. So we're really proud of that. And now we've moved to a hub and spoke model where we are trying to move to now 5,500, 6,000 towns as we start doing it. On the coating side, we've had very strong performances in our marine and protective verticals. So on the coatings vertical, marine and protective, we've had very strong performance on our powder business. We've seen a bit of a sluggishness in the other two, which is the automotive and industrial, but it was also related to the fact that we have some large customers overseas, and that's seasonal, and that should come back this quarter. So all in all, I believe that again we would now move from a mid-single digit to between a mid to a double-digit sort of a volume growth, and I think it'll take a quarter or two for us to really sort of see the benefit of some of the tax benefits that the finance minister has announced. I think that we should start seeing a surge by the first or at least the second quarter of the next fiscal. We should start seeing again the industry getting back to a double-digit volume growth. What I'm really pleased about is that for almost now 10 to 12 quarters, we've been gaining market share. And even under these conditions, you can see that speaks volumes of the performance of the team and the focus of the management in making sure that the business is run pretty strongly.
No, absolutely. And, full marks to you and your teams for that. It's a tough environment. Plus, there's reorganization going on, but you're focused on running it the best you can. So you're saying double-digit volume growth, Mr. Rajgopal, for the industry. By which quarter?
I think by the first to second quarter of the next fiscal, we should start seeing the industry bouncing back. I think some of the other players have also given you similar time frame. I echo that. Look, if you even took at the industry and if you take a couple of new players who've come in, right, still in this quarter, the volumes are still tepid. I've been myself sort of speaking to people. We clearly feel that, look, there is a little bit of, sluggishness. We believe that what's just got announced should unlock, the buoyancy. First, in my view, the essentials, staples will benefit, and then the discretionary, particularly paint, will start benefiting it. And it augurs well because it comes just at the time of the season as far as decorative is concerned. As far as industrial is concerned, look, I think the government will now start putting the capex. I think the key elections are all over. The government obviously has been at pole position, and we should start seeing a huge amount of outlay. Because this is the critical time for the capex to come in. You will also start seeing private capex slowly coming in with a little bit of confidence coming in, which you can see this time. I mean, if you compare this quarter to last quarter, right, you can see that the results have been fairly stable, and I think now it'll start picking up.
All right. I think we will have more to speak about. You'll have more to tell us over the next many quarters, and we hope we'll be able to do that. Thank you very much for joining us here on CNBC-TV18. It's always a pleasure, sir, speaking to you. The market, by the way, is down 118 points. The rupee is at 88 to the dollar. So I think we should put that up as well. We opened around 88, just about, I think, 10 paise off. We're still about 87.90. I think, okay. So did we hit a high there? We'll just check and put it out if that is indeed the case. Let's just revisit delivery here. Mangalam is back with us to shine the spotlight on this one. Mangalam, take it away.
Well, we spoke about how it was a seasonally strong quarter in which the company has reported a soft performance, and that's exactly is weighing down on the stock as well. Opened mildly in the green, and thereafter there was sharp selling. The stock is currently at the low point of trade. The revenue growth at 8.5% was much lower than what the company has been historically doing in the third quarter itself, and that's weighed down on their margins as well, which have come down from 4% to 4.3, from 5% to 4.3%. The net profit you would see is doubling from 11 crores to around 25 crores, but that's because of lower depreciation. The company 2 quarters ago had changed their depreciation method, and as a result of which their depreciation this quarter is actually lower by 66 crores on account of change in the depreciation and amortization method. What was the weak part of this quarter? Express parcel revenue, which grew just 2.4% in terms of shipments, and that's nearly 2/3 of their overall revenue, and that's weighed down on their margins as well. From 20.6%, those margins have come down by 15.6%. The part truckload business, which the company has been scaling, did good on volume growth at 16.6%, but the margins out there improved as well. The weakness in the express volume was way too much to to actually, be offset by good performance in PTL. The other two factors that weigh delivery down are the fact that it's the first quarterly performance that the company has reported ever since the stock has come into FNO. So fresh positions can be added on the stock on the obverse side. And the second part, there's always that hanging sword of institutions wanting to sell out of delivery, so that supply overhang continues on that stock too.
All right, Mangalam, thank you very much for that. So it's delivery in focus. First Source is another one. Reema, take it away.
So First Source has raised the full year revenue forecast. They're now expecting the company to deliver revenues at 22%. If you look at the midpoint of the range of 21.8 to 22.3 versus a 20% kind of growth earlier. So in 3 months, they've raised the revenue forecast. The company's top line looks good. The company's delivered an 8.3% quarter-on-quarter revenue growth and a near 30% jump on a year-on-year basis. Remember, year-on-year numbers are also boosted by the AccentSource acquisition that the company did. For the first 9 months, revenue growth is at a run rate of 21.8%. Margins for the company have expanded by 30 basis points to 11.1% sequentially, and the company holds on to its margin guidance of 11 to 11.5% for the full year. Even in the conference call, the company was fairly upbeat. They spoke about Q3 exit deal pipeline being the highest ever. They were confident or looking at sustaining the deal momentum going forward. Strong commentary, good performance, guidance upgrade, and the stock is holding up in the green.
All right. Thanks very much, Reema, for that. That's the picture on First Source. Markets down, and I think we're at the low point of the day, 130 points cut on the Nifty, 23,430. Let's focus on Mahindra & Mahindra. Third quarter was a healthy quarter for them. Good improvement in margins, strong volumes for the auto and the tractor segments. Tractor, especially, lots of focus in terms of how that segment is coming up over the last couple of quarters and maybe over the next few quarters as well. Let's talk about what's sort of gone on and, of course, what's the future looking like. We have Anish, Group Chief Executive Officer and Managing Director at the Mahindra Group, with us here in our studios. Anish, great to have you with us here on the program. Thank you very much for joining us.
Good morning. Great to be here.
It's a pleasure to have you with us here in person. Yeah. So that makes all the difference. Let's just start with, I want to start ahead. We look back in a bit. But 14th of February,
what a
Valentine's Day, and you're opening bookings for your EVs as well, right? What's the expectation like? And it's going to be available across, 200 plus dealerships?
It is, because we were first planning to have it with a select group of dealerships. But just given the level of demand we've seen, we've had our dealers from all around the country saying, you cannot leave us out. You have to be present everywhere. Okay. So it is about unlimited love, as we've talked about, and therefore Valentine's Day is a perfect day.
Who's the buyer going to be, in your opinion? I mean, what kind of demand are you expecting? Just talk to us a little bit about that. I mean, what's the internal sense as you open bookings here?
Based on the test drives we've done, we've seen a very, very strong positive response. And the buyer actually cuts across multiple segments, because this is a vehicle that has everything from a quality standpoint, a technology standpoint, very well priced. And therefore, it really combines a lot of attributes that a number of buyers look at. Electric is going to be something new, because this is going to be, in our view, an inflection point for the country to start moving towards electric at a faster pace.
Any numbers, projections in that sense?
What's the capacity? What is the total number of units you could sell
so
on a monthly basis?
Our capacity that we've set up is 5,000 a month right now, which is a fairly healthy capacity. And then we will expand it to potentially 10,000 as more electric models roll out over the next 12 to 18 months.
So there's so much excitement about these models, right? Fair to then ask you the cannibalization question as well. But at the end of the day, if I want to go to the market and buy an M&M vehicle, I have to choose between ICE and your born electric range now. So will it kind of, one feed off the other to an extent? So in terms of volumes, as this starts scaling up over the course of FY26, what are you expecting in the SUV portfolio?
So if you look at the last 3 or 4 years, we've had some very good successes. And we've essentially been cannibalizing all our competitors' volumes, not our volumes. So some of it might rub off here as well.
Okay. But, the other excitement that the market has around this is that what it does to the overall margin profile. Anyway, you've had a great performance in the third quarter. Overall margins have been going higher. And these are coming at a very different price point, right? The electric vehicles, 25 to 30 lakhs, probably a new category of buyers also opening up. So on margins, as the scale-up continues on the SUV portfolio, or let's say the auto portfolio, not just SUV, what is the projection in terms of margins a couple of quarters down the line?
So margins will be slightly lower to start with, because you would expect that with a new product, also because it's electric. And we will be showing margins separately for ICE versus electric. And over time, they will catch up because that's where the investments come in for. And we would expect margins to be similar to ICE in the longer run, but it will take us time for us to get there.
And what you describe as longer run, I mean, just till this kind of evens out.
I think a lot depends on the level of demand that we see and the capacity utilization that we'll see, because that's going to be a key driver of that margin as well.
Okay, all right. Good to have you in the studio, Mr. Shah. You know, since you spoke about y'all grabbing market share, I've observed that actually in all the three verticals. I think in tractors, you're at around 44%. In PVs, you'll have increased your market share. And LCVs as well. I think that's, you know, came down a little bit in the last few years. It's back at around 45%. Could you tell us?
51.9%.
51.9%. All right. You know, you'll pull back the margins, the market share out there. Could you tell us what is a sustainable number? Because I think tractors, it was in the low 40s, 41%. Suddenly it's moved to around 44%. Do you think you could hold on to these numbers?
So we don't push for market share, especially when we are in the 40s and 50s.
Okay.
For us, it's more important to execute well. And the messages to the teams are continue to execute well on the ground, continue to provide the customer what they want, and market share will follow as a result. When we are in the low 20s as in SUV, yes, we are going for market share, and our products as they come out will gain more share. But that's the difference that we have in place.
So in SUVs, I mean, what would the target be then? PVs as well. And if I look at it as an absolute number, I think it was mid-single digits. That's moved to early teens. Where do you head out there?
So our target, and we have been fairly audacious in what we do, is to get to 40% in every segment we play in. So yes, we have a while to go, but that is part of the journey.
Okay, all right. You know, since the one that you're already at 40% is the tractors one, and that's where you'll have, you know, hold of the market. And I was looking at a Jefferies note. They're saying that, you know, the tractors market has seen a little bit of a lull, but now things are looking up. And I think you briefly mentioned that as well in your call. Do you think the tractors market now, the industry on the whole, is set for better times? And if that is the case, should we be looking at mid-teens growth for the next few quarters for the tractor industry?
So we do see a lot of green shoots in rural, as we've talked about earlier as well.
Yes.
For the fourth quarter, we expect 15% growth year over year.
Tractors.
And that's a very healthy growth in this space. For next year, a little early to say as yet, because it will depend on this particular season and how that goes as well.
Okay.
But overall, we remain fairly optimistic about where rural is right now and prospects for a tractor business next year.
Anish, let me pull back a little bit, and we'll come back to individual segments, etc. as well. How important is this entire? How are you viewing this all this tariff noise in that sense? So to narrow it down, I mean, there's been a lot of chatter that there could be some safeguard duty on steel, which could come in. And I mean, you know, it's always, we start every Monday thinking, well, it's going to be this week. So who knows? But if that were to happen, especially on the tractor side, I mean, steel, I think, is by far the most important input, right? Does that as an automaker, does that impact margins a little bit? Will you be able to deal with it? Whatever happens. I mean, 10% is what is being spoken about. What's the sense?
So the focus on steel, as I understand it, has been specifically on dumping from China. Dumping is clearly something important for us to take care of. But at this point, we don't believe it's going to go much broader and have a complete discontinuity in terms of steel prices in India versus the rest of the world. The reason for that is it will impact all the user industries, and it will stoke inflation in a much bigger way. So it may take away a lot of the good work that's been done to create the demand stimulus, because steel is an important material, not just in auto and tractors, but across many, many industries.
So it's about 7.5% right now. Say you slap another 10% on. So roughly 5,000, 6,000 rupees is what we're looking at. And it'll, as you said, affect everyone if that were to happen. But will that, you'll be able to sort of pass this on? What would be the strategy?
Typically, it would be passed on to consumers. Now, if you look at our overall consumption, 93% of the steel we buy is from within India. And most of what we buy is not manufactured in India today. So while it is, I think, absolutely the right thing to address dumping, as long as it doesn't change the dynamics overall, because that takes away from the whole Make in India story. Make in India means we've got to be able to produce in India at the lowest possible cost.
And be competitive.
And be competitive in that sense. So as long as we're competitive with global markets, I think we are in good shape.
What about?
So just, I mean, since we're talking about passing on any potential duty increases to customers, if I could just bring in on the point on pricing, overall realizations were up around, I think, 2% in the quarter gone by. The street might have sort of hoped for slightly higher. I think you're at around 88,860 average, pricing. the blended that is. How much elbow room do you feel that you have in your different segments, if you go piece by piece, in tractors, in SUVs, in LCVs, to take price hikes going forward? There was one in December, but what's the projection now looking at this year?
I think a lot depends on each product, each segment, each geography. So it's not something I'd look at overall.
So individually, I mean, if you could give us an individual sort of idea or an overview on these
I think on a broader basis, there's some elbow room because we've been performing well across all our segments. Our capacity utilization still stays close to 100% despite tripling capacity in auto. So from that perspective, I think we are a little better placed on that front.
More elbow room in tractors or in the auto segment to hike prices?
I think that's a conversation we would have once we need to do it. Okay. At this point, we don't see the need as much. But if that does come up, then we will look at it.
Anish, just to finish that tariff point, Prime Minister Modi is in the US meeting President Trump. How important is that going to be? Because there's all this talk of reciprocal tariffs. What would you watch out for, really, in that sense?
I think it's an important relationship for us, and the US has been a key partner for us in many ways. The one advantage, in a sense, India has, which is not a great advantage to have, is that we haven't exported a whole lot compared to other markets. So from that standpoint, we will not get hurt as much by tariffs. And therefore, this is the time for India to really focus on manufacturing and make in India. And as we do that, we will have more competitive products, and there are many markets around the world where we can send them to. This is where FTAs come into play as well, and I know the government is pushing that in a much bigger way. So overall, I think the US relationship is an important one, and from that standpoint, I think this is an important week for us.
The Tesla question?
Exactly. I'm glad you asked that. I thought that has to come up in those conversations, right?
Do you think that'll be part of the, more access, lower duties, lower tariffs, and how's the industry looking at that?
As we've always said, we welcome competition. We've gotten better with competition. And as you see our electric cars, in fact, when we had our launch, we had our car next to 5 major makers in the world, and we had media and analysts and investors drive all 5 cars. We had an external agency rate all 5 cars. That included Tesla as well. And we came out very well. So we are happy to have competition in India. It will help the electric segment grow as well. The key for us, as we've always maintained, is that what we've seen the government do is take all actions that essentially foster make in India. That's the most important part. If India becomes a dumping ground for the rest of the world, whether it's in steel or automobiles or anything else, that's going to be negative for the economy. So as long as every maker in the world is making in India, that's a better outcome for us.
So, I'm just rounding off with, I'm reading out a brokerage note. Those are the tall expectations the street always has from M&M, and you've been delivering. This note talks about a CAGR of 15% at the top line, maybe 19 to 20% at the EBITDA and the PAT line over the course of the next 2 years. Doable?
So I just want to first say that M&M actually plays in 70% of India's growth, not just in auto and tractors. In fact, if you look at our services businesses, they've contributed very significantly over the last few years. And in fact, based on the data we've shared, they actually had more cash generation than either auto or farm. So that's what's been driving our growth. If you look at numbers for this quarter as well, Tech M, Mahindra Finance, our growth gems have all contributed in a very significant way. Mahindra Finance up 47%, our growth gems up 33%, Tech M on a good margin expansion path. So all of those things are really what's driving M&M forward.
All right, Anish, a lovely chat, great conversation. More questions, but we'll save it for the next time. Thank you very much for dropping by. It's always a pleasure to have you with
Likewise,
us,
thank you.
In the studios. Well, that's the top boss at Mahindra Group with perspective on growth path from here. And of course, a little bit about all the noise around tariffs, etc. as well. So more competition welcome, but sell in India if you make in India. At least that's essentially been the government's thrust focus. And, he hopes that continues. We'll take a quick commercial break here. Markets down 120 points. A quick programming update. The Axis Capital India conference gets underway tomorrow. And we get you the top management of Axis Capital. It's a special edition of Market Masters, 10:30 a.m. You'll hear from Amitabh Chaudhary, MD and CEO at Axis Bank, Neelkanth Mishra, Head Global Research, Axis Capital, Atul Mehra, MD and CEO at Axis Capital. So that's coming up at 10:30.
Welcome back. Well, the next company on our radar is Vaba. And remember, they won that big order in Saudi. To understand more about this order, we're joined by Mr. Sitharaman, the Chief Financial Officer at the company. Well, congratulations on this order win. We'd like to understand a few more details, sir. If you could tell us, out of this 3,200 crores approximately, what is your share in this order? By when do you start executing this? And what is the quantum of this order? Please go ahead.
Very good morning to you and to all your viewers. Thank you very much for having us on your show. Yes, this is a very significant order for VATech Vaba. This is a consortium order of 371 million, or in INR terms about 3,250 crores. And Vaba will execute about 1,700 plus crores out of this order. So this order is basically towards constructing a 200 MLD sewage treatment plant with the state-of-the-art technology and the associated transmission and delivery facilities like the pipeline and the reservoir. So we are the lead member of this EPC consortium. So we will be the technology leader. We will construct, design, construct the sewage treatment plant, while our civil partner, MGC, will do the pipeline and the reservoir, which is more the civil part of the order. So in terms of quantum, this is one of the largest orders in our history. Very good reference also in the region, especially coming after Marafiq, after Jeddah orders, which we have now already delivered. This is a very advanced wastewater treatment plant, which will be a reference in the region.
Okay, all right. Mr. Sitharaman, the street reads this as good news because in December, when that earlier contract was cancelled, everyone got very, very nervous and there were questions being raised on the capability. But this order win seems to have soothed the nerve. So 1,700 crores is that one number that we have got from you in terms of your share of this order. Give us a few more details. What is over how many years does it get executed? FY26, what kind of revenue number will reflect? And over how many years do you spread this out? Also, what kind of margins will you be receiving on this particular order?
If I may take a moment on the earlier order, it was not the contract that was cancelled. It was the tender that went for re-tender because the client wanted to change specifications. That tender is also out now. I just take this opportunity to also inform all your viewers and the investors who are watching that the tender has been re-announced now and we are already working on it.
So let's, before we get to the answering the previous question, let's address this then. What is the quantum of, by when do we hear about this tender that earlier got cancelled and now in fact it could be, offered for rebidding? By when do we hear this, and will the quantum be the same? This is of the tender that got cancelled earlier.
Yes. So the tender has already been re-announced now. As we speak, we are working on the bid. And if I remember right, maybe about 4-6 weeks, in fact, 8 weeks would be the time likely to submit the tender. We'll come back to you with the exact date, but we want to confirm to you the tender is already out. We are already working on the tender and we will submit it. So there is no question of capability related. It was only a customer's decision to recast the project. And because it was a public procurement project, they could do it only through a re-tendering process.
So we have got that out of the way. In the next 8 weeks, we'll hear from you on that and we re-invite you on the channel and we'll clear out about the potential new order that you could win since the tender has been reissued. Great. Let's talk about this one, the 1,700 crores. Over how many years does it get executed and the margins?
This is about a 28-30 month project. Of course, this project is through a developer consortium, as you know. Miyahona, Basics and Marafiq are the developers for this project and we are in the EPC consortium. We are building for them and the principal off-taker is SWPC. The project had to cross through certain CPs for the EPC to become effective. So the financial closure was completed and hence we could announce the project to the market. But we have already started working on it because we were confident of the order. We've already announced it as a hot project in our organization. Teams are deployed. There's already people working on the engineering. So we have already had some heads up in terms of the activities, and the activities
so Mr. Sitaraman, sorry, we're just trying to understand the revenue recognition timelines. The overall value, your share is about 1,700 crores, like you explained. By when do you book it? Over how many quarters, and when does it start to reflect in the P&L?
This will start reflecting right from this quarter, because we've already advanced on engineering. So you will start seeing the revenues flowing from this quarter, but the next 2 years will be the significant years in which the revenues will pan out.
So along with this order, I mean, where will you end the year in terms of order book? I think you were over 14,000 crores. Now this win has come in. You're talking about the other, rebid that could happen in the next couple of weeks as well. I'm not sure this fiscal or whether it falls in the next one. But where do you see your exit order book at for FY25?
See, at the start of the year, we guided somewhere around 16,000 crores. And we have seen that all the orders that we have targeted are moving in the right direction. And directionally, we are still endeavoring to get to that, Surabhi, because we don't see anything untoward at this point in time. Things are falling in place. Orders are coming out, especially international is what we targeted. So we are moving in the right direction towards that.
Mr. Sitaraman, morning. Could you give us a sense on margins from here? Where will margins be?
See, I think we've given this medium-term outlook for a 3 to 5 year period, with EBITDA being in the range of 13 to 15%. This is the first year of the outlook, and we have seen in the 9 months we are about 13.5% on EBITDA, and PAT is over 9.2%. So that's the range we are comfortable with growth, and we will continue to maintain it consistently over this 3 to 5 year period and endeavor to continue growing it.
And revenue growth as well, give us a sense?
15 to 20% is what we had guided. We are very, very confident of that over the 3 to 5 year period.
Okay, all right. Interesting space, water, and markets has been very excited with VA Tech, of course, is one of the players in that space. Thank you very much. More later, but good luck as you continue to execute. Stocks up about 6%. Manisha joins us with commodities in focus on the other side. Okay, welcome back. Let's just get a quick view on the market, which of course continues to struggle a little bit. Mitesh is back with us. Mitesh, price action so far and fresh trades?
Yeah. So Prashant, I think, we talked about 23,423 as the area. We got right there. I think the low for the day for the time being is 23,403. I was talking about the fact that we have maintained a long bias. We had some long positions as well on the call spread side, and we have added on to them. I still believe that 23,380 as a level could hold, and we might not get a close below that. So maintaining that positive stance going ahead. For the time being, I have one buy and one sell call. On the buying side is Hero Motors, which I would want to buy once the stock price is above levels of 43.25. It's made a high of 43.20 today. So that's the breakout pivot. Above that, buy with a stop at about 42.70 and a target of 44.50, 44.60 is what I'm looking at. And on the sell side, I have is Bank of India, which I would recommend selling with a stop at about 107.5 for targets of 100.
Okay, all right. Mitesh, thank you very much for that. So more trades later, but that's it for now. Let's focus on commodities. Manisha is here with what she's focused on. Manisha, morning.
Morning, and thank you for that, Prashant. Well, I'm looking at metals as a sector where we have seen the morning start with some gains here, even as the dollar index has been on the higher side. The street clearly is looking at more tariff concerns. Trump has said that they will introduce new 25% tariffs on all steel and aluminum imports. I mean, this is specialty aluminum, steel, etc., which is used in various sectors, so markets really getting worried about that. Apart from that, today is the day that China also follows up with the retaliatory 10% tariffs on some goods coming in from US. So this is the tariff war that we've been talking about since the beginning of this year, and the markets have started to take impact on that. I want to start with copper first because we're trading at a 4-month highs onto this one. If you look at the previous week, copper gained up by 7%. In this year, until now, we are up by 15.5%. And the kind of gains that copper has put out from the previous week has been the best weekly gain since the month of September. On LME and Shanghai, we are looking at the copper prices continue to gain up quite strongly. Well, apart from the tariff concerns, it also is a statement that came out of Chile, where they say that they're looking at tightening supply concerns going forward in the global markets. And as far as demand is concerned, there is a strong one that's coming in from energy transition and also electrical sectors there. So that is a supportive factor there. If you look at the prices in 2025 till time, I'll start with gold yet again because we're trading at an all-time highs in the Asian markets here. For the Indian markets, 85,500 per 10 grams is where we are right now. So with nearly 10 to 12% of gains for gold. Silver prices trading at a 4-month highs right now. We're 11% up for this year for this. Copper, as I told you, 15.5%. So within commodities, copper clearly seems to be taking the markets on the higher side and outperforming as well. Steel and aluminum prices up by 3 to 5%. Zinc, which gained up by 14% in the previous year, hasn't done well for this year, down by 4%. So barring zinc and barring lead prices, everything in metals, precious and base metals, is doing quite well.
Okay, all right. Got that, Manisha. Thank you very much for a roundup. We do have to take a break right now, but on the other side, our special segment, It's the Economy, is coming up. Lata today speaks with Suresh Ganapathy of Macquarie Capital on the RBI policy impact on banks and NBFCs.
ये जो 27 साल बाद दिल्ली में बीजेपी दोबारा आई है, ये बहुत बड़ा बनवास काट के आई है। केजरीवाल तो गए, केजरीवाल का पॉलिटिकल करियर भी खत्म है, केजरीवाल जेल में भी जाएंगे। जो पैसा कमाया तो इसको एंजॉय कर लें और उनके पास
Welcome back. The Reserve Bank of India cut the repo rate by 25 basis points, which will impact banks because of the loans linked to repo. This may actually be at an advantage for NBFCs because they borrow from banks at loans linked to the repo rate. Now, to discuss the full impact of the Reserve Bank's various policies, as well to discuss the key takeaways from the Q3 results season, which for the banking sector has just ended with SBI announcing late last week, I have with me banking expert Suresh Ganapathy, Managing Director and Head of Financial Services Research at Macquarie Capital. Good morning, Suresh. Thank you very much for joining us. First up, at the end of the policy, do banks look far better?
Yeah, definitely. The fact that the RBI governor very clearly said that some of the implementation of the norms like LCR and ECL could be at least delayed for an year gives them a little bit amount of breathing space. And the fact that you have, of course, cut rates and the kind of liquidity infusion which has been done clearly means that at least next year things look to be slightly better on the liquidity front. And therefore, as an overall financial ecosystem, I think the policy was a step in the right direction. An overall positive, I would say, for the entire financial system. Of course, we'll come to implications of repo rate cut on banks, but I would read it pretty positively.
Okay, no, if you can make it bank-wise, I mean, who gets hit more because they have external benchmark-linked loans, or who get advantaged because liquidity, at least the governor's promises that he will keep it plentiful, who would have gotten impacted because of LCR rules?
Okay, definitely the LCR rules are going to impact the private sector banks more positively because of the fact that they have been running at a very high levels of LDR, and in general the liquidity tightness has been there in them, and therefore they of course also have been growing the balance sheet much faster than the public sector banks. I'm talking about both on the loan growth and the deposit growth. So any relaxation on that front is going to be positive for the private sector banks. A relaxation on the ECL front actually is positive for the public sector banks. As far as the repo rate cut is concerned, Lata, I think we have to understand that the entire rate cut cycle itself is going to be a pretty shallow rate cut cycle. So to that extent, the benefits that you feel would accrue to the NBFCs because of a falling rate environment, or conversely speaking, the fact that the margins could be under pressure because of a cut in the repo rate is actually slightly exaggerated, because what we are talking about is a cumulative maybe 50 to 75 basis points cut in rates. And that too will happen in stages. And roughly what happens here is that the total MCLR, we also have to consider MCLR because eventually that also will be cut. So both repo plus MCLR roughly put together is anywhere between 65 to 70% at a broader system level, with PSU banks slightly at the higher level. So while there could be to some extent, in our view, anywhere between 10 to 20 basis points compression in margins next year, it could also be offset by the fact that Lata loan growth has been pretty weak. Unsecured loan growth has been running at about 10 odd percent. That will go to 15-16%, thereby cushioning the margin. So net, if I were to really look at the different drivers of margins, I don't expect more than 10 to 15 basis point compression in margins for the sector because of the RBI's cut in repo rate.
Okay. All right. Get that point. It will be countered. You know, the SBI chairman spoke to me after the policy, and he thought that deposit rates are not going down for at least a couple of quarters. Definitely not this quarter. It may take even longer, he thought. So, you know, therefore, the negatives will come first for the banks before the positives come. Let me get to the results season as well. You know, now that all the numbers are out, would you want to think back and say which ones stood out for you? I mean, in terms of deposit growth, for instance, now on hindsight, HDFC Bank's performance looks very good. You know, SBI has been able to manage only 9% or 9.3%. HDFC managed big double digits, you know, 16%. High teens, 18%. So anyway, looking back, what stands out in terms of performance?
Yeah, so let me try to split in two parts. One is, of course, the overall balance sheet growth perspective, and also obviously with respect to the asset quality front. I mean, look, very clearly the public sector banks still continue to have exceptionally low levels of credit costs, right? I mean, if you look at SBI and BOB's numbers, you're running at really low numbers. SBI was at about 23 basis points for the quarter. Whereas the private sector banks are anywhere between 50 to 75. So on the asset quality front, the public sector banks are clearly outscoring because the component of unsecured loans in them is much smaller compared to the component in case of private sector banks. But the area where the private sector banks are doing really better compared to the public sector banks is on the balance sheet growth perspective, specifically on the deposits front, where clearly the public sector banks continue to lose steadily the market share. And again, another area where the public sector banks are not doing as well as the private sector banks is very clearly on the margins front. Now, the reason why this is important is because, as you know, the repo has been cut. So there is a downward bias to margins, although I say that it's going to be limited. But even at really rock bottom levels of credit cost, the ROAs for the private public sector banks at best are at 1%. So the real problem here is once the credit cost starts normalizing with a slightly downward pressure on margins, clearly the ROAs for the public sector banks would be at a greater risk compared to private sector banks going forward.
Okay. What would you say is the impact of the budget? See, we are talking about margins. That is the price per loan or the profit per loan for a bank. But won't the number of loans increase because every one of us have about 60,000 to 1 lakh rupees more? So won't you, you know, if you're planning an EMI of, say, 90,000 rupees, you will push it to 1 lakh because you have 10,000 more. You don't see loan growth. After all, isn't 11% loan growth a nadir?
In that 1 trillion rupees, people will eat pizza, people will buy a lipstick from Nykaa, people will buy cars, people will save money.
No, I'm just asking whether loan growth numbers you are, you know, pushing up.
Yeah, I mean, look, let's put it this way, that if the constraint for the loan growth in the near term always is going to be deposit growth. I know the economists argue that it's loans that create deposits and all those stuff. But at the end of the day, we also have to understand that the Reserve Bank of India has been to some extent, at least till last year, was shrinking the balance sheet. Yeah. Now, of course, they have cut the CRR. So there will be a money multiplier. Money multiplier, as you know, is 5 times. So a 0.5% cut in CRR will have a 200 basis points improvement in deposit growth. Of course, you've started doing OMO after, I don't know, 3 years, 4 years. So there is obviously an expansion of the RBI balance sheet, which will have a better deposit growth. And eventually, the loan growth should also be better. I mean, the Reserve Bank of India governor very clearly also told about the fact that he's comfortable with the current growth in unsecured loan growth. And that need not come down. In fact, on the contrary, the unsecured loan growth can go up a little bit further. So the way we are looking at here is, we are at around 11% loan growth and 11% deposit growth so far. We will end the year with almost similar numbers. Next year, at least, we expect 200 to 250 basis points better loan growth. driven by some of these consumption-related aspects. And also at the end of the day, the deposit growth should also be relatively better by 200 basis points. You're looking more like a better 13% kind of an environment next year compared to 11% this year.
Okay, so as a bottom line, looking at the results so far of the banking sector and the budget and policy takeaways, what is your order of priority in terms of bank buys?
Yeah, look, so FY26 will continue to be a better year, in my opinion, compared to FY25, despite the margin compression because you have a better loan growth, better liquidity environment. And credit costs, at least for the private sector banks, second half of next year should start coming down because all signals are pointing towards almost plateauing or peaking of the unsecured loan stress, right? So somewhere down the line, a couple of quarters, we will see a decline in the credit cost. So my picks very clearly would be a little bit more biased towards banks over NBFCs, and within banks, the private sector banks. I mean, some of these guys only trading at a very attractive level of valuations on an FY27 basis for a 16-17% kind of an ROE. So I would follow a little bit amount of a barbell approach here, Lata. So on one hand, you can have really good quality ones like the likes of HDFC, ICICI and Kotak. And at the other extreme, you can really go for a low valuation bank or an NBFC like IndusInd Bank or Bandhan Bank, which are trading well below book. And you know that next year, at least the unsecured loan cycle should be relatively better, including the MFI space compared to what we have seen so far this year.
Okay, got that. But why are you saying banks over NBFCs? Wouldn't NBFCs find wholesale borrowings cheaper? After all, sovereign rates have crashed.
Yeah, but you have to also understand, Lata, that the overall quantum of rate cuts itself is going to be limited. So while when rates went up from 4 to 6.5%, on the way down, we are looking at 6.5% coming down to 6%, and NBFCs borrow 50% from the banks, right? So the extent of benefit that the NBFCs are going to receive on the cost of funds, this cycle will be limited is an important point which we want to drive across. And secondly, Lata, I do believe that the growth this cycle for the NBFCs, specifically on the consumer retail front, would be relatively lower because, you know, gone are those days when you grew 25 to 30% when unsecured loan was growing at 30%. While unsecured loan growth will pick up, you're not going to go back to the 25 to 30% kind of a range. So you're looking at a slightly lower loan growth environment in the next 2-3 years for NBFCs compared to what you saw in the previous 3 years. So those are some of the two important considerations which makes us a little bit more guarded on the NBFCs compared to the banking space.
Okay, I'm not getting to the insurance because it's another vertical and I'll invite you on another day. But if you can speak about fintechs, you know, Paytm, PB Fintech, actually that's a category by itself. And then you have even small finance banks, the ones that we didn't discuss. Anything in that space that looks good? I mean, grow the whole range of fintech.
Yeah, see, PB Fintech, of course, is corrected quite sharply of late, yes. And their numbers have been pretty strong. I mean, they clearly have a path towards profitability. You can see that in the strong revenue growth numbers and also in the operating leverage numbers. While we do have an underperform on both Paytm and PB Fintech, I think there are, of course, some of these companies who trade at a very high level of valuation. So if we were to keep the valuation aside and purely focus on fundamentals, we do believe PB Fintech is slightly better. See, the problem with small finance banks, I do believe here is the fact that the deposit growth environment still looks tough. So I think in an environment where I would take a call that deposit growth benefits that will accrue more to a private sector bank than to a small finance bank who have been either to relying heavily more on the bulk deposits market. They do have a large microfinance exposure. A couple of them may not be having that much. But remember that there is now a big question mark with respect to the business model itself in a way that do you need to structurally pivot away from microfinance as a business segment? Because gone are those days where you used to have 1 bad year and 3 good years. Now it's looking like a 1 bad year, 1 good year. If that indeed is the case, you have to go more towards secured segments, which means lower growth, which means lower margins, lower profitability. And therefore, there is clearly a pivot of the business model, and that recalibration makes us a little bit more worried on the small finance bank as a space itself.
Fair point. No, I take your point. I believe even, I mean, there were news reports that the regulator is worried, but I couldn't check it personally. Very quickly, top finance sector buy for you.
Top finance picks, you mean to say?
Yes, pick.
Yeah, so it would be, as I said, HDFC, ICICI and Kotak. I'm sticking with the quality names at this point in time.
Okay, sticks with quality. Unfortunately, out of time, Suresh, always a pleasure having you with us. And thank you for this many splendored analysis of the financial sector. We have to wind up on Bazaar with the note that mid-caps are under serious pressure, and the pressure on even the big ones is not abated. It's still 0.75 down, a little better than 0.8 down, but really no relief coming up on any part of the market just yet. Wrap up on Bazaar on that slightly somber note. Hope Chartbusters, when it takes up the action, will have better news for you.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
This growth inflation dynamics opens up policy space for the MPC to support growth while remaining focused on aligning inflation with the target. At the same time, the MPC felt that excessive volatility in global financial markets and continued uncertainties about global trade policies, coupled with adverse weather events, pose risks to the growth and inflation outlook. This calls for the MPC to remain watchful. Accordingly, it decided to continue with a neutral stance. This will provide MPC with the flexibility to respond to evolving macroeconomic environment. The MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%. The MPC also decided unanimously again to continue with a neutral stance and remain unambiguously focused on a durable alignment of inflation with the target while supporting growth.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
Hello and welcome to this special edition of Market Masters. I'm Prashant and with me is my colleague Rupee Volatility. Axis Capital is holding its India flagship conference this week with the theme India as an Asset Class. The conference will see 132 corporates participating. It has also seen 625 client registrations so far. So a lot to look forward to from the conference itself. Now, as far as markets go, after a few years of absolutely stunning superlative performance, the market is cooling off just a little bit. Are we at a bit of a crossroads? How important is this going to be from here? Which way do we go? Which means a lot of questions ahead. We have with us the top team at Axis joining us. Amitabh Chaudhary is MD and CEO at Axis Bank. Neelkanth Mishra is Chief Economist, Axis Bank, and Head of Global Research at Axis Capital. We have veteran investment banker Atul Mehra, who is the MD and CEO at Axis Capital, joining us as well. Gentlemen, great to have all of you here. Thank you very much for your time here on CNBC-TV18. First up, let me sort of wish a fantastic conference ahead. And I'm going to get to maybe a mood check a little later if you've had the opportunity to sense the pulse there. We'll do that. Amitabh, we are speaking after a while, and I think it's so important to get a sense from you first up. And I think viewers and everyone watching will want to get that from you. You have a bird's eye view about, what's the state of growth in the economy, in the real economy, Amitabh, because we've had a bit of a cyclical, seasonal, whatever you want to call it, slowdown for the last few quarters now. The budget came in with some measures, tax cuts. The RBI on Friday has stepped in with a 25 basis point rate cut. How should we sort of see the trajectory of growth from here in the real economy? Amitabh, go on.
Well, I think the sentiment in our minds does remain a bit cautious at this point in time. We are seeing on one side government spending definitely picking up, but on the private side actually things have really not moved as much as we expected. Obviously the government has taken measures by infusing almost 1 lakh crores in the next 12 months or so in terms of some tax cuts. RBI has taken a step forward in terms of cutting the interest rates, but it has to ultimately reflect in the economy in real terms. I think we are watching the indicators quite closely. I think the power demand remains down. Cement is really not picking up as much as we want. So we need to be watching these indicators, and our view is that as these things roll forward, maybe the high frequency indicators will see a positive movement in May or June. So it remains cautious. Our view is that we have to keep watching the risks quite closely. The credit growth and the deposit growth remains muted. RBI has assured during his monetary policy announcement that they will provide durable liquidity, and they do realize that the credit growth does need to pick up for the GDP growth rate to come back to the 6.5–7% range, and that's an important element of that. So hopefully as RBI takes these measures in the next couple of quarters, we'll see a positive movement. But right now, I mean, while we are optimistic about what could happen, we remain cautious because the real scene on the ground is we are not seeing enough movement at this point in time.
And that is very well put. You mentioned May or June. How would you describe this slowdown, Amitabh, as you see it? You'd be seeing in so many segments across the bank, right? Is this a bit of a temporary thing? Is this maybe a little entrenched? Which areas, if you can? And maybe, I mean, how many quarters out before we are on the mend, in your opinion?
No, well, I said, a lot of it is in the hands of the government and RBI. They have, RBI has taken some proactive steps to ensure that the lending in some sectors is reduced or contained. And it has led to, obviously, a clear deceleration in credit growth. RBI has also been on the deposit growth side. Enough has been talked about as to why deposit growth has been muted, and the combination of these two factors is obviously causing, from as far as the banking sector is concerned, a slowdown in overall growth. And because the growth is overall slowed down, obviously it has its own impact on the economy. On the other side, while the government spending was not there in the first half, we're expecting it to pick up the second half, so that's a positive sign. But the private capex is not picked up, and Neelkant is here. I'm sure he can give you more insights. But overall, I think the good news is that the government recognizes something needs to be done, RBI recognizes something needs to be done, some steps are being taken, more steps are being promised, and hopefully, I mean, given where the Indian economy is, where it is placed, again, the overall global macroeconomic situation, even though there's a lot of uncertainty there, I think things definitely should move up where we can get back to our, the expected growth rate of 6.5% to 7%. Now, obviously, this is under this cloud, or call it umbrella, of a huge amount of macro, global macro uncertainty. But I think we've got our act right as a country. Hopefully, in spite of that uncertainty, we can get back to the 6.5% to 7% growth rate in the next couple of quarters.
Amitabh, on margins, just a quick bit, the higher yielding segments have seen a bit of a slowdown, unsecured, etc. At the same time, you got a repo cut. Will margins sort of be a little lower, and how much? Not just, maybe for you if you can, and for the industry?
Well, again, it depends on a number of factors, but yes, immediately there will be a clear passing of this benefit to a large part of people who have taken loans from us. So it will have an impact on margins, a negative impact on margins. The deposit rates, I don't think it will come down in a hurry. It will take some time for it to percolate through the system. Also, the repricing of deposits will take some time. So on one side, while you might see an immediate cut on the yields which you are getting on some of your assets, you might not get the decrease in cost of funds. It will take, I would say, somewhere between 2 to 4 quarters for it to happen. So margins will be under pressure. Now, this is assuming nothing else happens. But on the other side, if there is a little bit of an easing of liquidity, you see that economic growth is coming back, and so on and so forth. There are other levers which are available to you which can allow you to compensate for this immediate decrease in margin. So let's see how this pans out. But immediate impact is obviously there will be a decrease in net interest margin, nothing else changes.
Mr. Chaudhary, hi, morning, and morning to the other two gentlemen as well, Neelkant as well as Atul. Just to complete this point on margins, like you said, this will depend on a lot of different varying factors, but given where we are right now, unless and until something new happens in liquidity, would this compression be, could it be system-wide, 50 basis points, 100 basis points, more, less, what's the best assessment at this point?
It will not be nowhere close to the 50 basis points you're saying. It will be much, much lesser. Because end of the day, please realize that it's a 25 basis point cut. This does not immediately impact every asset class. All the loans are not linked to MCLR. So firstly, it impacts a certain amount, a certain percentage of your assets. Then it's a 25 basis point cut. Obviously, we will not sit here. There will be something on the margin which we'll do. So I don't think the impact will be anywhere close to 50 basis points. It will be much lesser. It will be too early for me to speculate and start giving some guidance on this. I think once we have a better idea, we will. But I can definitely assure you it's not a 50 basis point.
Okay. That's very, very reassuring. Thank you for that clarification, that it'll be much lesser than 50 basis points. And, we do want to come back to the whole unsecured piece as well. And in terms of regulation, what has been pushed forward, which is ECL, etc., and what hasn't. But we'll come back in just a minute. Let me quickly go across to Neelkant as well. We had an exhaustive conversation with Neelkant just after the budget on CapEx. And Neelkant's point was that you need to take a far more nuanced view. It's not like there's a lid on CapEx. But Neelkant, we're also dealing with very fast-changing global news headlines on tariffs. And the China retaliatory tariffs are a reality. We are hearing that, this week we'll see more action. So in that sense, how is India placed? We're also looking at this high-profile meeting between Prime Minister Modi and Donald Trump as well. So what should we start penciling in terms of any potential tariff impact for the Indian economy and therefore the market sentiment?
See, I've held the view for a while that while there is a lot of global turbulence, the levers for growth are completely internal. So there will be some impact, as we have estimated, if there are reciprocal tariffs, and this was done before the headline rates were cut in the budget. If US was to impose the same rates as India imposes on US imports, you would see an impact of about $7 to $8 billion. But I think that number is going to be a lot lower because India, as you must have seen in the budget, has actually cut those numbers. There is, I think, significant global uncertainty. I think there is, the more the uncertainty on investment. And therefore, it makes sense to be a bit cautious on external demand. But frankly, if we can get liquidity into the system, if we can get credit growth to start moving up, we will start to see, I think, the domestic economy reviving. The importance of the real estate cycle, importance of the power generation capex. You must have seen over the weekend also, a very major steel company announced a 1 lakh crore investment. So, as we have discussed often on our shows, that when the real estate cycle is on an upturn, the cement volume growth and the steel volume growth is 8 to 10%. When the real estate cycle is on a downturn, both these numbers are quite weak. So the economic cycle and reviving it through internal means, through provision of liquidity. In fact, the governor very interestingly also mentioned that safety and efficiency have to be balanced, that there is a cost to excessive regulation, and that they will be taking a step back from that as well. So if we are able to revive credit growth from 11 to 14, 15%, I think we should be able to see a significant rebound in economic growth.
Okay. Our drivers of growth are internal, Neelkant. And this estimate was pre the duty cuts in the budget. You said $7 to $8 billion worth of impact. So
Yes.
that is what is that
If there
exactly?
were reciprocal tariffs. So if Trump says that,
no, $7 to $8 billion less of trade if that were to happen, less of exports if that were to happen. This is essentially what you're saying.
yes. So and that's the headline first cut impact. Of course, then there will be diversion. There could be price changes, and the impact would be net less. But if you just assume that the U.S. was to impose the same duties as India imposes on U.S. imports or imports from the U.S., then the headline, the first cut impact would be 7-8 billion. Of course, there will be manufacturers taking diversionary routes, routing to different markets, and the net impact could be even lower than that. But after the adjustments that were made to say, imports of high-end motorcycles and cars and the stuff that India imports from the U.S., the number could be even smaller than that.
Do you think tariffs we'll have to concede lower tariffs in response to the threat of reciprocal tariffs from here, even after what has been done in the budget?
See, remember that this is part of a negotiation. And every single leader, you must have seen the Japanese Prime Minister going to the US and sitting across and discussing things. So everything with the current US regime is going to be a negotiation. There will be economic and non-economic factors, both of which will start to matter.
Sure.
Will we have to bring down our tariffs even after the ones that we have changed? I think time will tell, but I suspect that it will be part of a broader negotiation and not just limited to the import tariffs on goods.
Absolutely. We have to take a quick commercial break here. Gentlemen, stay with us. We'll bring in Atul into the conversation as well and ask him what's causing FIIs to continue to sell. So that's coming up in just a bit. That conversation with the Top Access team continues. Stay with us.
ये जो 27 साल बाद दिल्ली में बीजेपी दोबारा आई है, ये बहुत बड़ा बनवास काट के आई है। केजरीवाल तो गए, केजरीवाल का पॉलिटिकल करियर भी खत्म है, केजरीवाल जेल में भी जाएंगे। जो पैसा कमाया तो इसको एंजॉय करना और उनके पास
Welcome back to the special conversation. We have the top team of Axis Bank with us just ahead of their investor conference. We've got a pulse of how the banking environment is looking with Amitabh Chaudhary. Neelkant's given us a hint of what these tariff wars and tariff talks could mean for India. Atul, let's come to you now on the market sentiment. You know, we all were thinking and keeping fingers crossed in December that this FPI selling would end. Guess what? I looked at the latest numbers this morning. 85,000 crores already gone so far in 25. And that's just the listed market selling. And then there are the insiders who've been selling for a long time, promoters, foreign promoters, private equity, etc. in the deal market. What's your sense on the mood on India?
So the mood on India continues to be still good, still quite robust, still quite favorable. Nothing wrong. India still continues to be amongst the best performing markets and the most attractive market globally. Yes, there are a couple of things which have set us back, and those I call as temporary dislocation, not as fracture. We need to get this in order, and I think there are a couple of things which are weighing on the back of the minds of the investor. And first and foremost is this whole rupee to dollar equation. Second foremost is what are the earnings growth going to look like, and that is the most crucial question in the mind of every investor, whether it's a domestic or the FPI or the private equity or even the man on the street. The earnings growth is the crucial question in their mind. The third important factor is the whole geopolitical situation and the new world order. What does it look like and where does India stack up? How do we come out of that? And last but not the least is the resilient in the economy and how are we growing. So these are some of the broader themes that needs to be addressed. I think we have answers to it. We have path which is very clearly visible, but I think we need to remove some of the haze out of it so that the runway is clearly visible for more inflight of capital to happen into India.
You know, Atul, I completely take that point, but the other piece, the selling from insiders, and we kept seeing that through much of 23, a lot of 24, right? The block deal buzz that was going on, where either early stage investors were selling or Indian promoters were selling, and a lot of companies came to IPO as well. In the midst of all this, some global MNCs came and decided to list over here. For instance, you know, we've got the Hyundai listing, LG is about to list, but there are others who are winding up. For instance, Whirlpool, AkzoNobel looking to sell a part of its business as well. So what's your sense on the big PE sort of mood? What does that tell us? And the MNC mood? I mean, what clues or cues can we pick up from these actions?
So let's divide this question into two parts. Have we seen the supply coming from what you call as insider? Yes, that will continue, and that will continue in a big way, even in 25-26 that we are currently on. Let me give you some data. In 23, we saw total activity of around $15 to $18 billion. In 24, we saw around circa $40 billion. In 25, we could see as high as $50 to $55 billion of sale through various corners. So that's the supply that is going to hit the market. And to add to it, you're going to see some of the foreigners, like what you mentioned, Hyundai, LG. There will be what we call as a whole host of companies which are turning upside down, which were incorporated abroad, are getting folded into Indian structure. You will see a lot of activity on that count. And the reason for that is very clearly, India is a great market. India is a very liquid market. India is a very robust market. And we have all categories of investors participating in it. So it's a market which is now a very matured market, and it is moving faster to being called as a developed market, no more a developing market.
But Atul,
we have a huge FII interest still present in India. We have domestic mutual funds, pension funds, insurance companies, family offices, high net worth individual, man on the street, retail investors,
absolutely. I mean, the depth
all
of the
participating
market
still in a very big way. So which is what makes India a great market. And there is enough liquidity for, I quote unquote, high quality companies at good valuation to get absorbed in Indian markets.
No, absolutely. 10-second response. Is there a risk of supply overwhelming the secondary market, supply overwhelming demand, like we saw in the late 90s? Too much supply.
It is to some extent. And we need not worry about it as long as we have the domestic flows. As long as we have the domestic flows which are robust. And there, the key indicator to watch out for is the SIP flows. I think as long as the SIP flows are adequate or in line with what we are seeing, we have no reason to be worried or concerned about.
Absolutely. Amitabh, you were one of the earliest, just to get back to the real economy banking, to kind of flag off this stress in the unsecured segment. I mean, we've seen the microfinance space go through a bit of a cycle. Opinions vary where we are at there. What is your own sense, Amitabh? You know, are we going to see a broader spike in retail NPAs across segments?
So, Prashant, let me just slip in one word here before I answer a question. I mean, we are having this conference, Access Capital Conference, huge number of investors. I think perfect time to have this conference. A lot of uncertainty, but some steps have been taken, some more steps to be taken. So, you know, Atul and Neelkant and the entire team have put together a great conference. We're looking forward to it. So, that's my two-bit. So, as far as unsecured is concerned, yes, the stress started there. We have seen it extend to MFI. Obviously, we also see some of the governments or some of the local people reacting in a particular way. We have seen a stability, at least as far as the banks are concerned. We are seeing the stress stabilizing. I'm not saying it's stabilized, I'm saying it's stabilizing. I think you're seeing some positive signs on the MFI side also. But, you know, as all of us have been pointing out, if the growth slows down, if rupee depreciates, and it has depreciated so rapidly, if global uncertainty remains, tomorrow exports could get impacted if, let's say, tariffs come in. We cannot say that, by the way, this will not extend to secure forms of business. We are in the risk-taking business. The credit costs are normalizing. We have seen some, you know, obviously stress in some of the sectors. We have to be watchful and cautious that this should not extend to other asset classes also. Now, on the same side, you know, in the earlier part of the program, I said we are quite optimistic about, you know, what could happen because government and RBI is taking steps. But we at the same time, in the same breath, have to be watchful because the worry is that if we don't contain some of these things, it could extend to other asset classes. So we are watchful. We see no signs as yet, but we are watching the space very, very closely.
You know, Mr. Chaudhary, you said exactly the same thing to Shireen in that interview in Davos. I was listening to it. And you said that we need to watch very carefully if unsecured stress starts spilling over to other classes. Since then, we've had liquidity measures taken up by the central bank. We've had this 25 basis points rate cut. There was commentary that the RBI is going to step in with more liquidity measures if and when needed. What more would you want to see from the RBI? I don't think they're going to go easy on unsecured. I mean, at least the commentary in that press conference didn't give us a clue that they'll very quickly lower the risk weights for NBFC lending or lower some of the prudential norms for unsecured. What more would you want to see from the central bank?
No, I'm not suggesting that RBI goes slow on some of the measures they've taken. I'm just saying that some of the measures, and individually the measures, have been in some cases so tough and tight. The credit growth has dropped to a level where obviously you are seeing some signs of stress develop, or it is having an impact on the GDP growth rate. I mean, as Neelkanth pointed out in his earlier comments, that if this same credit growth could go back to 14-15%, it will have a positive reinforcing message in the overall growth rate of the economy, and some of the stress in the system could also go away. I'm not for a minute doubting what RBI said. I'm just saying we need to wait for those measures to come out and play out, and then hopefully we'll see positive signs. I'm quite optimistic. But the measures RBI has taken on liquidity have been sufficient enough to take care of the deficit in terms of liquidity. They are not led to any surplus liquidity. Interest rate cut is not going to lead to higher credit growth, in my mind. Interest rate cut has been done to kind of spur the economy and bring private capex or some of the capex back. Let's see how much time it takes for that, that lift to happen. So I think some measures have been taken. I think some more have to be taken, and they have to be consistently demonstrated for people to get the confidence and for the growth to come back.
Amitabh, we're running out of time, and I hope you allow me to sort of take this one bank-specific question. So you've reported this extensively, and I think it's become clear now that the insurance regulator, IRDAI, wants life insurers to reduce their bank assurance exposure. You have a 20% stake in Max Life. How do you look at that investment? I mean, has anything changed? Does that come under a bit of a cloud in your mind, or you stay the track?
Well, we have absolutely no doubt about why we have invested, and our commitment to Max remains steadfast. We see that as a long-term investment. We really, really like the team which we have there and what they've achieved over a period of time. So from our perspective, nothing has really changed. As far as the noise around bank insurance is concerned, yes, a lot of articles have appeared. We have not heard anything specific from the regulator as yet. That does not mean it might not happen in the future. I think at least when we look at data, and if the worry is coming from mis-selling happening in bank insurance, frankly, our data shows that the mis-selling is the least in the bank insurance sector. But obviously, if there is a concern being expressed by the finance ministry and the regulator, as an industry, we need to work in terms of firstly convincing them that no, maybe things are not that as bad. And if there are some areas, some customers who do suffer, we have to take obviously measures to ensure that whatever is bothering the customers and the regulators is taken care of completely. I mean, obviously we have to react to some of the concerns being voiced quite openly and frequently, especially by media.
Absolutely. And I'm glad that you sort of answered that. Out of time, but I wish you all the best of luck to the three of you and your teams as you put together this fantastic lineup of speakers. And of course, I mean, big client registrations, as we earlier pointed out. And of course, a bunch of foreign investors, companies, etc., who are there at the conference as well. So that's the Axis India flagship conference. And Amitabh, Neelkanth and Atul, great to have all of you here on the program ahead of that with your perspectives. Appreciate it very much here on CNBC TV18. With that, it's a wrap on this special edition of Market Masters. Thanks very much for watching. Trading Hour will come up next in just a quick bit.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा के लोगों ने, जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
This growth inflation dynamics opens up policy space for the MPC to support growth, while remaining focused on aligning inflation with the target. At the same time, the MPC felt that excessive volatility in global financial markets and continued uncertainties about global trade policies, coupled with adverse weather events, pose risks to the growth and inflation outlook. This calls for the MPC to remain watchful. Accordingly, it decided to continue with a neutral stance. This will provide MPC with the flexibility to respond to evolving macroeconomic environment. The MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%. The MPC also decided unanimously again to continue with a neutral stance and remain unambiguously focused on a durable alignment of inflation with the target while supporting growth.
Good morning. Welcome to Monday's Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. Benchmark indices markets extending their losing streak for the fourth consecutive session. The Nifty and the Sensex trading with cuts of about 0.7 of a percentage point. The Nifty now below 23,400. Trump tariff threats weighing on investor sentiment. And it doesn't help that the rupee now has breached the 88 mark against the dollar. So all this is weighing on risk sentiment right now. Broader markets are under severe pressure, trading with deeper cuts. 1.5% gone in the mid-cap index, nearly 2% gone in the small-cap index. Metals are hurting today. Take a look at stocks like Tata Steel, JSW Steel, cuts of about 2.5–3%. The only pocket which is holding up are some of your large FMCG names, the consumer staples, which didn't see that little bit of a rebound last week. So Britannia, HUL, these are stocks which are on the green side and trying to at least stay in the green.
Good morning, Rima. Absolutely right. Just a few FMCG names managing to hold out in the green. Otherwise, it's a sea of red. And like you mentioned, it's the broad end of the markets. The advanced decline ratio is quite weak. Individual stocks that are in focus, Wartech, Wabag, decent set of numbers, a strong order win over there. So that stock doing quite well. PNC Infra, remember, they've NHAI tendering, which the company was disallowed, that particular period has been reduced. So that's a significant positive for PNC Infra. Numbers will come later today. One stock, the entire pharma pack today is seeing quite a bit of a sell-off, especially some of the CDMO names like Syngene, Laurus. These names are seeing quite a bit of selling pressure. And another stock from the pharma pack, which is Alchem Labs. The company surprisingly retained its EBITDA margin guidance of close to 19% for FY25. Analysts were hopeful that they would upgrade that. And that stock today is down over 6%. But overall, a weak set, weak screen, and especially pharma today seeing quite a bit of a sell-off.
And the mood in the market has changed. So even stocks like a First Source, where the numbers were good, they were holding up in the green, now they've reversed. So First Source is down in the red. Stocks like NHPC have come off significantly from the day's high. Viatech Babak too was up so much more. It's still up in the green by about 2.5–3%. But the point is that from the early morning gains, for some of these stocks where the news flow, the earnings is positive, the sentiment in the market seems to have worsened. But let's straight away get to the first corporate on our show now. We've got the management of Tega Industries joining in. And I think the stock is down close to about 1–1.5%. Mehul Mohanka, Managing Director and Group CEO of Tega Industries, is now with us on the show. Mr. Mohanka, thank you very much for joining in. So the first question is, for the first 9 months of the year, you've clocked in a revenue growth of about 12%. You have guided for a 15% revenue growth for FY25. Are you on track? Does the 15% top-line growth stand? And how is Q4 shaping up?
Good morning. Thank you for having me on the show. So, yes, we've had a good Q3 results. We had actually guided the market at the end of Q2 itself that we would be retaining guidance and we would be back at 15% levels, at which we delivered it in Q3 earnings. And we're retaining our guidance as well going into the end of the year.
Okay, and give us some color about Q4 and what about FY26? How is FY26 to your mind going to shape up? Better than FY25? Similar? What are the headwinds, tailwinds as you see it?
So we anticipate FY26 to be better than FY25. Of course, we're in the middle of budget season for ourselves, so I would know that by the end of our Q4 results. But we're seeing significant tailwinds, mainly in copper and gold. That are the two primary metals that we work with, and we've seen considerable demand in both these metals in the global mining and consumable market. So we're quite bullish about our growth trajectory remaining strong going into FY26 as well.
Mr. Mehul, thank you so much for joining us. The first question is, where does the order book stand at currently? What was the order info as far as Q3 was concerned? Q4, what is it that you're expecting to add as far as the order book is concerned? FY26, what is the order prospect pipeline and what is your typical win ratio?
So as of Q3, our order book stands at 1,258 crores, out of which 758 crores is executable over the next 4 quarters. As of, I think, December 23, we were at 593 crores. So that's a significant improvement on the order book for us. Our normal order book to win, pipeline to win ratio is roughly around 70%. And we're seeing FY26 to continue to be as robust as current trends in terms of order book as well.
So at the end of FY26, where can we expect your order book to stand at after the execution?
So we would typically should end the year with an open order book as of 1st April of close to about 700 to 800 crores.
Okay. Margins for you have bounced back, and you had indicated that in the prior quarter there were certain one-offs which hurt the margins, and now they've bounced back to levels of about 22.3%. How are Q4 margins likely to pan out? Because typically H2 for you is much stronger.
Yes, of course. So we will end Q4 as well, holding our margins at current levels. So we don't see any major stress on our margins in the last remaining quarter for the financial year.
And there were some delays in shipments, deferments of orders by certain customers that you had flagged off in the prior quarter. There were some delays in receipts of payments also. Has the situation ironed out? Are there any issues that you're facing in the current quarter or likely to face in Q4?
Also, the team has been able to manage the situation quite well, even though we continue to face challenges in terms of shipping globally. But we don't see any major stress going forward because we've been able to manage that and de-risk our supply chain to that extent.
Okay. One thing that the street was waiting for eagerly was commencement of operations as far as the Chile facility was concerned. We understand that all of the approvals were in place and the opening was expected to be in the first quarter of FY26. Is that on track? We understand there could be some delays there. What is causing the delay? What is the expected loss of revenue due to these delays? And what are the alternatives that you have for that particular facility?
Yeah, so the commercial production of that plant is delayed by 2 quarters, as we'd mentioned in our earnings calls. We don't see any significant impact of that on our revenues because we'd already taken preemptive steps by adding incremental capacity in our existing facility. So we would not see any margin or revenue contraction in FY26 or 27 owing to this 2-quarter delay.
Sorry, you had guided for, I think, the commercial sales to begin in June or July of this year. Is that correct?
That's
so that
correct.
holds. That holds.
That holds. Yes. So we would see the continuous uptake on the revenue from the capacity that was supposed to come in because we've added incremental capacity in our existing facility.
A quick word, since we're out of time, on exports. How have exports fared for you?
So exports have been strong. So out of India, our revenue mix is 86% in favor of exports, and that continues to remain robust.
And any issue because of the tariffs?
Not at all. We are not impacted by tariffs at all.
Thank you so much, Mehul, for joining us and giving us a sense of how Q3 panned and what's the outlook as far as FY26 is concerned. Let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
With comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today we are focusing on gold.
Thank you for that, Vivek. Well, yes, all-time highs trading in case of gold prices for the Indian markets, especially for the Indian markets, because with rupee at almost at 88, the calculations for the rupee increase much more here. But as you can see on your screens, that 28.77 is not too far away from all-time highs of 28.86 that we saw on Friday itself. So continuous run-up in case of gold prices there. If you look at the global investment numbers, those have been on the positive side. For the Indian markets, this is the wedding season, and very soon you will have Valentine's as well. So there is jewelry buying continuing even at these higher prices, is what the jewelers tell us. The reason that you have seen run up in prices is one, that there is easing policies that we've seen from the global central banks in sense of rate cuts, starting right from Bank of Canada to England to India, Bank of China, and of course the ECB as well. The markets do believe that US Fed as well in the next meeting could be looking at a 25 points basis rate cut, and there could be 2 of them coming in from the US Fed in this year. That is what the markets are factoring in right now. Apart from that, it also is a lot of safe haven buying from all those tariffs coming in. US talking about, in some sense controlling Gaza. And then you also have concerns coming in sense of geopolitics between Russia, Ukraine, more sanctions as we've seen coming in on Iran as well. That is what is keeping the prices higher as well. When you look at various banks and brokerages, the expectation is that $2,900 to $3,000 an ounce is a possibility in the first quarter of this year as well. So more higher highs is what the markets are anticipating for gold.
Thank you very much for that. We'll get into a break. On the other side, we'll get chatting with Rajan Venkatesan, CFO of Latent View Analytics. Welcome back. Latent View Analytics is holding up in the green in an otherwise subdued market on the back of its Q3 numbers. The company has clocked in a revenue growth of 9% quarter-on-quarter. Year-on-year revenue growth is at 37%, aided by the acquisition of Decision Point. Margins too have expanded. Rajan Venkatesan, CFO of Latent View Analytics, is now with us on the show. Rajan, thank you very much for joining in. This is Rima here. So on the top line, you have maintained your guidance of ending the year with about $100 to $105 million of revenue. But you have flagged off weakness in CPG, certain headwinds, and retail CPG is about 19% of your top line. So what's the extent of the weakness? What exactly is happening? And when do you think it will recover?
Hi. First of all, thanks for having us on the show. So you're right. I think in terms of the guidance for the full year, while we are fairly confident that we'll be able to deliver numbers that we had initially alluded to, what we are seeing as we head into FY26 and we plan for the next year is while the tech business, which is, I would say, the largest share, tech is between 65 to 70% of our overall revenues. So that continues to be really, really robust and strong. And there is, I would say, fairly good momentum going into the next year as well. CPG, has now emerged as the second largest vertical for us post the acquisition of Decision Point. Today contributes close to about 19% to our overall revenues. What we've seen is a lot of our clients in the CPG space, you can take the likes of, say, a Coke, a Pepsi, a Unilever, Mars, all of these companies are themselves, going through, if you look at their stock prices itself, they've been down anywhere between 10 to 20% in the last 6 odd months, right? Because of a lot of the pressure that's coming in on their performance itself, their growth outlook. Also, their margin numbers are getting impacted. Like, for instance, the chocolate manufacturer is getting impacted by high prices of cocoa, for instance, right? So there is sustained pressure on their business performance, which is resulting in some bit of a pause, I would say, in discretionary projects getting lined up for the next year. And that's where we see, some level of tailwinds, headwinds as we head into the next year. Having said that, I would say, some of this pain is again short term. You could see some pressure in the next, say, quarter or two. But given the quality of the names that we work with, the type of logos that we work with, we are fairly confident that growth will come back. So while we want to be conservative and guide the markets accordingly, we believe that from a medium to long term standpoint, we should be able to maintain our historical growth rates. While in the short term, some level of headwinds in the CPG space could impact growth rates.
So take us through the maths, because you've given a guidance of about 18 to 20% for FY26. So what does that assume in terms of a growth rate for the tech vertical, and what is it assuming for CPG?
So I would say we're still in the process of planning for the next year. So I won't be able to give you vertical wise split of where we expect the earnings to land. Tech historically, if you see, has been our strongest sort of vertical. But it's also at a certain base today. The tech business also has a certain level of maturity today. So we expect that business to continue to grow at the 18 to 20%. In fact, even a little better. CPG could grow anywhere between 5 to 10% for the next year, and that could have some level of impact on the overall growth prospects. But financial services, which is about a $10 million practice for us today, it's close to about 10% of our overall revenues. That's again a vertical where we are seeing fairly strong growth momentum coming back. We expect that this business will sort of step up in the following year. We've also expanded significantly in some of the logos that we're working with in the financial services side. So between tech and financial services, we expect a lot of the growth to come in, whereas CPG could be flattish and delivering between 5 to 10% growth for the next year.
Hi, Rajan. Rajan, one thing which we want to know is that you recently got a large $3 million plus deal. We believe it was from an existing client. We also understand that there's another large deal in the works. When is that expected to materialize? Also, how's the deal pipeline looking like currently, especially with the headwinds that you just mentioned in place?
So as far as the large deal win is concerned, of course, this was with one of our largest accounts. So this is, in some sense, this is the largest contract that we've ever, individual statement of work that we were able to contract. There are, of course, a couple of other large deals that are currently in the pipeline. But what we've generally seen is that some of these larger deals take their deal cycle is slightly longer. So our sense is, we will have some update on the next large deal in the first quarter of the next fiscal. That's when it's most likely come to a conclusion. As far as the current order book is concerned, while we don't put out I would say order book and pipeline, we don't put out these numbers because in some sense our business is also, we don't have multi-year contracts unlike some of the other mainstream IT services providers. Most of our contracts run for a period of between 9 to 12 months. And given that 95% of our business is from the US, most of them tend to follow a Jan to December contracting cycle, right? So typically our order book is very, very strong and at the beginning of the year, but through the year we actually execute that order book. But just to give you a comparative sort of reference, if you were to compare the order book as we head into FY26 compared to FY25, at the beginning of FY25, our order book is almost 35% up compared to the previous year.
Just a quick word. You've also spoken about how clients expect you to share the benefits of generative AI-related productivity benefits. What's the extent of the productivity benefits that you've already seen? And is this a 50-50% kind of sharing?
See, it's very early days, I would say. I think a lot of us are still sort of, at least the real sort of benefit and in some sense, both from a productivity standpoint as well as, the complexity of the type of problems that you can solve for clients. I think, while we are seeing benefits coming through the use of generative AI, I would still say for enterprises, a lot of them are still operating or sort of executing projects on a POC basis today. Yes, there is an expectation, I would say, in the medium term at least, that as we use generative AI to deliver a lot of the work, internally at least, what we've sort of set out for ourselves is we need to have, in some sense, non-linearity coming in, when we deliver our work. Now, of course, there would be an expectation over time that some of these efficiency benefits would get passed on to the clients. But right now, we've not seen any pressure on pricing per se or no requests directly from clients to sort of pass on the benefits.
Okay, Rajan, we'll leave the conversation here. Thank you for joining in. Get into a break. We'll come back with more on the markets.
ये जो 27 साल बाद दिल्ली में बीजेपी दोबारा आई है, ये बहुत बड़ा बनवास काट के आई है। केजरीवाल तो गए, केजरीवाल का पॉलिटिकल करियर भी खत्म है।
Welcome back to Trading Hour. Well, metal stocks are in focus as Trump plans to announce 25% tariffs on all steel, aluminium imports. Nigel is here with more details.
Well, President Trump has announced his plans to implement 25% tariffs on steel as well as on aluminium imports. Remember, in reaction to Trump 1.0 tariffs, initially we did see a surge in hot rolled steel prices as well as in Midwest premium on aluminium. However, the reaction to the metal index today is negative as risk of sentiment is prevailing. The fear is that tariffs will be detrimental to sentiment as well as demand globally, which is not good for stocks. Though there are many variables at play and all of them appear to be playing out at once. Well, let's focus on the steel space first. The US imports of steel was around 28 million tons in 2024, with bulk of the imports coming in from Canada, Brazil, Mexico, South Korea, as well as from Vietnam. Now, Indian steel producers, their exports into the United States is very, very minimal. But the fear is that the steel that was earlier imported into the US could get dumped in various corners of the world. For example, Vietnam exports to the United States, well, that has doubled in the last calendar year to 1.3 million tons in 2024 from around 500,000 tons in 2023. However, some believe that this will be another reason to strengthen the ferries companies' demand for safeguard duty. Remember, the steel companies here in India have been rallying for some kind of safeguard duty, and this could strengthen their plea. Moving to the aluminium space then. The US imports of aluminium was approximately 5.4 million tons in 2024, with Canada contributing bulk of it. Nearly around 58% of the aluminium imports into the United States came from Canada. How does it impact Indian aluminium players though? Well, the rupee will see some weakness as well as the Midwest premiums could move up. So aluminium producers could gain on pricing, but there could be a ripple impact on demand, which will hurt companies like Novelis, in turn hurting Hindalco as well. Now, things are still very, very fluid. As there is clarity awaited on the date of implementation of the tariffs, will there be some concessions given to various countries? And also, there could be some reaction coming in from some of these countries, and they could levy tariffs as well. So things are fluid. For now, negative sentiment as well as pressure tactics from Trump, that's what's weighing on metal stocks. But we'll have to see how things pan out from here on.
Thank you so much, Nigel, for joining us and explaining to us the exact impact of the proposed tariffs. Let's now take a short break. Up next, we have Sanjeev Goenka, Chairman of First Source Solutions, joining us to discuss the Q3 numbers.
भी जाएंगे जो पैसा कमाया तो इसको एंजॉय करने और उनके पास
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Welcome back. Let's talk about Firstsource. It's been a good quarter for the company and they have gone ahead and raised the FY25 revenue guidance once again. It now stands at 21.8 to 22.3%. We have with us Sanjeev Goenka, the chairman of the company. First, Mr. Goenka, if you could explain what's driving this upgraded revenue guidance. Is it that the organic revenue growth is doing better than what you anticipated 3 months back, or it's that Ascensos acquisition that you did a couple of months back? Has that contribution exceeded your expectations?
So there are 3 different elements to this. One is the Ascensos acquisition is paying off. And our presence in South Africa, thanks to Ascensos, is expanding very rapidly. Second is this has been the 3rd quarter where we've had 3 major wins. And this quarter, we've had a total of $101 million of wins. So that's a fairly significant milestone from a Firstsource perspective. So we've never had this kind of growth. We've never had this kind of wins. We've never had this ratio of wins. And so therefore, the way it's going and the way the RFPs are playing out for Q4 as well, we definitely believe that we should be in line to achieve our revised guidance.
For that, Mr. Goenka, what is the expected Ascensos revenue contribution in FY25? Earlier, we understand it was pegged at close to 5%.
You know, I think Ascensos will be about 5 to 6%. But I think over a period of time, we see Ascensos contributing more and more as we get along.
Okay, what about the overall demand environment now? There is hope that things are picking up. Many of your competitors, companies have called out that FY26 will be better than FY25. Banking is already showing green shoots. So to your mind, what's the setup looking like for FY26? Will it be better than FY25?
Yes.
So what makes you confident about the demand environment that you're witnessing?
You know, this is an exceptional quarter, but we are very optimistic about our ability to now win RFPs. We are expanding. 2 quarters ago, I had said that we are looking at expanding the wallet share of our existing customers. And in 13 of our top existing customers, our wallet share has increased and our revenues have increased. So that's a fairly significant step forward, and we see this getting better and better as we go along.
Okay, your margin guidance you've maintained between 11 to 11.5%. Talk to us about what's, what are the margin tailwinds, headwinds? You're maintaining it.
So we will be somewhere between 11 and 11.5. And we are working very hard to improve our margins further. Our gross margins have gone up, but we have invested in a lot of people. So our SG&A expenses are also up. And this is our investment for the future. And now these investments are beginning to pay off. Because we've invested in a marketing team, you're now beginning to see traction in terms of deal wins, revenue gains. I think it's all now beginning to play out.
Mr. Goenka, earlier you were targeting of reaching the $1 billion revenue run rate by Q4 FY26. Given the strong sustained performance, can you achieve this earlier?
We are silently optimistic.
Okay, so silently optimistic about achieving that $1 billion revenue growth guidance, but you're not putting a timeline on that. Thank you very much, Mr. Goenka, for joining. Okay, before that, just wanted a quick word coming in on the financial vertical, because that's the key vertical, for you. Now, there is a likelihood that we're going to see no Fed rate cuts in calendar year 2025. Does that change your assessment of how your financial clients will perform in this year?
So BFSI is not as strong as the other sectors, but it certainly looks better in the coming period as compared to where it is now. But what for us is performing and is likely to perform very well is we expect to see a growth in utilities. We expect to see a large growth in the healthcare segment. And in USA, particularly with the Trump administration, there should be a strong focus on healthcare. And we do expect this sector to have strong tailwinds.
Thank you very much for joining in. That's First Source. Optimistic going into Q4 and next year. It's time for a growth code. Thank you, Mr. Goenka, for joining in. Let's get to the growth code, which is an initiative by Grow and CNBC-TV18 designed to equip you with valuable strategies. So as we conclude the special initiative, Prashant sat down with SEBI's whole-time member, Mr. Anand Narayan, to discuss the significance of asset allocation. Listen in.
We talk about equities, we talk about F&O, but there's also asset allocation at a broader level, right? When you pull back and look at what you should be really doing, whether you should be buying A stock or B stock or C stock. Well, is that the right question to ask, or is it an important question to ask? I mean, where are you invested? What asset classes? How important is that to your mind?
So Prashant, as a former academic, let me quote a few papers. So 1986, there was this seminal paper by Brinson, Hood and Biebauer, which actually went on to show that a predominant portion of the variance in returns across portfolios is explained because of asset allocation. Less than 10% was explained by stock selection or by timing the market. What that means in English is the following. As an individual investor looking for the long-term investment and being a responsible investor, you should be spending a lot of time in figuring out what your risk appetite is, the first question that we sought. And then based on your risk appetite, you have to create a portfolio, a diversified portfolio, which mirrors that risk return across all asset classes. You know, you've got to have equity, you've got to have debt, you've got to have real estate, commodities, fixed income, all of that put together, right? So you create that portfolio based on your risk appetite. Once you decide your asset allocation, that pretty much will determine 90% of the variation of the returns going forward. Some of our investors tend to spend an inordinate amount of time on picking stocks or on timing the market.
99% of the investors.
That's right. So it's a bit of a Pareto principle, where we spend inordinate amount of time on something that matters very little, and we don't spend enough time on what really matters, which is doing a thoughtful asset allocation.
This growth inflation dynamics opens up policy space for the MPC to support growth, while remaining focused on aligning inflation with the target. At the same time, the MPC felt that excessive volatility in global financial markets and continued uncertainties about global trade policies, coupled with adverse weather events, pose risks to the growth and inflation outlook. This calls for the MPC to remain watchful. Accordingly, it decided to continue with a neutral stance. This will provide MPC with the flexibility to respond to evolving macroeconomic environment. The MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%. The MPC also decided unanimously again to continue with the neutral stance and remain unambiguously focused on a durable alignment of inflation with the target while supporting growth.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronically...
Welcome back to Trading Hour. Well, as you can see on the top of your screen, the Nifty and the Sensex continue to remain under pressure, with selling pressure actually intensifying, especially in the last 45 minutes of the trading session. With that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime report is up next.
India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
US President Donald Trump's comments on imposing more tariffs spooks the street. Realty and energy are big drags, while FMCG manages some green. Mid-caps fare worse.
The rupee falls sharply in early trade on Trump's reciprocal and tariff threats. But the dealers say that the big RBI dollar selling brings down exchange rate from around the 87.95 levels.
Ahead of the Trump-Modi meet, M&M CEO Anish Shah says the US is an important market and they're open to global competition in EV, but with a Make in India focus. On the domestic front, he is upbeat on growth, especially in the rural markets.
And Rashmi Saluja, the chairman of Religare Enterprises, is ousted by shareholders at the AGM. Meanwhile, newshooter Danny Gaikwad is asked by the Supreme Court to deposit 600 crore rupees to back his proposed bid.
A reserve fund has been created in the budget to meet shortfall in subsidies for LPG and fertilizers. Collections from oil cess will be used for this, even as Finance Minister examines the LPG compensation demands.
Hello and welcome to Halftime Report. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Manglam. Well, Manglam, and the markets are clearly nervous as we speak. The Nifty is down close to around 200 points. The Nifty Bank as well is struggling, but the broader markets, they've come in for some selling pressure. I think the global jitters are weighing on sentiment.
The global jitters and, lack of any further triggers as well. We had the budget, we've had the RBI policy meet, and now uncertainty looms as we, move towards the close of this financial year itself. So we'll keep an eye out on that. And towards, the end of the result season, you always have a lot of companies reporting weak sets. So we'll keep an eye out on that. As we speak, we also have the numbers of Varun Beverages at the bottom of your screen. So revenues of the company grew by about 38%, EBITDA by 39%. I think there would be two factors. One, the Africa business that they consolidated could be aiding their revenue. And the second fact is that there was delayed winter. So typically delayed winter is good for summery drinks, which explains why Varun Beverages saw such a big growth. Though we will go into the nitty-gritties of those numbers. We have managements though.
Well, that's right. We have the Ola Electric management that's first up on the show. The company reported a weakish set of numbers, but they have guided for better times ahead with the new launches as well as their focus on backward integration. To help us out with that, we're joined by Bhavesh Agarwal, the CMD of Ola Electric. Hi, Bhavesh. Good day. Always good to have you on the show. Well, in terms of profitability, you still seem to be lacking. The other expenditure had popped up, but you have mentioned that there are a couple of one-offs in there, whether it's with regard to the warranty issues and other issues. The point is that you're saying that once you hit 50,000 units, you'll break even. Could you tell us by when do you expect to break even? Which quarter does this happen? At present, doing close to around 28,000 or thereabouts on a monthly basis. Please go ahead.
Nigel, always wonderful speaking with you and good to be on your show. Q3 was an important quarter. It was in a way the start of a turnaround in terms of scale for us. Competitive intensity has grown a lot in the last couple of quarters. But towards the end of Q3 and in January, we've actually turned around from the service issues we faced, etc., to a much stronger, again, we reclaimed our market leadership position in January. And our gross margin, which in Q3 was about 20.8%, actually expanded to about 26% in January. So there are a few key themes that I want to share with your viewers. Firstly, we have completed the network expansion. We've gone to about 4,000 stores. And this has also helped us put the service challenges of capacity and all behind us. There were some one-off costs we had to book in the last quarter on the account of service and giving goodwill service to all customers that had issues. Now that is behind us. So looking ahead with the higher store count, better service, we are seeing tailwinds in our volumes already. Number two, we've also launched two new products. Firstly, the Gen 3 scooters, which have already been launched, are getting delivered this month to customers. There's very strong interest in customers, and these actually reset the technology advancement in two-wheelers to the next level. And in addition, the biggest launch, which actually happened just last week for us, was the motorbikes. And motorbikes are going to be delivered next month onwards to customers. It opens up a completely new segment to electrification in India, and you can see the motorbikes on your screen. our own belief is motorbikes are going to be even bigger than scooter electrification in India.
Bhavesh, we see those visuals and we hear from you on the launch also, and we've heard some aggressive commentary coming in from you on the market share front itself. It still doesn't answer a couple of questions that we earlier posed. One is, when do you hit the 50,000 vehicles per month mark? And secondly, if you could also give us a sense of what the bookings data of your third generation scooters and motorcycles have been. So when they start delivery, we'll start to see that in your revenue as well.
Absolutely. So in terms of costs, we have a gross margin expansion that we are undergoing. And you saw that even last quarter, despite lower revenue, our gross margin actually expanded. And in January, that expanded further to 26%. And we are guiding that gross margin will continue to expand because Gen 3 is coming in February onwards. So gross margin expansion should continue quarter on quarter for the next few quarters. Number two, on operating expenses also, we've actually been able to control operating expenses with removing the exceptional costs, so one-time cost that we had last quarter. OPEX is actually trending downwards, and for the course of this year also, it will be largely flat or trending downwards with increased volumes. Now, 50,000 is the mark where we actually break even in EBITDA. And, we're not putting a timeline to it, but let's say in the next few months, we do feel confident we will get there with both Gen 3 and motorbikes. So we do feel confident with our expanded stores, Gen 3 motorbikes. 50,000 should be probably in 4 to 6 months.
In that 50,000, how much would the contribution of Gen 3 and motorbikes be? You're currently doing about 25, 28. So should we assume that Gen 3 and motorbikes would account for about 20, 22,000 additional units per month?
Absolutely. See, motorbikes open up a 2x market size compared to scooters. And as our motorbikes come into the market, customers already have a lot of excitement. So we should see next quarter onwards the motorcycle volume uplift in our monthly Vahan numbers also. Another important point that happened in this quarter and that will play out over the next 6 months is our own 4680 Bharat Cell integration into our products. Now, the company is on track to commercially produce in our Gigafactory in the next quarter. And we've already now launched products, one on the Gen 3, the scooter, as well as the motorbike products with our 4680 cell. And the advantage is clear to see. We've been able to give much more energy, 5.3 kilowatt hour on the scooter, 9.1 on the bike, because this is a new format, innovation, like cutting edge 4680 format. So we can pack more energy, give more range and value proposition to the customer in lower pricing. So all of that advantage also starts coming in next quarter.
Let's get a couple of numbers. Then you mentioned motorbikes quite often. And, I would love to look at one of those motorbikes. Could you tell us how is demand? What is the number of motorbikes are you looking at selling? What is your current capacity? Because we want to understand how do deliveries start flowing out from here on.
See, our capacity in our factory, Nigel, is fungible between scooters and motorbikes. And we have an installed capacity of about 1 million. And as we, we're now with, let's say when we get to next quarter or so, we might expand that 1 million beyond also to deal with the new volumes that will come in beyond that. The market interest is very high on our motorbikes. In fact, most of the motorbike market is actually in the non-tier 1, tier 2 cities. And our store expansion was actually not just for our scooters, but it's a foundation to enable much faster growth of electric motorbikes in India. And the 4,000 stores that we have are actually going to be a very strong lever for accelerating motorcycle penetration. And if you think of how the scooter market evolved, we started...
Bhavesh, how many vehicles will you sell? How many motorbikes will you sell? We are trying to get a number out there. There's a big shift that's happening. What's your target?
See, my targets, I don't want to put a target out there, Nigel, but I can just say that motorcycles will gain faster adoption in the market than scooters.
Okay, how many bookings have been made? If you could tell us that.
For electrification have already been laid.
Okay, how many bookings have been made? Let's not talk about future, but let's talk about what has happened so far. How many bookings have been made? How much advance have you received, or how much EOI have you received?
Again, we have not shared these numbers publicly.
Which is why we ask you this number.
The interest is very, very strong. As you can see, you are asking me so many questions. So the interest is very strong. And with the store expansion, actually, the first question we got asked as we expanded these new stores was, our bike kab la rahe ho? And customers are really waiting for a good quality electric bike. And our bike, the Roadster X, actually builds on the Gen 3 platform. So it has all the advantages of the Gen 3, the Move OS 5, all the technologies that we've built start from motorbikes from day one.
All right, Bhavesh, just to clear a couple of numbers out, your customer base is different and your shareholders base as well could be different. The shareholders want to know whether or not you said that within the next 4 to around 6 months, you will hit that 50,000 units per month. Is that correct? So that means sometime in the first half of next fiscal, you become EBITDA positive, correct?
See, we are aiming for doing that very quickly. Now, there are some variables which we control and there are some variables we don't control. So our product, the supply chain, the gross margins are all under control, our operating costs. But if the market is aggressive, we will, since we have the leading gross margin profile and vertically integrated manufacturing, we will be aggressive in responding to market. So that might have some impact on gross margins in the near term. So our strategy remains to increase penetration from a position of strength vis-a-vis products and manufacturing.
The commentary that has been directed at you by competitors and what you have said about competitors as well, it doesn't look like, the market will be any more forgiving. So chances are that maybe your EBITDA plans can be delayed because there is so much heating up in the market, literally.
You should see actually the way January has been for us. Despite the heating up of the market, we've actually regained #1 position while expanding margins. January margins grew from 21% to 26%, gross margins. And this is on the back of our fundamental technology and manufacturing strength. And we are, the gross margin will actually continue to improve as Gen 3 rolls out and as R4680 cell comes into our vehicles. Now, none of our competition has this product, technology, manufacturing, integration strength. There is competition in the market. That's actually great for EVs because the more number of EVs that the customer is exposed to, their propensity to buy EVs goes up. And in the end, we benefit because we are the best positioned EV player in the market. So, बाकी सब लोग खेलेंगे, but फायदा हमें ही होगा long term में.
And, what is the updated market share for the month of January? You said you regained #1 position. If you could give us that number.
Market share January was about 26%.
26%.
And target market share, target market share in scooter EVs is about 30 to 35%. That's where we believe once all
you get there by when? You get there by when?
Over the next couple of quarters, as the store expansion, as Gen 3, etc. stabilize, we are expecting to be at around a 30-35% market share.
What about service? People say that Nigel, Bhavesh is telling you on TV that things are fine, but for us, we're having some problems. What is your data telling you? Service turnaround time is what?
See, our service turnaround time, which in October was 2.5 days, is now down to 1 day. And 1 day is better than the market, the industry average. So we are actually leading the industry on service timelines and service quality again. And this will only keep getting better. Our Gen 3 product actually has less than half the need for service than our Gen 2 product. So going ahead, the service excellence from our side will only improve.
All right. And the CCPA as well, you've given them all the information that they were seeking, is it? Or have they asked for more?
Yes, absolutely. No, we are cooperating fully, and they're looking at the whole industry as a whole to see how the industry's practices around customer service and customer support is evolving. And we are cooperating, and not just that, we are actually going over and beyond to share whatever needed to make sure customer experience is top-notch.
Okay, thank you.
All right, Bhavesh, thanks a lot for joining in. We're going to track you on that profitability question. For the time being, you're saying what's in your hands. You're focusing on that. Gross margins have moved to 26% in January, which compares to around 20%. Sometime you hope to turn profitable in the next fiscal year. And on market share as well, you're ready to walk the talk and, in fact, take as much as on offer. And services, you're saying there's no problem out there. We'll track you at that. Thanks a lot for joining in and giving us all of those details, Bhavesh. For the time being, though, I'll tell you what, we'll slip into a short break, come back, we'll continue our focus on the markets.
want you to recount the day that you walked into the State Bank of India at 22.
End of the day, my face was filled with black streaks because, you know, while you're changing the carbon, it comes onto your fingers. My hands were aching. My head couldn't add 2 + 2. First day was like one whirlwind. People don't work in the public sector. Total myth. In the last 4 years of my life at least, I never went to sleep before 1:30 in the night. I came back with 2 middle-sized suitcases and I had to clear all of those files. Yeah, exactly. Banks have the trust of the people. And the day they told me that somebody is coming to, you know, take your picture so that they can paint it, I deliberately put on a red sari. Giving up is very simple. It's a 30-second email you can put in order to resign.
Welcome back. Well, the fear today is that Trump is going to be announcing some tariffs on aluminum as well as steel, and that again has resulted in a lot of nervousness. The rupee as well has slipped and the dollar has seen some strength. Lata joins us to help us out with more details on that. Lata?
Well, it was a huge fall. Early morning trades, the rupee went very close to 88, 87, 95.50 was traded, and that's a fall of about 0.7%. But this is compared to, of course, the Friday close of 87.42. The 0.6% fall is not outsized if you look at the other Asian currencies. You know, they've all fallen between 0.8 and 0.18 at the lower end. So it's been in sync with other Asian currencies, and the fall has obviously been because of two sets of threats. One, that President Trump said over the weekend, on Monday or Tuesday, he'll hold a press conference to announce reciprocal tariffs. And the other separate was the tariffs on steel and aluminum products. So this was an initial knee-jerk reaction. The reason why the rupee recovered so much from 87.95 all the way to almost 87.55, you know, a 38 paise recovery, was largely because the Reserve Bank came and sold like no tomorrow. The reasoning could have been that early morning, the Reserve Bank usually makes calls to check whether this is, you know, a sale on behalf of clients. If it is FPIs who are buying the dollars, or if it is, you know, importers who are buying, someone, you know, or there is a dividend outflow. If it's something concrete, then they don't stand in the way. They probably saw that, you know, banks or speculators are just taking a position, anticipating selling of the rupee. And therefore, they came in really a huge size of offerings. We understand from dealers, of course. This can never be checked, the actual numbers, until, you know, 2 weeks later when the data comes out. But that strengthened the rupee to 87.57 levels, and it's more or less been stable at that level. But, you know, if you ask the market, the consensus is 87.50 to 88 was where people saw the rupee end March, and it's already there. So hopefully there shouldn't be too much of more weakness.
All right, Lata, thank you so much for making sense of that. We'll step into a short break. On the other side, the management of Rainbow Children's Medicare will join in to discuss their quarter going by. Welcome back. You're watching us here on Halftime Report. Let's chat with the management of Rainbow Children's Medicare. Ramesh Kancharla, who's the CMD of the company, joins in now. The stock at the low point of trade. The street is a little worried about the delay in expansions and the decline in average revenue per occupied bed as well. Thanks a lot, Dr. Kancharla, for joining in. And that's exactly the first question. You know, the occupancies have increased. What are you targeting at in terms of average revenue per occupied bed? Improvement in your operations, by improvement in occupancy, if you could give us a target for the next couple of months. And also on the delay, when do these now come on stream? And how far does that throw your growth plans back by?
Now, firstly, regarding the average revenue per occupied bed, Mr. Mangalam, this is about, we are a children's hospital. The RPOP is really not a reflection of how we perform. It depends on the seasonality as well as the ALOS. So we also parallelly look at the average revenue per patient. When we look at the average revenue per patient, which is ARPP, which is growing about 6 to 7% quarter on quarter. So that indicates that, the kind of a growth is there in the revenue generation per bed. So in this particular quarter, we have seen that there is an increase in ALOS. So that's probably kind of reflection of that 4% negative RPOP. So, and also we had a high base last year because not much of seasonal business last year. We are comparing with the last year, same quarter. So that is the reason for the RPOP payout. ARPP is probably the right indicator for a children's hospital.
All right.
Second is that the projects, I do not think there's a huge delay. I think Rajahmundry is supposed to start in kind of the last quarter of the current year. It got delayed for a couple of months' time because it's a regional hospital. Because of execution challenges, it got delayed for a couple of months' time. And the second project, which we said some delays are there, that's because in Coimbatore. So that's because we had to go for a revision of the plans with the Chennai Metropolitan, because of change in the some of the conditions. So we got our plans approved now, and project is executed. So some delays will be there. We expect it to be commence operations in about 24 months time from now. So that's about it. In Delhi, we got permissions for Gurgaon property, and I think we are all set for groundbreakings very soon. The one of the Sector 44, we are going to get it in a couple of weeks' time.
Okay, all right. Hi, Dr. Ramesh, and good to see you in as always. So just to give us a couple of numbers that the street looks at. One is on your RPOP, which should hover in this vicinity of around 54,000 odd, with occupancy in the high 50s. Should that be a broad number we should work with?
Yeah, I think that's what it is. We have kind of reached a fairly good occupancies now, and there is a scope to improve the occupancies, especially the new hospitals kicking in. I think we will be able to do a better occupancies, the blended occupancy. And in terms of the quality of business, as we kind of mature the new hospitals, especially hub hospitals, we'll have a better kind of realization.
Okay, all right. And if you could give us the absolute number, your current operational beds, say by the end of FY26, what will it be? And beyond that, FY27, what should it be like? There have been a few delays, but just for the fiscal years, if you could tell us 25, 26, 27, how will your number of beds move up?
I think that we are going to have a kind of a 250 beds addition in the calendar year of 25. And when we go into the 26, we will have some more kind of 200 beds. And also, as I said, we are kind of exploring some acquisitions. Probably that might add to it. Finally, the Gurgaon will come into the kind of 2.5 years from now. So this is the trajectory of a kind of overall 900 to 1,000 beds.
All right, Dr. Kancharla, and finally, before we let you go, I remember the last time you joined us, you did indicate, inorganic opportunities, one specifically in the Northeast and the other one in Hyderabad, where you were in advanced stages of discussion. So by when can we hear to, for you to close this? And if you could give us a rough sense of the number of beds that would be in those facilities?
I'm sure we'll be able to kind of give you more clarity closer to the dates. It is in discussions now, still not kind of concluded.
So it happens in this financial year?
Hello?
Does it happen in this financial year? Does it conclude in this financial year?
Very unlikely.
All right, we take that point. We will hold you on to that and perhaps speak after your fourth quarter results and then get an update on this along with the expansion plans as well. Always a pleasure speaking with you. With that, we'll take a short break, come back on the other side. We focus on the markets itself.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Welcome back. Well, it's time for our Growth Code, an initiative by Grow and CNBC-TV18 designed to equip you with valuable trading strategies. As we conclude this special initiative, CNBC-TV18's Prashant Nair sat down with SEBI's whole-time member, Mr. Anant Narayan, to discuss the significance of asset allocation. Let's hear him out.
We talk about equities, we talk about F&O, but there's also asset allocation at a broader level, right? When you pull back and look at what you should be really doing, whether you should be buying A stock or B stock or C stock. Well, is that the right question to ask, or is an important question to ask? I mean, where are you invested? What asset classes? How important is that to your mind?
So Prashant, as a former academic, let me quote a few papers. So 1986, there was this seminal paper by Brinson, Hood and Bauer, which actually went on to show that a predominant portion of the variance in returns across portfolios is explained because of asset allocation. Less than 10% was explained by stock selection or by timing the market. What that means in English is the following. As an individual investor looking for the long-term investment and being a responsible investor, you should be spending a lot of time in figuring out what your risk appetite is, the first question that we sought. And then based on your risk appetite, you have to create a portfolio, a diversified portfolio, which mirrors that risk return across all asset classes. You know, you've got to have equity, you've got to have debt, you've got to have real estate, commodities, fixed income, all of that put together, right? So you create that portfolio based on your risk appetite. Once you decide your asset allocation, that pretty much will determine 90% of the variation of the returns going forward. Some of our investors tend to spend an inordinate amount of time on picking stocks or on timing the market.
99% of the investors.
That's right. So it's a bit of a Pareto principle where we spend inordinate amount of time on something that matters very little. And we don't spend enough time on what really matters, which is doing a thoughtful asset allocation.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. To get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Points lower on the Nifty, now virtually closer to the lower end of today's trading session. The mid-cap index hasn't even burst, so good time to actually, look at the F&O setup right now. The Nifty is broken below that 23,350 mark as well. The mid-cap index, telling you the story of the day is the advanced decline lines. We had the red line above the green line for most part of today's trading session, and now they are the widest apart that they can be in this session so far. So you have, the red line indicating about 2,200 stocks which are in the red, for about 400 stocks which are in the green as well. If you're looking at some important levels for the market itself, the 23,500 call fairly active, telling you levels upwards of 23,500, 23,600 would face a lot of supply. We're also, as the market falls, seeing action on the 23,400 call. There's the premium here, 135 rupees, telling you again 23,550 to 23,600 would see a lot of supply. However, all is not lost for the bulls. 23,400 put, which is still 50 points above where we are right now, is seeing traction, a premium of 150 rupees, telling you that maybe we could see some support coming in around that 23,250 odd mark itself. And that ties in technically as well. The Nifty 20-day moving average very close to 23,300. And on the way up, we have the resistance at 23,750 for a 50-day moving average standpoint. Similar is the case with the Nifty Bank. We're right in the middle of this 20 and 50-day moving average zone, so we'll keep an eye out on that. Also watch for a couple of stocks where there is unusual open interest activity. A lot of short build-up seems like it's taking place in names like Oil India as well as Alchem Lab, whereas some of these FMCG names which saw some weakness in the previous trading session are now seeing some positions being unwound, and in that we have Britannia, which is seeing some short covering. We'll take a short break on that and come back. On the other side, we have Manisha Gupta joining in with not Nigel D'Souza, but Najla D'Souza, who is the director of Brazilian Beans and Pulses Institute.
Welcome back, and joining us now is Najla Souza. She's director at IBRAFE, which is Brazilian Institute of Beans and Pulses. Najla, hi, thank you so much for joining in. And, would you say that it's a bit of a concern when it comes to US and Indian policies, because Brazil is just about to become a new partner when it comes to pulses exports within India, but it is about the short-term, not consistent policies, which really seems to be becoming a talk of the town.
The challenges are inherent to the trade activity in any product with any country. With India specifically, the trade policy keeps us a bit uncomfortable because we cannot think long-term and program long-term. A big example for this is the urad. We exported 70,000 metric tons of urad to India last year, which brings to India a big advantage on having a new supplier, because nowadays only Myanmar can export urad to India. So we are the second supplier, the second option. This brings advantages on price, so more competitivity can bring better prices to your market. However, the trade policy not being long-term, we cannot encourage the farmers to plant so much of this pulse, because if we don't have India to buy, we don't have anyone else. So it can be a big financial loss to Brazil. In this case, what everyone is doing is being more cautious. We are also thinking short-term and programming ourselves to comply with the regulations, but we want to continue supplying, and it's difficult to do that without the right policy in place.
Oh, well, absolutely. Najla, in the last some years, India has partnered with more countries like Australia and Brazil and Argentina as well. And Myanmar has been a partner for India for the last couple of decades now, and the country isn't very comfortable with new countries now coming or becoming pulses exporters to India.
Of course. However, we are here to contribute. We look into the India market not to replace Myanmar, but to fulfill the entire demand. The message we got from your ambassador here in Brasilia, since he arrived here, Mr. Suresh Reddy, was that there is much more that can be consumed by India. The consumption is increasing and they need new suppliers. It was never a discourse of replacing Myanmar. In this spirit, he encouraged us to start promoting other pulses into India, especially the pulses we consume in Brazil. Because from those 3.3 million metric tons I mentioned before, we produce around 2 million metric tons of bean that only we eat in Brazil. I think you may have the opportunity to have it when you came here, the Carioca bean. And we are starting a project to promote this bean to be another option into the houses of people from India.
Well, Najla, pulses has been a bit of a concern in India, and we've seen budget as well address that. And yes, as you said, Brazil and India numbers and synergies have been increasing as well. What would you say is the strategies, or what we should strategize as between the two countries when it comes to pulses?
It's like a treadmill. So all the pulses in Brazil, we are all about diversification, because we produce a big quantity of one specific pulse, and we want our farmers to produce different kinds of pulses to help them with their land. They need to diversify their production, plant soybean and then corn and then some pulses, and do this crop rotation in their areas. So we look into the international market, and specifically India, to bring all of those pulses. So IBRAFE's work is focused on promoting Brazil as a supplier of pulses. And for India, we look first into sensibilizing the government, and we have a big help from our embassy and all of our diplomats that are in Delhi. and in having a big and deep dialogue with the government to sensibilize them that this is a win-win situation. And we work here in Brazil promoting these different pulses to a farmer. I always ask everyone to imagine planting something that you don't consume. This is the case for urad. This is the case for tur. This is also the case was also the case for sesame seeds a few years ago. And the farmer in Brazil is very open-minded to try a little bit of these crops. And if he's successful and has a profit, he will keep going and doing this for as long as they can. Pulses is a very unstable market. We are very dependent on the local scenario in India and our other consumers, but we are always listening to what's going on and passing this message to the players in Brazil, the farmers, the exporters and traders, the industries, so that they stay tuned and make the right decision with the scenario that's the reality in each country.
All right, thanks a lot for that, Najla, as well as Manisha, for taking us through that interesting conversation. Well, for the time being, though, we've completely run out of time on this edition of Halftime Report. We leave you with the news that the markets are at the low point of the day, sitting with a cut of around 200 points. Business Lunch will take the action forward.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
US President Donald Trump's comments on imposing more tariffs spooks the street. Realty and energy are the big drags, while FMCG manages some green. Mid-caps fare worse. Rupee falls sharply in early trade on Trump's reciprocal and steel tariff threats, but dealers say big RBI dollar selling brings down exchange rate from 87.95 levels. Ahead of Modi-Trump meet, M&M CEO Anish Shah says that the US is an important market and they are open to global competition in the EV, but Make in India is the focus. On domestic front, he is upbeat in terms of growth, especially in the rural markets. Rashmi Saluja, the chairperson of Religare Enterprises, is ousted by the shareholders at the AGM. Meanwhile, suitor Danny Gaikwad is asked by the Supreme Court to deposit 600 crore rupees to back his proposed bid. A reserve fund has been created in the budget to meet shortfall in subsidies for LPG and fertilizers. Collections from oil cess will be used for this even as FinMin examines the LPG compensation demands. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18. I'm Vinny Motiwala coming in from the CNBC-TV18 Motilal Oswal studios. Thank you so much for tuning in as always. And look at the markets today. Not a pretty picture coming in, right? We did know that there is going to be a factor in terms of a negative opening that we were expecting from the Indian markets, and that is what has happened. But we've seen a further decline actually coming in for the Nifty 50. Nifty is trading below the 23,500 mark, 23,350. Around that mark is what the Nifty is trading at. Day's lowest point down 8/10 to 0.9% in trade. Let's look at the contributors which are actually dragging the market today. You know, we have HDFC Bank, Reliance, which is an heavyweight, so that is seeing a fall. We have Bajaj Finance, Infosys. So these are the top drags. We're seeing some bit of that positive move coming in today from Britannia, HCL Tech, Kotak, as well as Bharti Airtel. But clearly, sharp and heavyweights are seeing a drag coming in, and that is why that fall even coming in for the Nifty 50. Let's look at the mid and small cap broader markets today. They have seen an underperformance coming in. Nifty mid cap is down almost 2% in trade. Small cap also similar trend. We're seeing a very, very sharp fall coming in small cap as well, trading at the day's lowest point, down 2.3%, 392 points decline approximately for the Nifty small cap. Now, what are the top drags today in terms of sectors? We have the realty that is seeing a fall coming in. So Nifty realty is down almost 3% in trade. And we have Nifty Metal also, which is among the top sectoral losers today, down 2.5% in trade. Now, why is Nifty Metal in focus, and why is it all these metal stocks that are seeing a bit of a jitter and bit of a fall coming in today? We have seen that Trump has actually planned to announce some 25% tariffs on all steel, aluminium and aluminium imports. Now, what does this actually mean for the Indian metal sector, and why are we seeing this impact coming in? Nigel is joining in with us to give us all these details.
Well, President Trump has announced his plans to implement 25% tariffs on steel as well as on aluminium imports. Remember, in reaction to Trump 1.0 tariffs, initially we did see a surge in hot rolled steel prices as well as in Midwest premium on aluminium. However, the reaction to the metal index today is negative as risk of sentiment is prevailing. The fear is that tariffs will be detrimental to sentiment as well as demand globally, which is not good for stocks. Though there are many variables at play and all of them appear to be playing out at once. Well, let's focus on the steel space first. The US imports of steel was around 28 million tons in 2024, with bulk of the imports coming in from Canada, Brazil, Mexico, South Korea, as well as from Vietnam. Now, Indian steel producers, their exports into the United States is very, very minimal. But the fear is that the steel that was earlier imported into the US could get dumped in various corners of the world. For example, Vietnam exports to the United States, well, that has doubled in the last calendar year to 1.3 million tons in 2024 from around 500,000 tons in 2023. However, some believe that this will be another reason to strengthen the ferries companies' demand for safeguard duty. Remember, the steel companies here in India have been rallying for some kind of safeguard duty, and this could strengthen their plea. Moving to the aluminium space then. The US imports of aluminium was approximately 5.4 million tons in 2024, with Canada contributing bulk of it. Nearly around 58% of the aluminium imports into the United States came from Canada. How does it impact Indian aluminium players though? Well, the rupee will see some weakness, as well as the Midwest premiums could move up. So aluminium producers could gain on pricing, but there could be a ripple impact on demand, which will hurt companies like Novelis, in turn hurting Hindalco as well. Now, things are still very, very fluid. As there is clarity awaited on the date of implementation of the tariffs, will there be some concessions given to various countries? And also, there could be some reaction coming in from some of these countries, and they could levy tariffs as well. So things are fluid. For now, negative sentiment as well as pressure tactics from Trump, that's what's weighing on metal stocks. But we'll have to see how things pan out from here on.
Absolutely, Nigel. Thank you so much for that. Surely you'll watch out for how things are going to be panning out. But let's move on to some earnings front. M&M reported a healthy Q3 number with good improvement in margins and strong volumes for auto as well as the tractor segment. In fact, we caught up with the company's group CEO and managing director, that is Anish Shah, and he expects that the EV margin is to match up to the ICE margins over a period of time. Listen to what more he had to say.
Margins will be slightly lower to start with because you would expect that with a new product, also because it's electric. And we will be showing margins separately for ICE versus electric. And over time, they will catch up because that's where the investments come in for. And we would expect margins to be similar to ICE in the longer run, but it will take us time for us to get there. Our target, and we have been fairly audacious in what we do, is to get to 40% in every segment we play in. So yes, we have a while to go, but that is part of the journey. So we do see a lot of green shoots in rural, as we've talked about earlier as well. Yes. For the fourth quarter, we expect 15% growth year over year, and that's a very healthy growth in this space. For next year, a little early to say as yet, because it will depend on this particular season and how that goes as well. Okay. But overall, we remain fairly optimistic about where rural is right now and prospects for a tractor business next year.
And on to some more earnings. AkzoNobel reported a muted quarter with moderate volume growth and saw gross margins coming under pressure. We spoke to the CMD of the company, and he said that a very early stages of strategic review of the business with the recipe to sale of the decorator paints business. Now, they are furthermore adding that the focus on business is to deliver strong growth and profitability. Listen in.
You know, as far as the entire strategic review is concerned, I still think we are in fairly early stages, really. At this point of time, it's a global strategic review. I think there are various reasons and as I said earlier, the idea was to see how can we catapult the brand, to a top 3 position, which is what we aim to do globally. As far as the bids are concerned, I mean, honestly, that's something that I do not have a clear update on, and it's not fair for me to sort of speculate at this point of time. There is a process. How long will it take? It could take anywhere between 6 months to 9 months, the way I see it. Could be faster, depending on how quickly certain parts move. As far as delisting, etc. is concerned, at this point of time, no, I think we continue to be as is. We continue to run our businesses. We've given commitments to our business partners, our customers at large, that we take responsibility as a responsible company for whatever we do in the country. Our focus is continuing to, under the sort of conditions that you're seeing, and you explained earlier when you opened across the businesses, making sure we deliver strong growth and profitability.
Okay, and the government budget has created a new oil industry reserve fund to tackle the subsidy shortfall for LPG as well as fertilizers. Sapna Das is joining with us to give us more details on this one. Sapna, good afternoon. What is the update you're picking up here?
Yeah, well, these are the budget documented. These are budget documents where this has been documented. So basically, an OIDF, that is the Oil Industry Development Fund, has been set up by the government. This will have an outlay of around roughly 2 years put together, like the current FY25 revised estimates as well as BE estimates for next year. It's around 35 to 36 odd thousand crores, and basically the specific aim is to meet any kind of a fertilizer or LPG subsidy shortfall. That's the aim, since it's a reserve fund like the GST compensation fund or the AIDC, and there are like 10, 11 more of them. The aim and the objective of this fund is very specific. The usage is going to be very specific. Now, what do we mean by LPG subsidy over here? Let's keep in mind this is not pertaining to the market losses that have been incurred by OMCs. That's going to be a separate it's going to be a separate examination altogether by the Finance Ministry. So this will deal particularly with the PM Ujjwala gaps, if any, that come up after what has been allocated in the budget. Also given to understand that the strategic oil reserves that we are talking about, some around 5,300 odd crores, has already been allocated in this year's revised estimate. That money is also going to flow out from this new reserve fund which has been set up. The important part also here is that there is no new cess that is being levied by the government. There's an existing oil cess that has been there for a very long time. So those accruals, that revenue stream is now going to be channelized for this, and it's not going to come into the budget stream. It's not going to come into the revenue stream, but it will come under the central, this kind of a reserve fund. Having said that, I just mentioned very quickly about the LPG loss cash compensation demand by OMCs. Well, that we have given to understand is now going to be examined by the Finance Ministry. Probably there will be some re-verification of the numbers. Around 35,000 crores is what the OMCs have sought. So we'll have to wait and watch and see how that really pans out. If that demand is actually met, maybe it will come through in one of the supplementary demands for grants. But this reserve fund is specific and for the purposes that I've just explained.
Okay, absolutely, Sapna. Thank you so much for the update on that front. But quickly marking the numbers of Kirloskar Industries, EBITDA down 24.6%, profit of the company down 46%. Let's pull up the chart because we've seen a dip coming in when the announcement was wait for the earnings. It's down 5%, more than 5%. Now also it's down 4%. We're seeing a contraction in margins of 400 basis points approximately on a year-on-year basis. Keep an eye out on Kirloskar Industries. You're seeing some bit of a pressure because of earnings. On that note, let's slip into a very short break, and after the break, we'll tell you all of that's happening on what's on the cards for Prime Minister Narendra Modi as he embarks on a 2-day visit to France. So stay tuned in.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back to Business Lunch on CNBC-TV18. Let's move on. Prime Minister Narendra Modi has left for a 2-day visit to France starting today. As a part of his engagements in France, PM Modi will co-chair the AI Action Summit on February 11th as well as 12th. He will also attend a state dinner hosted by President Emmanuel Macron later tonight and address India-France CEO Forum. On February 11th, he will inaugurate India's new consulate in Marseille before he is going to be visiting international thermonuclear experimental reactors. So that's an interesting lineup there. Now, ahead of the global AI summit, French President Macron spoke exclusively to First about the rapidly evolving world of artificial intelligence and the need to ace the race. First Post Palki Sharma began by asking him about the need for tech sovereignty. Listen in.
Yes, absolutely, and that's what we're already doing. India, of course, has a much larger population than we do. You mentioned it. It's a huge power, very dynamic on the demographic front. And India and France is leading. So we have the US and China far ahead. And then you have France, the UK, India, the UAE, and then Germany, and the others. So we want to work together on AI. And Prime Minister Modi, you were showing these major companies earlier. Prime Minister Modi is facing the same issues. They're all American, and there's a few Chinese players in that space. And he wants to benefit from the innovation, but he wants it to also be happening in India. Sometimes, if there's non-cooperation with these players, then you need to be able to take things forward on your own. We saw it with COVID. When things go wrong, people look inwards, and that makes sense. If you depend on others to produce medicine or technology, then things can go wrong. So we need that partnership. because we have shared interests and because we have the same worldview, focused on friendship and also interests. So together we will develop technological sovereignty. We want to train our talent, that they can go abroad, but they should also be at home. And we want to create data centers in India and in France with sustainable energy. And we want our own language models in France and in India. We don't want to depend on the US and Chinese models, and we want applications in all fields.
And after his brief France visit, PM Modi will visit the United States in what will be his first visit to the United States after Donald Trump returned to the White House. Sources tell CNBC-TV18 that Trump is likely to host a dinner for PM Modi on February 12th. The two leaders are also expected to have a bilateral and a delegation-level meetings. PM Modi is likely also to meet up with the top CEOs during the two-day visit. Okay, on that note, we're going to step into a very short break, and when we return, we will get you all the latest updates coming in on the Aero Show that has begun today in Bangalore. Welcome back and thanks for staying tuned into Business Lunch on CNBC TV18. Let's move on to some national news updates now. The Aero India show that has taken off in Bangalore today. We have CNN News 18's Akash joining in with us from the location to tell us more about this one.
The biggest defense and aviation expo, Aero India 2025, has begun here in Bangalore. The event is big, with more than 900 exhibitors taking part. We have representation from more than 80 countries. Close to 40 defense ministers from all across the world are taking part. And we have a confirmation of close to 30 service chiefs from all across the world. The first day is a mix of a number of activities where we have seen that how Raksha Mantri Rajnath Singh inaugurated the event first, followed by an air show where we saw a number of aircraft taking part in different maneuvers. And then we are going to see CEO's roundtable today. The event is going to focus on Make in India approach of the Defense Ministry, and we are going to see a number of aircraft, drones, UAV technology, weapons, missiles, and a number of related things. On one hand, we have Su-57E of Russia taking part in this event. On the other hand, we have F-35 of United States. This event is also seeing a lot of excitement for fifth generation aircraft, given the fact that while we have Russia and United States taking part with their fifth gen aircraft, India is also working on its fifth gen aircraft program, that is MCA. We have seen that how Raksha Mantri Rajnath Singh has inaugurated the one-by-one prototype model of MCA. And in the coming years, we are expecting that this program will see a success and India will have its own fifth gen aircraft. This is a 5 days event. The initial 3 days are for the exhibitors, for the companies, and in fact for the business. And remaining 2 days will be open for public, where people can come and can witness a number of technologies and a number of equipments, a number of aircraft here in this particular event.
Okay, on that note, we're absolutely out of time on this edition of Business Lunch on CNBC TV18. And as we wrap up, we leave you with the visuals of President of India, Draupadi Murmu, as she arrives in the Mahakumbh to take a holy dip in the Sangam.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग
Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I am Reema. With me is Vivek. The Nifty is below 23,350 as it stares at a cut of more than 200 points. We're down for the fourth day in a row. And just look at the weakness in the broader markets. The mid-cap index down over 2, small-cap index down nearly 2.5%. We're talking about 400 stocks advancing and 2,200 stocks declining. Hi.
Good afternoon, Reema. Like you mentioned, it's the weakness in the broader end of the markets that's actually exacerbated in the last half or 1 hour of the session. But we have quite a lot lined up on the show. Let's start off with the top headlines. US President Donald Trump's comments on imposing more tariffs spooked the street. Realty and energy are the big drags, while FMCG manages some green. Mid-caps fare worse with over 2% decline in trade.
Varun Beverages reports its fourth quarter earnings for the calendar year, largely in line with estimates. The company's sales volume surged 38%, while revenues and profits also see a healthy year-on-year growth.
Alkem Labs under pressure today as the management in the Q3 conference call says EBITDA margin of 19% in retained for FY25, despite reporting a near 22% margin in 9 months of FY25, implying a muted Q4 performance.
VATech Vibhag revenue grows in double digits in Q3, but margins come under pressure. The company secures an important order worth 3,000 crore rupees in Saudi Arabia as a part of a consortium. The management tells CNBC-TV18 they will execute 1,700 crore out of this order.
Delivery under pressure today after the stock disappoints the street. The results disappoint the street. This is seasonally strong for the company. Company's express parcel margins declined 500 basis points. Profit sees a 113% jump on a low base. Welcome to Midcap Radar. As you can see, the broader end of the market's under significant pressure. Whole host of stocks giving up gains. The entire realty pack under quite a lot of pressure. The metal index, like we mentioned at the start, seeing significant selling pressure today, and that pressure has sustained even as we start the second half of the trading session. But this is our special segment, Midcap Movers. Vamakshi is standing by the wall to take us through the midcaps that are moving around in the session.
Well, absolutely, Vivek. Not a great day for trade for the mid-cap index. It's red across the screen. The advanced decline ratio also in favor of the declines. Mid-cap index trading at the lowest point of the day. Let me first bring up all the stocks that are declining in the trading session today. That list includes NetWeb. That stock is seeing significant pressure, down nearly 6%. GM Financial, Kaplan Point, as well as SCI are all of the counters that are seeing fair bit of pressure today. Apart from that, there are a whole host of healthcare stocks that are declining in trade today, which includes Poly Medicure. That stock is down nearly 7%. Max Healthcare is seeing a decline of almost 6%, trading at the lowest point of the day. Alkali Metals as well as Ipca Labs are some other counters that are down and out in trade today. Realty stocks are also seeing significant pressure as of now. When you look at Soba, that stock is seeing a fall of almost 5%. Brigade Enterprises, Godrej Properties and Prestige Estates are all down and out in trade, trading close to the day's lowest point. Apart from that, several stocks reacting to the numbers as well. India Pesticides is seeing a fall of almost 5.6%. Oil India, Delivery, Sun TV are all reporting to a weak set of numbers. On the flip side, let's also look at the stocks that are gaining momentum in such a weak market. That includes Mazgaon Dock Ship, that is up nearly 3%. PNC Infra and Reddington are also seeing good gains of nearly 3%. And Garden Reef Shipbuilders also up and away in trade today.
Thank you very much for that. Get into a break. On the other side, we'll invite the management of Rishabh Instruments to discuss their Q3 numbers. Stay tuned.
उसमें हम पीछे रह गए, तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे। जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live.
Welcome back. Rishabh Instruments is the first management on our show now. The company's reported a good set of numbers. The company's top line has come in at 14%, much ahead of the 9-month revenue growth of 4.1%. And even the commentary says the worst is behind them. Dinesh Musalekar, Group CEO of the company, is now with us on the show. Thank you very much for joining in. This is Rima here. That's the first question, right? What helped you achieve this 14% kind of a top-line growth? Because 9-month revenue growth is only 4.1%. Is it sustainable? Are we looking at double-digit revenue growth from here on for Q4 and even FY26?
Yeah, good afternoon, Rima, and happy to be here. Yeah, I think we look at our business as always into two baskets. One is electrical side of the business and aluminum die casting side of the business. Electrical side of the business, our Rishabh domestic sale was always good, even in the first 2 quarters. And in the first 2 quarters, we had relatively lower exports from Rishabh India, which is started kicking in the 3rd quarter. So that's how you see the positive trend going in the third quarter. And our other electronics business big unit, which is in Poland, Lumel SA, this has been a big success. And last more than 3 years, we have been sustaining a growth of 20% top line with a healthy EBITDA of 20%. So these two businesses together have put in a really good show. And on the question of sustainability, yes, on the electronics business, we are absolutely confident it's sustainable and it's growing. We have a huge project pipeline to support that. And we see positive results coming out of our markets in Spain and Germany, which were a little bit behind in the first couple of quarters. And coming back to aluminum die casting business, we are moderating the sales growth there. We are cutting it down, in fact, to get rid of the businesses which were not profitable for us. We talked about that in the previous interviews and calls. We had a lot of contracts which were signed pre-COVID era when the situations were very different and they were all watertight contracts. We have been able to successfully renegotiate these contracts again with our automotive clients. There's a lot of turbulence going on in automotive industry in Europe, as you all are aware of that, because of Chinese competition, because of government policies, etc. So we have been able to navigate through those difficult time to reduce our losses there, and it's still work in progress. It will take a couple of more quarters to have it sustainable. We are driving a lot of cost reduction activities to improve our efficiencies in-house. At the same time, renegotiating the contracts with our clients. Two major clients we have been able to renegotiate, which contributes to about 50% of our automotive, 50% of our entire die casting business. So things are on a good track, and we are pretty confident that we will continue the trend in the coming quarters.
Dinesh, you've answered most of the questions that we had, especially when it came to the Lumil Alucas business. So renegotiated contracts, what is the percentage increase from the earlier contract to the current contract? Has any portion of it already been accounted in Q3? What is the order book there? What is the accretion that you're expecting in the order book post the renegotiation? And at what level of revenue or what level of top line growth will you break even at the EBITDA level?
Okay, it's a lot of questions there. Okay, this is, as I said, it's a work in progress. So we have these contracts, the price corrections have been done, and they have started kicking in from, I would say, last couple of months, and some of them will come in the month of Jan. So this is a period of about 9 months to 12 months, which we have agreed based on different entities that we supply, different contracts we supply. And, break even, we should be getting in less than 2 quarters time. And if I look at those two businesses, the non-automotive is positive, and automotive is driving that. So we are not so much harping on increase in the sales growth. So if you look at, we have got a modest minus 2% on the top line. So that is kind of a calibrated. So the percentage of increases from our clients which we have got are ranging from 10% to about 30% on the selling price. It differs from contract to contract, and also we have agreed to terminate some of those contracts during this intermediate period of 3 months to 9 months. We will be supporting them with the increased price so that they can relocate their projects to probably China or wherever they want to take them. So this is all work in progress.
Dinesh, out of time, but points well made. So the aluminium die casting business will achieve EBITDA break-even in the next 2 quarters. And this is an ongoing process which will go up to 3 quarters. Thank you very much for joining in. That's Rishabh Instruments for you. Get into a break. On the other side, we'll connect with the management of Gokuldas Exports to discuss their Q3 numbers.
On YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
back. Gokuldas Export is the next management on our show. The company's reported a strong set of numbers. Top line has jumped by 78%, but that's aided by acquisition. Organic revenue growth is closer to 19%, but there has been some margin contraction. We have with us Sivaram Krishnan Ganapati, Vice Chairman and Managing Director of the company, now joining in. Thank you very much for joining in. So for the first 9 months of the year, your like-to-like organic revenue growth has been 19%, and your top line is closer to 2850, 2900 crore rupees. Can you sustain this organic revenue run rate of 18, 19, 20%, and can you hit a top line of 4,000 crore rupees for the full year?
So obviously we are quite keen to deliver growth, and we are seeing a fair amount of traction from the customers. So demand is not a constraint for us, and sustaining this kind of an organic growth is quite possible, and we are working towards that. So very much possible. And I think the prognosis for the next 2 to 3 years will also be very strong, given that the geopolitics is also working in our favor. So more business will come out of, say, Bangladesh, China, Vietnam, and all of these regions, which are either becoming expensive or politically becoming unfavorable. So all those benefits are coming towards us. So we are seeing fair amount of traction. So demand is not an issue. We're setting up a lot of capacity. So this kind of growth is possible.
Mr. Ganapati, give us a sense and as well as an outlook as far as margins are concerned. Sequentially, there has been improvement year on year, a bit of a decline. Is there resumption as far as price realization is concerned? Q4 and FY26, where will margins trend?
So the margins are impacted by some of the acquired entities which are still performing at a lower margin than ours, even though in the acquired entities, the margins are improving quite a bit. So dramatically, we are seeing some improvements. As far as the main Gokuldas is concerned, some of the margins are also weighed down by the rapid expansion that we are doing. So several new factories have employees who are coming in, and they have not yet become revenue generating. So we are carrying extra cost for growth. And I think as that becomes mainstreamed, as in they start contributing to revenue, the EBITDA margins will improve. Further, I'm seeing that, as we get into the next year, when demand picks up further, our ability to, push back on pricing, our ability to, get scale economies also will help us improve our margins. We are targeting a 1% improvement, on margins as we go forward.
You said the outlook is strong for the next 2 to 3 years. You laid out an aspiration to hit $1 billion in terms of a top line. Do you think you can get there in 3 years?
So we're working towards it, and obviously, that.
But is that a realistic timeline, sir? 3 years.
So I don't want to comment on timeline. Obviously, that's something which if we grow at the rate at which we're growing, and some of the acquisitions play out, we are keen on hitting some of those numbers. We will see as early as possible to hit those numbers.
Mr. Ganapati, a couple of questions. Number one, given the geopolitical situation, are you seeing increased demand for Indian products, especially given the fact that Bangladesh, etc., are facing internal turmoil? Number two, are you worried about tariffs? What is the current tariffs? Do you expect higher tariffs to come through? And number three, how does the weakening rupee actually impact you?
So are we seeing increased business thanks to Bangladesh and other regions? Absolutely. We are seeing a lot of incremental business. So are we anticipating a better business flow on account of tariff? The answer is yes. As long as if there is a tariff across the board on all supplying countries, I don't think it will matter. What matters is the relative tariffing. So if relative to some other countries, India's tariff growth is lower, I think we'll still stand to benefit. And we have operations in Africa, which goes duty free. So any tariff, imposed on other regions will certainly support exports from Africa. So that's going to be another plus point from that standpoint. So all of these are auguring well. What is your third question?
Another question which we want to ask you, we just saw, and could you give us some context as well? We understand that there was a resolution to grant ESOPs. However, institutional investors have gone ahead and blocked this. Give us some context. What was the quantum and what exactly has transpired?
No, so ESOP is a way to reward the management team. We have a very large management team which runs various factories, various operations, manages customers. And Gokuldas Exports has pioneered, in our industry at least, offering ESOPs to its key employees. More than 300 employees are covered under the ESOP scheme. And I feel that the board has reaffirmed its faith in the management team, which is a large management team, and wants to keep ESOP as a way to reward its employees to deliver shareholder value creation. The last one, we had some challenges. Shareholders had certain issues with the ESOP construct, and we are, we respect shareholders' value. We needed special resolution approval from shareholders, which meant that 75% of the shareholders approve in favor, and I think we had 63% approve in favor. So we will take the inputs from the key shareholders and appropriately tweak the ESOP related ESOP offer, and then go back to the shareholders. I think, as far as the policy is concerned, we are firmly behind it.
Thank you very much for joining in. That's Gokuldas Exports for you. Let's get to our mid-cap spotlight stock then. It's Tilaknagar Industries. Mangalam is here with the latest.
Well, the reason why the stock is lower in today's trading session is because the company is informed that the Bombay High Court has dismissed the company's plea in a trademark dispute over the Mansion House brand. Remember, the Mansion House is one of the key brands of the company under which it sells, brandy, flavored brandy as well as whiskey. The company had sought injunction against allied blenders into manufacturing, bottling or selling alcohol products bearing the trade name Mansion House or Savoy Club as well. To that, the Bombay High Court has quashed that order right now, or dismissed the company's plea, and that in effect means that it has allowed allied blenders and distillers bearing the Mansion House brand be launched in West Bengal itself. So that's something that is worrying the street. But the company on its part has said that this order granting the permission to ABD to go ahead and launch these products will not come into effect for the next 4 weeks, and in those 4 weeks ABD cannot launch new products under that name in any case, and during which period the company will go ahead and appeal against this order itself. On the expected financial implication of the same, of course, if there are two companies having the same brand, there could be some sort of competitor action that may happen. But then again, because it is also legal and there is a lot of uncertainty around, the company said status quo remains on their uninterrupted use and sale of the brand Mansion House, and they do not expect any financial impact on the business on account of this. So we'll see how this plays out, whether they go ahead, appeal against it, and while they do appeal against it, what the final verdict on this is.
Thank you so much, Mangalam, for taking us and bringing us up to speed as far as Tilaknagar Industries is concerned. The stock locked on the lower circuit. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Hello and welcome to Your Stocks live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in. Markets today, we've looked at them as well, and they've been quite subdued in today's trading session, down almost 1%. No sort of recovery that's come in the markets as well. 200 points down in trade is what the Nifty is trading at, 0.9% of decline. Mid and small cap, that's where the clear pressure is coming in today. And Nifty mid and small cap both are seeing a downtick of almost 2%, more than 2% in today's trading session. Almost near the day's lowest point is what the market is trading at. Nifty Bank also is trading in the red, so nothing exciting happening in the markets. But we do have our experts joining with us who are here to solve all your stock-related queries. And joining us today, we have Aditya Agarwala, the Head of Research and Investment at Invest4Edu, as well as Gaurang Shah, Senior Vice President at Geojit Financial Services. You're joining in with us today, this afternoon, to solve all the stock-related queries. Good afternoon, gentlemen. Thank you so much for joining in with us on the show, as always. Monday blues clearly creeping in today. Gaurang, you are surely wearing a shade of blue. Aditya, what's your take on the markets? You have no blue. Are you expecting these sluggishness in the market to continue? What are the levels that we're expecting today?
Hi, Vinny. Good afternoon. Thanks for having the show. I think markets will remain in a range. I don't see too much of a selling pressure from here on. We corrected the previous week. This week, we're also starting on a weak footing. 20 DMA is something that I'm eyeing very closely, which is close to about 23,200 to about 23,300 on the downside. So if these levels are held between 23,200 to about 23,300, I think so you will again see a short covering rally in the market. On the upside, 24,000 is going to act as a hurdle. So between 24,000 on the upside and maybe 23,200 on the downside, markets will continue to oscillate. And within the pockets, there will be sectors which will continue to outperform. And banking is something, Vinny, I think should be looked at after a decent correction. On the downside, 49,000 is a 49,600 is a very strong support. On the upside, I think so 50,000, 51,000 is something that can be seen. So from here on, I'm a little more constructive on the banking stocks. And the consumption play, I think these are the two sectors which will outperform. Not too bearish on the market at current levels.
Not too bearish. Banking and consumption side is what you're looking at. Okay, thanks so much for that. Let's get started with the stock-related queries then. We have a whole host of them coming in. And the first one today is from Sambi Reddy, who's writing to us from Andhra Pradesh, holding 120 shares of Reliance Industries at a price of 1,480 rupees per share. He can hold his shares for the next 3 to 4 years as well. He's a long-term investor. Just wants to know whether it makes sense to continue to hold these for a long term, and could he expect good returns? Let's take it to you first, Gaurang. Good afternoon, and what's your view coming in for Reliance Industries long-term investor?
Well, thank you very much for having me on the show, Vinny. I hope my blue gets spread onto the market as well, to be very honest, with the kind of beginning that we've seen this Monday morning. But having said that, on Reliance Industries, we've been constructive for a pretty long period of time. We continue to maintain our positive stance on the fundamental side. 1,500 plus are the levels that we are looking at. And stock trading somewhere close to about 1,250 currently as we speak. From here on, the downside looks protected given the kind of situation that we have in the market, as well as the earnings that was delivered by Reliance Industries. So if you got invested at 1,400 plus levels, if you have investable from a long-term point of view, and I'm sure you have 2 to 3 years kind of a time horizon, I would advise you to add on to it more. And if in case somebody wants to make a fresh investments in Reliance, from a long-term point of view, we would advise that as well.
Okay, advising to add on to the current levels, can make fresh investments as well, and this is for long-term investors' view. Aditya, Reliance Industries, when you look at it, a bit of that muted performance has come in. You know, we're not seeing much of a move in the last few months. What's your chart indicating? Long-term investor, can they continue to hold this? And
Definitely,
even short-term, then what's the view?
Definitely, Vinny. I think both short-term, long-term people should latch on to Reliance Industries. In fact, I am of the view that if one stock you're looking at from the Nifty 50 basket that you should buy and hold on to it, Reliance is something that you should definitely latch on to it. At current levels also, like Gaurang said, downside is protected from here on. Maybe 1200 is something on the downside, which is maximum that I see. We're almost at 1250, 1240 odd levels. On the upside, I think so easily 1400, about 1500 is something that I'm eyeing on Reliance. On short-term, if we're talking about little longer term, maybe 2000 is something that I'm looking at Reliance. So this is one stock that I'm betting big on from the Nifty 50 pack, and I think so one should definitely build position in Reliance at current levels for both short and medium term and long term.
Okay, Reliance, thumbs up coming in from both our experts for today. Let's move on to the next query. LIC Housing Finance, that's a query on. We have Rahul who's writing to us and he's writing to us from Chennai. He's holding 83 shares of LIC Housing and this is at a price of 585 rupees per share. Wants to know the technical levels and the one-year view on the stock. So let me come to you, Gaurang, first. On the fundamentals for a one-year time period, how is the stock looking like? How is the company looking like?
Yeah, prudent disclosure, we have a positive coverage on LIC Housing Finance. Interest cuts announced last week on Friday, 7th of Feb by the Honorable RBI Governor of 25 basis point will start reflecting upon the loan book growth as we go into the future. Real estate sector doing well also reflects positively for housing finance companies. Affordability is a little bit of point of pain, Vinny, and some places where prices are a little bit on the higher side. But our sense is that the affordable housing segment is going to see a very decent growth going forward from here on. So from a long-term point of view, if you have investments, hold on. And if you want to add on to it, I would advise that as well. But this is on the fundamental side from a long-term point of view.
Okay, fundamental view coming in there, but LIC Housing on the technical front, Aditya, what are we watching out for? Last 6 months, I'm seeing a 13% downtick coming in. What would you advise the viewer on the technicals? Should they look to, maybe add some bit more? They bought it at 585, currently at 562.
Vinny, I would suggest hold on to it. There is some more downside. I don't rule out further downside from here on. Somewhere around 510, 500 odd levels is where I see support levels. Stock might just weaken further, but given the fact that he's already bought it at slightly elevated levels and most of the correction in the stock is done with, we're talking about a correction from 820 odd levels to 560 odd levels. So I think the downside is limited to around 510, 500 odd levels with the support around those areas. Stock can bounce back to levels of 650 plus. So hold on to it at current levels. Don't look to add on to it the current position. Maybe around somewhere around 510 you can revisit and then look at adding fresh positions in LIC Housing Finance.
Okay, let's move on to the next query. Kamini Jain, who's writing to us from New Delhi. She's holding 100 shares of Vodafone Idea at a price of ₹6. Wants to know whether to remain invested or sell this one. Gaurang, your view on this one. I know we've spoken about Vodafone Idea before as well, but I think a lot of investors do have Vodafone Idea. So what should they be doing now?
Yeah, no, one too many, to be very honest, because normally on a caller show, Vinny, I get at least 2 questions on Vodafone Idea. So let me give a prudent disclosure. This is a high risk, high return kind of an investment. More of pain, less of gain. As of now, given the kind of backdrop of events we have, there was news flow or source-based information that in budget AGR announcement is likely to have a positive impact, but nothing of that came through as far as the budget is concerned on the AGR. Currently, we have a hold recommendation on Vodafone Idea with a target of about 9 rupees. That's where the stock is. I would say that use your wisdom and fine sense of judgment as far as your investment in Vodafone Idea is concerned.
Okay, and Aditya, your view on Vodafone Idea. As of now, at least Kamini, the viewer, is making profit because she bought it at 6 rupees. The stock is at 9 rupees. What would you suggest her? Then what should you be doing?
my prudent advice would be place a stop loss somewhere around 8.5 rupees and continue to hold onto the position. Maybe I think stock has seen worse days, but again, like Gaurang said, use your wisdom. It's very difficult to take a call on Vodafone Idea. It's like more pain than less of gain. So on the upside, 12 rupees is something that I think can be achievable, but time will tell how long it will take to get to 10, 12 rupees there. So maybe 8.5 should be a stop loss. If that is triggered, you should be out of the trade. You will still end up making some profits on the stock. On the upside, between 10 to 12 is where you should look to exit from the position.
Okay, thank you so much for that, and keep an eye out on those levels over there for Vodafone Idea. On that note, we're going to step into a very short break. After the break, we'll address more of your stock-related queries. Don't go anywhere.
I want you to recount the day that you walked into the State Bank of India at 22.
End of the day, my face was filled with black streaks because, you know, while you're changing the carbon, it comes onto your fingers. My hands were aching. My head couldn't add 2 + 2. First day was like one whirlwind. People don't work in the public sector. Total myth. In the last 4 years of my life at least, I never went to sleep before 1:30 in the night. I came back with 2 middle-sized suitcases and I had to clear all of those files. Yeah, exactly. Banks have the trust of the people. And the day they told me that somebody is coming to, you know, take your picture so that they can paint it, I deliberately put on a red sari. Giving up is very simple. It's a 30-second email you can put in order to resign.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. from chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back and thanks for staying tuned into your stocks on CNBC TV18. Let's keep it going with all your stock-related queries. We still have our experts with us, Aditya Agarwala as well as Gaurang Shah, who are still here to solve all those doubts. Let's move on to the next query, gentlemen. We have Bajaj Finance. This is a stock that the viewer wants to know about. It's from Manoj Kumar, who's writing to us from Mumbai. He's holding 13 shares of Bajaj Finance. Is at a price of 7,616 rupees per share. Obviously, he's making a profit on this one. Wants to know whether he should continue to hold this or exit at the current level. Gaurang, your view on this one?
So, Vinny, this has been one of the strongest performers in the NBFC category. There was a time last fiscal when, because of certain business updates, the stock was subdued between 6,000, 6,500 for a pretty long period of time. Then appropriate steps were taken, business strategy was reworked, put in place at ground level, and the turnaround as a result of which Bajaj Finance is doing what it is doing today. We have a fundamental coverage from a long-term point of view. Hold on for long-term.
Hold on for long-term. That's your view coming in. And Aditya, your view on Bajaj Finance?
Oh, definitely a buy, Vinny. And if you already have it, own it, hold it, because the viewer has bought it at lower levels. I'm looking at a target of 9,700 on the upside. So that's a significant upside that I'm looking at Bajaj Finance. It's broken out from an ascending triangle pattern from 2021. This consolidation was going on. So that's a fairly large consolidation breakout that we're looking on. So definitely hold on to it. Maybe add more positions. It has corrected today. So it's a good idea to actually add on to some more positions at current levels. Look for a target of 9,700 and maintain a stop loss somewhere around your buying area.
Okay. 9,700 is what you are seeing on the charts coming in for Bajaj Finance as well. Let's move on to the next query. We have Preeti, who's writing to us from Bangalore. She's holding 26,000 shares of Yes Bank at an average price of 17 rupees per share. Now, they want to know in terms of what should they be doing? Should they continue to hold? What is the stop loss that one needs to consider for this one? Your view on this one, Gaurang?
Well, firstly, I would say there are much established and better banks Vinny, compared to Yes Bank. It has all sorts of problems that one can have in a bank balance sheet. We used to cover the stock many years back. We've dropped it since quite some time back. Currently, we don't have any coverage, so I won't give a buy, sell and hold, but I would use that same phrase that I used for Vodafone Idea. Use your wisdom and fine sense of judgment. And like I mentioned, this is not the only banking stock that is listed. There are sound banks. Alternative investment idea, if you ask me, Vinny, would be an IDFC First Bank, though second quarter, third quarter numbers were disappointment on fallback of the MFI segment, loan exposure, etc. But there are better banks compared to Yes Bank.
Okay, that's a view on Yes Bank coming in from Gaurang. And on the charts and technicals, anything different, Aditya?
In fact, both Vodafone and Idea give you similar kind of a chart setup, and a similar kind of view is also formed looking at both the chart setups. So on the downside, maybe 18 is something that I would recommend maybe place a stop loss around those areas and look for a target of somewhere around 21, 22. Very difficult to say whether the stock will reach 22 because, and like Gaurang said, there are enough and many more better plays in the banking space. So why stick to Yes Bank? You have IDFC first, you have CSB, you have likes of PNB. Look at some of the smaller PSU banks. Probably they will outperform from here on as compared to Yes Bank.
Okay, let's move on to the next query for today. We have Vidya Vijay Raghavan, who's writing to us from Kerala. He's holding 700 shares of Power Grid. This is at a price of 200 rupees per share. Wants to know whether to continue to hold this or look to sell this, making some bit of a profit on this one. Your view on Power Grid, Gaurang?
So firstly, I think the buy price is very comfortable in terms of investment. On the long-term point of view, we are positive. This is the company which is having a large part of a monopoly kind of a situation in, power distribution grid network, both interstates and one state to another state, and inter-regional also. There were certain issues on the earnings front, which was a little bit of shortfall, but with the kind of power capacity that is going to come up, Vinny, in the next couple of years, you are going to need the back-end infrastructure of Power Grid for distributing that power which is generated. So hold on from a long-term point of view is what I'll recommend.
Okay, hold on from a long-term point of view. And Aditya, just a one-word answer. What should the viewer do, hold or sell?
Hold, given the fact that the buying price is too low.
Okay. But that's all the time we have on this edition of Your Stocks on CNBC-TV18. So thank you so much, Gaurang, as well as Aditya, for joining in with us and solving all our viewer-related queries. And with that, it's a wrap on this edition. So thank you so much for tuning in. Up next, you have Closing Bell that will take you through the last hour of trade and where the market is headed. All the action on the other side.
understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index down 0.8%. Hang Seng is up 1%.
Nifty is bounced on Friday from the 61.8% retracement, but not got close on the positive.
Most of that selling that had to take place, that's got absorbed. I'll keep an eye out on that stock.
It's 23,536. It's in the red as the pre-open was showing.
The idea was to see how can we catapult the brand, to a top 3 position, which is what we aim to do globally.
Our capacity that we've set up is 5,000 a month right now, which is a fairly healthy capacity.
We remain cautious because the real scene on the ground is we are not seeing enough movement at this point in time.
The Nifty and the Sensex trading with cuts of about 0.7 percentage point. The Nifty now below 23,400.
Well, President Trump has announced his plans to implement 25% tariffs on steel as well as on aluminium imports.
Now, 50,000 is the mark where we actually break even in EBITDA.
Early morning trades, the rupee went very close to 88, 87, 95.50.
Prime Minister Narendra Modi as he embarks on a 2-day visit to France.
Nifty's below 23,350 as it stares at a cut of more than 200 points.
Well, that's the day so far, and you're with us here on Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios, and I have to say it's a pretty sort of easy kind of market to report. Not easy in the sense that it's not light, it's quite heavy, and it's all red. But I mean, it's easy because everything is down. It's that kind of a day. 23,300 around is where the market, the Nifty, is trading at. I'm Prashant. With me, my colleagues Surabhi and Reema here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Good afternoon, Prashant. I was wondering when you said easy, how? Because for anybody who was hoping for some semblance of stability, and those hopes have been really dashed today. And guys, by the way, we are big underperformers across. I mean, this whole tariff business is affecting everybody. Seems to be hitting us the hardest.
And not to forget rupee, right? It breached the 88 mark against the dollar. From there, it's appreciated a tad bit. I saw 87.6 about 10 minutes back. But that's the headache for foreign investors.
Well, everyone's hoping to hear from President Trump, right? Hopefully he's not as serious about this, and hopefully there's some kind of resolution or some kind of way out. So that's the hope. Everyone's tracking X, tracking to see whether there's any comments that are coming in from there. But clearly, as of today's trading session, Trump's tariffs are weighing on the market.
Absolutely, it's weighing on the stock market. It's weighing on the rupee as well.
Yes.
In a big way. The dollar rupee will come up on your screen. Lata will have more perspective on what's happening there. So we pulled back quite a bit. We were down almost about 50-60 paise, losing about 50-60 paise against the dollar. But there's a sharp recovery, etc., which has happened. I'm not sure if there's any intervention in the market. Lata will be able to sort of shed more light. But let's just look at the equity side. Everything down kind of a day. Declines to advances, the last I checked, is almost 5:1. So five down for every one stock which is higher. Mid and small caps sharply down between 2 and 2.5% on those indices. And of course, I mean, for the Nifty, I'll just put these levels out. Hourly average, etc., everything is gone. Yesterday's low, Friday's lows are gone. So the Nifty 20-day moving average as of last close is 23,300. Let's see if, I mean, we are 50 points away. Let's see if that holds. That's one. And then the 61.8% retracement of the recent bounce from the lows stands at 23,176. I mean, if the 20-day goes, then that is the next number to watch out for. So, I mean, similarly, you can look at the Nifty Bank as well, but just putting out those numbers for the Nifty. But broad amount of pressure and lots of names down with heavy volumes at this point. Reema.
Well, there are just about 8 stocks out of the Nifty 50 in the green right now, and there's only one of them with a gain of more than 1%, and that's Britannia. That's up 1.3%. Other stocks with gains of about 0.6, 0.7 include a Kotak Mahindra Bank, Bharti Airtel. But on the way down, trend continues to get beaten out of shape. It's now down 27% since the year began. sub 5,200 in terms of a price for Trent. And remember, the 52-week high on this was 8,345. It's a big fall. The Nifty Metal Index is down more than 2.5%. Casualties included Tata Steel, JSW Steel, cuts of 2.5%, 3%. Titan, Power Grid, ONGC, Hero Motor Corp. The cuts are cutting across all the sectors right now. No place to hide. And look at the fall in the mid and the small cap index, 2.5%, 3% gone.
You know, it's a market which is sort of got a very different texture or fabric. And a case in point perhaps is going to be once again the reaction on a PG Electroplast. I mean, this goes back to what we've seen on innumerable companies in this season where numbers are okay. Underlying growth or margins aren't collapsing, but the stock is getting sold off. It's a very different story. PG, we had the management in the morning. Commentary is good. They've upped their guidance for FY25, talking about, newer businesses, helping them, carry the good work forward. The market isn't hearing any of it. Trent, as you guys mentioned as well, continuing to fall out. There's a very, very different market where suddenly the valuation reality is hitting home. But Nigel, I guess that's what they say, right? It's only a slightly mandi ka bazaar where you think about valuations and earnings. Otherwise, it's all about growth.
Well, that's right. And today actually, the lows of today are very, very important because we went down to around the 23,300 odd mark. And that was very, very close to the 20-day MA. So the bulls are looking for, some kind of support level. They have got it. That 23,250 mark becomes very, very important. And just looking at the lows of today, and looking at the texture, I think that, there's a good chance that we see a bit of a pullback and we defend the lows of today, which is 23,300 just for the day. So let's see how that goes. The problem is in the broader markets. Mitesh Thakkar, though, is back with us. Mitesh, what's your view? Y'all have been fairly positive on the index. As of today, what is it? We have pulled back a goodish bit, holding at around the 23,300. And as I mentioned, the 20-day MA at least is holding out for now. Your take?
Good afternoon, Nigel. So, in fact, we had some long positions. We have pruned them down because the stop has been hit. 23,350 was my spot, and actually we did decline below that, though I think we are now trying to claw back and stay above that. But for the timing, at least one trade has been exited. Now, I think the market hasn't turned bearish as yet, so it could be a choppy consolidation. On the downside, I think, 23,200, 150 zone should come into play. And on the upside, now the index needs to get past levels of 23,500 to regain strength. So it could be a 250, 300 point kind of range which could develop. So trade with stock specific bias. For the time being, we've just exited the Nifty long call option spread which we had. But I still believe that we are not starting any kind of a declining move. So it could be a slightly volatile consolidation. On the stock side, the sell on X side, people stop at about levels of 377, look for targets of 355. And BEL is another one which is just entering into a slightly negative zone. So sell here with a stop at 279 for targets of 260.
Okay, all right. Mitesh, got it. Thanks very much. By the way, I again checked US futures and European markets as well. There's green. There's green across the board. And in fact, in our neighborhood as well, the markets which are more directly impacted by a lot of this tariff talk, which would be, let's pull up the Hong Kong markets if we can, the way they've closed out. Hong Kong's actually been up 2% today. That's Europe for you. CAC is up, 0.2%. Shanghai markets, mainland markets are up about 0.5% as well. So I was just short point that this is whatever is happening. The pain in the mid-cap market. It's a very India-specific phenomena. Though of course there are the bigger headlines on tariffs and the rupee.
I remember this is of course maybe a couple of years old, and I suspect it would change too much. There are two countries which are most impacted because this reciprocal tariffs are not new. He's spoken about it during Trump won the first term as well in 2017 onwards. The idea is there should be symmetry, and you charge 10% on my product, similarly 10%. The two countries most with the greatest imbalance in that sense are Thailand and India. I'm not sure how much of this would have been corrected in this budget because they've kind of lowered some duty lines and tariffs, etc. But these are the two countries which have got some of the largest divergences if you just compare, say, US versus its trading partner. So that perhaps at the margin explains why the market here is under a bit more pressure. But as Neelkanth explained, stuff has happened in the budget, and he had that number of $7 to $8 billion worth of exports out of India, which may get impacted, but the number will be reduced now because the government has already taken action and other reasons. So we'll talk more about this. Rupee, of course, is the other one which is also taking a bit of a knock, although it's come off the lows quite a bit. Lata is here to put this in perspective. Lata, over to you.
Well, it was mayhem in the morning because the rupee opened almost at 88, 87.9550 to be precise. Now, it appears that this was not very out of sync with other Asian currencies because some of them did fall about 0.8%. The fall in India at 87.95 would have worked out to about 0.6% fall. And there were ringgit and all had also fallen around the same number. And that's because obviously tariff talk, two kinds of tariff talk. You know, one was reciprocal and the other tariff threat that came was on steel and aluminium. And therefore, obviously, a lot of Asian importers were impacted. But when it opened at that big number, the Reserve Bank appears to have made inquiries whether this is really importers coming in and buying or FPIs buying dollars, and noting that this is more position taking by, you know, what you can call speculators very loosely, but largely banks. They went in and they supported the rupee like hell. People are talking about $2 billion, some are talking even $3 billion. But it clearly looks like a Reserve Bank support because it vertically fell the dollar from 87.95 all the way to 87.56, 57. It has been more or less stable at that level. Now, you stock market guys are lucky. You'll get some 22,800 support and 23,800 resistance. When we try to ask these questions of traders, forex traders, the level, they themselves tell us the levels we gave you 87.50 at the beginning of the year as level that will be reached in March and 88 by end of the year are all today, have hit today. So where do you go? At the moment, there's a working figure of 82.25 by March and 89 by December. But who knows? These levels could be just, erased in a day.
Absolutely.
Okay. No, and actually, Lata, I mean, to sort of complete that point, even in equities, when you've got like $2 billion of selling, levels come, levels go. I mean, levels are formed dependent on the force of the flows, right?
Line in the sand.
Yeah, line in the sand in markets like the ones that we're in the midst of. The only hope is, perhaps like Prashant was saying, that the $7 to $8 billion of impact, I mean, in a larger scheme of things, look at the Indian GDP. I mean, even if it, there's a trade hit of $7-8 billion with the US, doesn't matter. That's what Nilkant was saying, that we're an inward-looking economy.
But so, on this issue of extraordinary Indian tariffs, that is only in a few commodities or few items like cars or two-wheelers, Harley Davidson or something like that. The broad swathe of articles is a 10% tariff. Something like some textiles, some cosmetics and some meats are 30%. But when I saw the last import data from the US,
the two items, Lada, which
there's hardly anything in that.
I think Harley is the biggest point of contention. So if they can resolve that by Valentine's Day.
That is 125
and 150. But I think by value, I saw two things. One is dairy, because we protect our farmers. That is, so that difference is the largest in dairy. Cereals is another one. I mean, these are surprising. Usually we typically talk about...
Usually WTO protects those because that's seen as farmer protection. But then if you don't recognize the WTO, we don't have any...
I think that's why this meeting
with... But the broad swathe is actually engineering goods, etc. Our steel is 10%.
Okay, so Valentine's Day. We're all waiting and watching. One thing for sure, which is that one meeting between President Trump and Prime Minister Modi.
Becomes important.
Yeah. Well said. Valentine's Day gift for the markets. But read all over the screen, Dipan Mehta, director at Elixir Equities, is now with us on the show. Dipan, I know you've been cautious in the markets, and I presume you're still more cautious, or now after the kind of price damage, time-wise correction, you're saying that, well, this is enough now. It's got to stop at some point. And then comment on Zaggle Prepaid, 10% down post the margin miss.
So, with every passing day, I'm getting more and more optimistic. And the reason for that is the budget. And I think the budget was excellent. The fact that so much money goes into the hands of the urban consumer does tend to benefit the economy. And then we had a rate cut as well. And there could be further rate cuts going forward as well. So at least something is being done to reverse the slowdown. And the primary reason for our bearishness in the market was the slowdown in the economy, was the slowdown in the earnings. And if some steps are taken to reverse over there, and this particular cycle also of a slowdown, that also will come to an end in a quarter or two. So I think that maybe 2-3% below these levels are good levels to start and actually start putting money to use. No point getting excessively bearish as well. And of course, the wild card is the tariffs on Indian exports. So right now, the strategy has to be to avoid all Indian exporting companies till we don't have a complete grip on where the tariffs are leading. But look, I think there are many stories which may emerge if the consumption cycle picks up, and those are always the interesting ones. They have got great secular growth momentum as well. So with every passing day and every correction, I would like to state that I'm getting a bit more positive and more optimistic.
Now, that's the thing, right? If you got cautious and negative early, you can get positive early also, Deepan, right?
That's a good angle, Prashant. That's a good angle.
No, you have to be. Otherwise, you just got to watch because you're invested. You're just watching it go down, then you're hoping it'll come up because you can't do very much. I mean, unless you're sitting on cash, and for that you have to have a view early.
Quite some food for thought for me.
No. I mean, I don't know. This is off you in the sense because you did that. And I think that's a good thing. So that's a point well taken. No point being excessively bearish. Markets will look ahead. They don't look work on what has already happened. You got to look ahead where things will be 3-6 months down the line in that sense. So any single stocks on your radar, Deepan? Anything looking interesting because we're correcting quite sharply?
I think that looking at the budget, the appliance companies should do well, and all these air conditioning companies last season also, last quarter, they did very well. This year's numbers also are interesting, right from Voltas all the way to Amber, EPAC, Blue Star, even another air cooling company called Symphony. I think these are all the companies which look very interesting to us. And look, it's already warm and we are in February, we're not in March as yet. In February, it's so hot. So you could have a really horrible summer, and that will benefit these companies a hell of a lot. So I'm getting positive on the entire appliance space because more money in the hands of the consumer means more and more of these discretionary spends will go up. I'm not so sure on the FMCG side. And there are lots of stocks on the exporting side, like, the apparel exporters. I thought Coca-Cola's exports numbers were very good. And there are other similar companies as well. PDS reported very good set of numbers, but I'm just waiting to get clarity on these tariffs. There's Poker which is also an export-oriented business, which we like the numbers over there. So I just want to understand how the tariffs play out, but there could be some interesting ideas in India's exporters as well.
By the way, Manisha is just alerting us. Gold is sparkling. Look at this, 2,900 now. That's, I think, spot gold pricing. That's what we're talking about. Gold has gained 10% so far this year. Just so far this year. It's not even like 1.5 months. It's 1 month of January and 10 days of February. And you've got a 10% gain on gold after what was a pretty decent 2024 as well. What a move. It's been absolutely breathtaking on gold. I mean, up 10%. And of course, the Nifty continuing to struggle. By the way, I was looking at mutual funds as well. Though, of course, you're not supposed to look at 6-month returns and 3-month returns, but a lot of people end up doing that. Most funds, including large cap funds, are negative for 6 months. And what's done the best in the last 3 months or so? Gold. Your gold funds, and that's why asset allocation, going back to, a portfolio management 101 maybe.
Absolutely, and I think it's phenomenal what it's been is done. Let's actually get a banker's perspective as well, right? So the Axis conference kicks off this week, and we have Amitabh Chaudhary, MD and CEO of Axis Bank. I mean, just a growth mood check. Bankers know, what they're seeing in terms of credit offtake across all their segments, and that's essentially what we started by asking him. So just some views here, and we'll come back with Deepan.
Our view is that we have to keep watching the risks quite closely. The credit growth and deposit growth remains muted. RBI has assured during its monetary policy announcement that they will provide durable liquidity, and they do realize that the credit growth does need to pick up for the GDP growth rate to come back to the 6.5–7% range, and that's an important element of that. So hopefully, as RBI takes these measures in the next couple of quarters, we'll see a positive movement. But right now, I mean, while we are optimistic about what could happen, we remain cautious because the real scene on the ground is we are not seeing enough movement at this point in time. As all of us have been pointing out, if the growth slows down, if rupee depreciates, and it has depreciated so rapidly, if global uncertainty remains, tomorrow exports could get impacted, let's say tariffs come in. We cannot say that, by the way, this will not extend to secure forms of business. We are in the risk-taking business. The credit costs are normalizing. We have seen some, obviously stress in some of the sectors. We have to be watchful and cautious that this should not extend to other asset classes also. No, I'm not suggesting that RBI goes slow on some of the measures they have taken. I'm just saying that some of the measures, and individually the measures, have been in some cases so tough and tight. The credit growth has dropped to a level where, obviously you are seeing some signs of stress develop, or it is having an impact on the GDP growth rate. If this same credit growth could go back to 14-15%, it will have a positive reinforcing message in the overall growth rate of the economy, and some of the stress in the system could also go away. I'm not for a minute doubting what RBI said. I'm just saying we need to wait for those measures to come out and play out, and then hopefully we'll see positive signs. I'm quite optimistic. But the measures RBI has taken on liquidity have been sufficient enough to take care of the deficit in terms of liquidity. They are not led to any surplus liquidity.
Okay, so that's essentially a nice snapshot view from a top banker really there, Amitabh Chaudhary of Axis. Life insurance business data for the month of January came in, and Yash is here. Some really stood out on the positive side, and others were more muted. Yash, take it away.
Well, Prashant, as you rightly pointed out, overall for the industry, the month of January was muted. Both private as well as the total industry premium was in the negative area, but there were select areas of positive news coming in as far as growth is concerned. The first positive news came in for HDFC Life. Strong performance, up 25%. The new business premium in the month of January. 10 months premium is up 13%. January total APE grew by 27%, and retail APE also saw a growth of 25%. ICICI Prudential Life Insurance, it was a modest growth for the company, and that came on a favorable base. January premium growing at 14%. January total APE growing at 24%, and retail APE seeing a growth of about 9%. Axis Max Life Insurance, modest growth on a strong base which the company had to work on. January premium grew by 9%. Total APE 12%, and January retail APE grew by about 14%. SBI Life Insurance, it was a weak growth, but do remember the company had a very strong base to work on. January premium was down 37%. January total AP grew by just about 3%. January retail AP grew by 18%. Finally, LIC, again, weak growth. It's been continuous that way for LIC, but it had a strong base to work on in the month of January. So the total premium was down 14%. Total AP was down 27%. Finally, retail AP also saw a contraction of 7%.
Okay, all right. Thanks a lot for that, Yash. Well, let's go back to Deepan. Deepan, anything you like from the space, insurance space?
Yeah, HDFC Life, the best insurance company to buy, and markets like these, you want safety, you want stability. It's a great stock to buy. But the cheapest, I still believe, is LIC, and that also can give very good returns. And the beauty of the insurance industry, if you look at the numbers, is that we are always valuing them on a price to embedded value business. And most of the private insurance companies, the embedded value led by HDFC Life is easily growing at that low 20% or so. So if you assume that that particular valuation multiple remains constant, these companies can easily deliver 15-16% compounded growth, which is very good in a market like this. So I think it's one sector you should definitely get overweight in. LIC, usual disclosure, we and our clients are invested. There's only the expectation that the valuation multiple may improve over here and may start to trade at least at its embedded value. Right now, it's going at a discount.
Okay, all right, got it. Deepan, thank you very much for the call and the view. We do have to take a very quick break at this point in time. Come back on the other side, and we'll have more conversations lined up. Jigar Mistry is going to be joining in, and we'll discuss some of the key movers and shakers of the day.
want you to recount the day that you walked into the State Bank of India at 22.
End of the day, my face was filled with black streaks because, you know, while you're changing the carbon, it comes onto your fingers. My hands were aching. My head couldn't add 2 + 2. First day was like one whirlwind. People don't work in the public sector. Total myth. In the last 4 years of my life at least, I never went to sleep before 1:30 in the night. I came back with 2 middle-sized suitcases and I had to clear all of those files. Yeah, exactly. Banks have the trust of the people. And the day they told me that somebody is coming to, you know, take your picture so that they can paint it, I deliberately put on a red sari. Giving up is very simple. It's a 30-second email you can put in order to resign.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन
Welcome back. 175 points down on the Nifty, 23,390. And there's about a 30-odd point recovery which is emerging as we speak. Jigar Mistry is with us, co-founder, Buoyant Capital. Jigar, Good to have you back on the program. I mean, I remember your views last couple of times. You've been cautious. You've been cautious for a while. And I think it's working out well. If you're sitting on cash, as Deepan has been, what's the view? Deepan was earlier telling us that, I mean, no reason to be excessively bearish now. You've got to start to have an open mind and maybe at least scout, if not press the button. But just your thoughts on what you're seeing.
Hi, Prashant. Yes, I think, see, what's transpiring is that if you take a 5 or a 10-year rolling return on any index of your choice or any stock with a long enough trading history, the free cash flow and the share prices or the index prices have always aligned with a sort of a percentage or two here or there. Those two have always followed in complete sync. This is on a rolling return basis. However, when I looked at, say, about a month and a half back when we last spoke, the sort of 3-year CAGR on the large cap was a percentage or a 2 percentage points difference. But small caps earnings growth was something like 14% and the share price growth was 26% CAGR. So there was an embedded 12% CAGR overvaluation that was built into small caps in general. This needs to unwind because if over a 5 or a 10-year rolling return, the two numbers always coincide, then essentially you must be able to argue that the earnings growth will be way above trajectory, and failing which the share prices have to correct. Today, or at least at that point in time, and even today, we were not in a position to argue that the earnings growth will be materially higher than what the trend numbers have been, and therefore it stands to reason that the share price is needed to correct. Now, there are 2 or 3 ways in which it could play out. One, the stock share prices go flat for 2 years and the earnings grows 10% each, and then that corrects the anomaly. Or sort of the index corrects 10% and the earnings rise 10% over a year, and that corrects the anomaly. Or worst case, today stock prices fall 20% and the earnings don't really change, and that corrects the anomaly. So I think we would somewhere be in the sort of second or the third trajectory where, given that retail has been driving a lot of this embedded value creation, it would be reasonably swift. We had moved predominantly into large caps over the last few months, and we will be looking at opportunities over the next few months on where we can increase exposure into a lot of these otherwise interesting companies.
Jigar, hi, afternoon. You've not been a big proponent or fan of taking cash calls. Instead, your approach has been adjust the beta of your portfolio in order to ride out all the cycles, the down cycle that we've been in. So tell us how your portfolio is constructed right now and incremental adjustments that you're making. Take us through the view there.
Right, Rima. So, if I give you a statistic to start, if you were in the markets since the early 2000s, you would have been exposed to something like 6,000 trading days, and your returns would have been around 17 times or thereabouts. Of those 6,000 trading days, 10 days, 0.2% of the days have accounted for 60% of the returns. And we have all heard of power laws, 80-20, or if you are in venture capital, then maybe 99-1%. But we haven't really seen a power law where 0.6% of the days, 0.2% of the days, account for 60% of your returns. 25 days, which is 0.4% of the days, account for 84% of your returns. Obviously, there can't be a strategy to identify these days, right? These days, and you can just get positioned accordingly. In absence of which, creating very large cash calls is counterproductive, because if you miss out on a few of those days, then you end up generating sort of extremely low returns. And therefore, the one that what we end up following is getting into small and mid caps when the markets get very, very sort of pessimistic. So peak of COVID, when everybody else was buying IT, pharma, FMCG, that's where our small and mid cap positioning was almost 65% of the portfolio. By September 21, we had started reducing that. By the time Russia-Ukraine happened, we were even Stevens. Similarly, in May 23, we were again 65% of small and mid caps. And today, as of end of January, we have 52% large caps and a much smaller exposure into smaller caps. Within sectors, I think we have debated this in the past. If I look at the same earnings versus the share price dislocation, then financials, healthcare, discretionary, and real estate sort of stand out. Materials as well, sorry. Real estate is one sector that we don't understand all that well, but a large part of our sort of portfolio is positioned therein.
Okay, all right. Hi, Jigar. Good afternoon. And I think you know the sector I'm going to ask you about. What do you do with the metals pack? Trump's tariff seems to have ruffled feathers today, at least. And the stocks are very, very nervous. But we've seen in the past that sometimes these stocks recover. And I think for the ferrous industry, the bigger point is, will there be some protection that will come in? And could these tariffs now actually make their case even stronger? How do you approach the space?
Right, Nigel. So I think in an era where the value of the dollar is being propped up by measures that are driven by the executive, then sort of as a commodity, metals sort of start taking the brunt as it is. In the event where you put up artificial barriers to trade, and in this scenario, I don't even think they were, like for example, Mexico and Canada, these were supposed to come into effect on 4th, and suddenly on 3rd, they completely changed everything. In this case, I think they're sort of taking a very broad brush and trying to apply it to a broad sector of commodities. And therefore, in an environment where dollar is appreciating, commodities as it is don't do well, and then you add to this the tariff troubles, it exacerbates the situation. So my sense is that, okay, if all of this were to play out, then you will see a situation where these companies don't do well. But as you mentioned, these are counterbalancing effects. So, if you do something, I'll do something else. And eventually all of us will end up generating a higher inflation for both of our countries. Hopefully, when the leaders meet, I think it's later in this week, I think these situations could get threshed out in a better fashion. But otherwise, it's a lose-lose for everybody. And India's trade surplus last year was something like $32 billion overall. FDI until last year was positive, although net FDI now is getting into a little negative trajectory. So a broad brush sort of thing with India, I don't think really sort of matters as much as sort of with a few other countries who are carrying one-sided deficits with the US matter. But I think this should work out over the next few weeks as we see it.
Okay. All right, Jigar, thank you very much for that. Shorter conversation today, but thank you for the perspective. Just a quick check before we head across to Nimesh and Nigel on the other side. Mid-cap index is trying to recover a little bit, still down 2% or so. The advanced decline ratio, that continues to be quite negative. Let's just pull up the advanced declines. You still have over 2,100 stocks on the declining side, and advances are less than 500. That kind of a day. Not much respite, but let's head back to Nigel, and I think he's got Nimesh with him. What's the mood like out there?
Well, that's right. Let's go across to Nimesh straight away. Nimesh, what are you picking up? Today's a bit of a down day, though if you have to say in the last 30 minutes or so, we've seen some kind of recovery from the lows. What's the flows picture? How are things looking?
Well, in a flow from a large index point of view, it's not very bad. So, okay. And that's maybe showing up in the Nifty as well. The bigger pain is in the broader market names, and a lot of individual stocks are down. The breadth is quite weak as well. The indices are down 2-3%, so that shows the kind of nervousness which is there. And I guess, I was listening to the guest as well. I guess what is happening, Nigel, in the broader market is a reset of multiples. Yes. That's clearly the point now. Anything which is expensive and not delivered on numbers is something which is getting heavily punished. I was looking at the BSE 500 data. In the BSE 500, from the 50-week high, only 4 stocks are in the green, or 3 or 4 stocks are in the green. Almost 490 stocks are giving negative returns from the 50-week high. So that's the kind of damage we've seen in the broader market names just in the last 2 or 3 months, right? I mean, from 50-week high, we're down sharply from those levels. So that's clearly the broader market picture. As I said, in the large caps, the flows are largely driven on the negative side in the financial. So surprisingly, a lot of private bank is where there is a bit of selling pressure, and to counter it, there is a bit of buying in the IT names. So which is I'm saying, there's no big selling in the large cap names of the broader market, in the bigger stocks, so to speak. From the larger FIs today. Technically, 23,300 is a level to watch. If that gets taken out on the downside, then the next level to watch will be 22,800, 22,900. So, need to see whether we manage to hold on to 23,300. But I guess even that gets managed. The bigger challenge is the sharp fall of the supply in the broader market names.
That's right. You know, Nimesh, and just one stock that's standing out for the last couple of trading sessions is Kotak Mahindra Bank. The Nifty, as you said, is under pressure. The Nifty Bank as well is down close to 200 points. But Kotak Mahindra Bank is at the high point of the day. So I think the street is, hoping for a couple of things to move in their favor. But what about other stocks? What are you tracking?
So in terms of individual names, the first stock on my list today is Wipro. Within the IT stocks, this is relatively outperformed. And even in the overall scheme of things, Wipro has stood out today and actually in the green, largely because there is aggressive buying from the larger FIs. So overall, I guess there is buying in the IT pack. And Wipro stands out in terms of very aggressive buying today. So that's the first name. The second stock is Tata Motors. It has almost corrected 30-35% from the peaks. And there has been selling pressure as well. But off late, some bit of buying has emerged. There are buy flows at FIs today. And interestingly, I understand a couple of large HNI investors also have started turning bullish on Tata Motors at these levels. So that's the second name. The third name is Aegis Logistics. Even that stock has corrected sharply from the recent highs, down in today's market as well. I understand there is a large FI holder who is a big seller in that particular stock. And at the same time, some HNIs have bought as well. But largely, there is supply from larger FIs, which is putting pressure on Aegis Logistics. And the last is Cummins India. That stock is actually outperformed in today's market. There were buy flows as well, and additionally, a couple of upgrades as well from the likes of Kotak. So maybe that's the reason why Cummins has actually outperformed in today's weak market.
Thank you very much for that interesting list. As always, there has been a little bit of a recovery in the markets. The Nifty Bank too is now down only about 300 points. At the session low, it was down more than 500, 600 points. Get into a break. We'll come back with more BTST calls from our technical experts. Stay tuned.
से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे। जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning
Okay, welcome back. So what we have is some semblance of stability. At least the fall hasn't deepened in the while that we've been on closing bell. So that's the good news. Some attempt at a recovery. Let's go back to Mitesh to understand what the levels are looking like and what trades you can still consider. Mitesh, let's quickly revisit. Considering today's price action, Nifty, Bank Nifty, what's the advice? And any more individual stop trades?
No, see, as I said, it's not looking a market which will fall. So while we've come below the pivot levels and the trade stop loss could be triggered on the long side, I expect some sideways consolidation. With that, I have a BTSC in Bharti. Keep a stop at 1684, look for targets of 1710, and Crompton is something which is turning slightly negative. So STBT here with a stop at 352 half and a target of 345.
Thank you very much for that. Anand Tandon, market expert, is now with us for the last 15 minutes of today's trading session. Anand, so many stocks have fallen 20-30% in a span of what, since the beginning of the year. Have you been, according to you, where is the opportunity and have you made any purchases?
Like most people have been arguing, the valuation in the mid cap and small cap, largely the small cap still remains fairly challenging, given the kind of earnings growth that we have been witnessing and the valuation where they are compared to both their historic past as well as relative to the larger cap. So the value, if at all, is emerging in the large cap. In the large cap, obviously, companies which have done reasonably well, for example, are companies like Mahindra and Mahindra, Bharti, etc., which should, I think, one could argue that will continue to show fairly stable kind of growth rates even going forward from here. And therefore, those are the areas that one should be looking at in a market which is fairly volatile otherwise.
Okay, I just want to, Anand, hi, good afternoon. We spoke with Anish Shah of Mahindra and Mahindra. I just want to, for our viewers, play out that soundbite again. So third quarter was pretty good. Fourth quarter, on the tractor side especially, there is more visibility. They're guiding for 15% plus growth in the tractor segment. We spoke about, safeguard duties, the price of steel rises, what that will do for tractors, and of course, other sort of stuff as well. So lots there. The EV bookings open on the 14th of February. Here's Anish Shah.
Margins will be slightly lower to start with because you would expect that with a new product, also because it's electric. And we will be showing margins separately for ICE versus electric. And over time, they will catch up because that's where the investments come in for. And we would expect margins to be similar to ICE in the longer run, but it will take us time for us to get there. Our target, and we have been fairly audacious in what we do, is to get to 40% in every segment we play in. So yes, we have a while to go, but that is part of the journey. So we do see a lot of green shoots in rural, as we've talked about earlier as well. Yes. For the fourth quarter, we expect 15% growth year over year, and that's a very healthy growth in this space. For next year, a little early to say as yet, because it will depend on this particular season and how that goes as well. Okay. But overall, we remain fairly optimistic about where rural is right now and prospects for a tractor business next year.
No, that's a decent sort of comment and commentary coming in there. Now, another stock is Tilaknagar Industries, which is down 20%. And there's a negative news flow here. There's a bit of a setback. Mangalam is here with more details. Mangalam.
Well, so the company had actually sought an injunction against Allied Blenders from manufacturing, bottling or selling alcohol products bearing the trademark Mansion House and Savoy Club. Remember, Mansion House is one of the stronger brands of Tilaknagar Industries, under which they sell not only whiskey, brandy, but also flavored brandy. So it's one of those, hallmark brands of the company. But the Bombay High Court has dismissed the company's plea in this trademark dispute, and by doing so, what in effect it has done is allowed Allied Blenders, to bear the Mansion House brand for some of the products that they will sell in West Bengal. To its part, the company has gone ahead and said that this order will not come into effect for the next 4 weeks, and during this period, ABD cannot introduce any new product with the trademark Mansion House. And while that happens, the company will go ahead and make an appeal against this order made by the Bombay High Court itself. So those are a couple of, legal uncertainties that the street is battling with. These are legal uncertainties. Are there any financial uncertainties? To that, the company says no, because status quo remains on them using the brand Mansion House, and at the same time, they do not expect any financial implication of this in the business. But from a business standpoint, if your competitor has a similar brand name and there is no legal recourse against that, then that could cause a lot of confusion in the marketplace. But as this battle draws out and there are appeals, etc., we'll keep an eye out on the story as this develops. As of now, no financial implication, and the brand Mansion House continues to stay with Tilaknagar Industries. But what happens from here on and whether others are allowed to use that brand itself or not is something that we'll most definitely watch out for.
Okay, all right, got it. That's Tilaknagar Industries, obviously 20% down circuit on the implications of what this could mean. Thanks, Mangalam, for that. Numbers are coming through for PNC Infra. Now, you might be wondering, why is the stock up in green considering that performance that's flashing on the screen? That's because of a different reason. This company had been singled out by NHAI and it had been disqualified from bidding for, I think, over a year initially. Now that period of disqualification has been reduced, and I think it's only 4 months now. So, I mean, the extent of the punishment has been limited or reduced given the, the conversations involved. And I guess that's why the stock's been holding up. Numbers, obviously, it's been a trying quarter, it seems like, for them. We've got Anand Tanan, of course, still with us. Anand, on Alcobev stocks, I'm not sure if you look at Tilaknagar in any detail or not, but if not Tilaknagar, anything else on Alcobev? Because some of the companies have been weathering the storm quite well, including whatever's been happening in Telangana.
Well, yes, I think, the sector as a whole, several companies have performed reasonably well. And, I think the standout perhaps would be something like a Radico, which has over several years actually been improving their performance. I think it remains one of the more attractive stocks, not in terms of valuation, but in terms of where they are headed from a business perspective. What is happening in Telangana is not unique. It is something that keeps happening because most states do control their distribution. And depending on their own financial stress, they will end up, trying to change things around. I would imagine that those are somewhat, transient because this is one of the largest areas of state revenue. And, when you have a popular brand trying to stay away, then obviously the government is also forced to take corrective measures. So, there may be small disruptions near term, but I think overall those are not going to be material for the companies in the longer term. What are more material are things like what you just mentioned for Tilaknagar, where the competitive landscape itself changes because of legal orders. That can certainly set the company back quite a bit.
Anand, do stay on. Need to slip into a very short break. Before that, let's get you the Growth Code, which is an initiative by Grow and CNBC-TV18 designed to equip you with valuable trading strategies. And as we conclude this special initiative, Prashant sat down with SEBI's whole-time member, Mr. Anand Narayan, to discuss the significance of asset allocation.
We talk about equities, we talk about F&O, but there's also asset allocation at a broader level, right? When you pull back and look at what you should be really doing, whether you should be buying A stock or B stock or C stock. Well, is that the right question to ask, or is an important question to ask? I mean, where are you invested? What asset classes? How important is that to your mind?
So Prashant, as a former academic, let me quote a few papers. So 1986, there was this seminal paper by Brinson, Hood and Biebauer, which actually went on to show that a predominant portion of the variance in returns across portfolios is explained because of asset allocation. Less than 10% was explained by stock selection or by timing the market. What that means in English is the following. As an individual investor looking for the long-term investment and being a responsible investor, you should be spending a lot of time in figuring out what your risk appetite is, the first question that we sought, And then based on your risk appetite, you have to create a portfolio, a diversified portfolio, which mirrors that risk return across all asset classes. You know, you've got to have equity, you've got to have debt, you've got to have real estate, commodities, fixed income, all of that put together, right? So you create that portfolio based on your risk appetite. Once you decide your asset allocation, that pretty much will determine 90% of the variation of the returns going forward. Some of our investors tend to spend an inordinate amount of time on picking stocks or on timing the market.
99% of the investors.
That's right. So it's a bit of a Pareto principle where we spend inordinate amount of time on something that matters very little, and we don't spend enough time on what really matters, which is doing a thoughtful asset allocation.
Power live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Well, the stock that's clearly got some current right now is Kotak Mahindra Bank. Remember, over the last 5 years or so, the stock has not even gone up more than 22%, I think so. But in the last couple of days, the stock has done quite well. And if I look at it, in the last month or so, the stock is up 10%. Anand is still with us. Anand, what do you make of Kotak Mahindra Bank? You know, we're talking about valuations not going out of whack. This is one private sector bank that actually valuations are at a similar level in comparison to even COVID lows. What's your take on this one?
That is true, and I think that makes it a very interesting stock to look at. You know, it has multiple businesses which are all largely well run besides the bank. So therefore, from that perspective also, its investment holding values will be reasonable. And as you said, it hasn't moved at all. Its deposit capabilities are fairly strong. So the key point at this time, I think, for banks would be the ability to raise their liabilities. And that is something that Kotak does very well. Broadly, I think, you know, it is certainly something that one should be examining closely.
Okay, got that. That's on the banking side. Let's take a look at some more stocks. And Trent obviously has been the classic whipping boy of this market consolidation or correction, call it what you want. Anand, let's take this up then. Trent is now down how much? It's down almost 40% from its peak. Used to be an 8,000 rupee stock. A lot of people who are holding it are wondering whether they should get out, watching the decimation. Those who've not had it but have heard those fables and big stories are wondering if this is a good time to get in. What would your advice be on such high-flying stocks, richly valued stocks?
Well, you know, it's one of the best run companies around, but the point is that every company finally hits a level where it starts to get competition. And Trent, you know, the competition is coming at Zudio and things like that, which is one of their biggest growth and earnings drivers. There are others which have actually now put up, you know, products in the same price points and who are also expanding. So obviously there is going to be some pressure on margin. And with that pressure coming through, it is not surprising that you are seeing that kind of reaction. Now, obviously, anything which is as richly valued as Trent, when it falls, will fall fairly sharply. But, you know, I don't know whether this is the right time to be getting into it because there is no particular trigger right now. But, you know, it is certainly a stock which, if you want to be in the space, it's probably one of the best run companies around. If you are looking at near-term triggers, you have to be looking more at consumer durables kind of things because those are the places where, you know, your immediate impact on the budgetary provisions that we saw a week ago are likely to make an immediate dent in terms of demand increase. At least that's what one hopes for.
By the way, is there Anand, hi, good afternoon. Is there a barbecue nation around you where you stay, Anand?
There is indeed.
Have you been to one lately?
Not for a long time.
Okay. When the stock has come off sharply, Anand, high was 2,000. Forget high. I mean, you know, no need to get anchored to the high. But it's come down. It's about 300 bucks, 1,200 crore market cap. I was just looked at numbers, annual numbers. I mean, again, numbers are nothing great in that sense. Top line has been flat for a few years now. 23, 20. I mean, actually, 24 over 23, no growth. Maybe 25 over 24, minor growth. At a net level, I think there was a loss last 2 years. Any thoughts at all? Barbecue Nation.
So for most restaurants, you know, it is very difficult to keep the excitement up because at the end of the day, the product tends to lag. I mean, you get used to it and after a while, it is no more as attractive. There is a new kid in town which you want to go. And the need for refurbishment of your older facilities becomes fairly good, especially if you are a sit-down dining kind of thing like Barbecue Nation is. So overall, your cost of operations is quite high. Keeping product excitement is fairly difficult. And that is why you see, you know, the QSR formats which do well are the takeaway kind of dominated businesses, not so much the sit down and eat in the place kind of areas. So it's going to be difficult always to keep trying to refresh your produce as well as the excitement around it for the market to come in. More importantly, if you don't grow new spaces, obviously your top line becomes stagnant. I think Barbecue Nation is suffering from all of those symptoms right now. The management clearly has some thinking to do. I mean, it's not something that is going to be very easy. The product remains attractive, but you know, whether or not somebody will want to keep going to that place for the same kind of cuisine is a bit of a question.
Okay, Anand, stay with us. I'm just going to quickly wrap out markets here. So the Nifty will end not at the day's low, but not a bit of a bounce. The absolute lows made at about 23,316. 23,377. The 20 days at 23,300 as of yesterday, as of Friday's close. So that holds for now. And the Nifty Bank, of course, did start to turn starting about 2:24 in the afternoon. When we actually pretty much started, that's when the market made a bit of a low. We were at, I think, about 49,820 and we are at about 49,980 by close. So there was a bit of a lift which the Nifty Bank saw in the last 1 hour or so, but 2% cuts in the mid and the small cap part of the market. And that's essentially the real issue. 5:1 declines to advances. Actually 4:1 now. 600 lower, 600 higher and about 2,200 lower by close. That's the advanced decline ratio as far as NSE stocks are concerned.
Yeah, absolutely. In a weekday for mid caps, a long list of losers actually. Just very quickly to take some names: JM Financial 7.5% down, NetWeb 8% down. Zaggle 10% down. Tilak Nagar, of course, we discussed the developments there, 20% down over there. Borosil, it's a long list really out there of stocks that have been fairly weak today. That's where we'll wrap up this edition of Closing Bell. But all the commentary and the analysis on today's market fall continues. Up next is Markets Forward.
US President Donald Trump's comments on imposing more tariffs spooks the trade. The broader markets take a bigger knock with mid and small cap indices falling 2 to 3%. All sectors end in the red, led by Realty and the Metal Index.
The rupee falls sharply in early trades, but then stages a marginal recovery. The fall was on the back of Donald Trump's reciprocal and steel tariff threats. Dealers believe pressure on the rupee is likely to continue.
Axis Bank's MD and CEO Amitabh Chaudhry believes the RBI measures are only enough to take care of liquidity deficit and that they are not leading to any surplus. Meanwhile, Mahindra Group CEO and MD Anish Shah says he's upbeat on the new EV launches and that rural demand is looking good. Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you up to speed with regard to today's trading action and set you up for tomorrow as well. I'm Nigel and with me is Surbhi. Well, Surbhi, a bit of a down day. Towards the end, at least in the headline index, there was a bit of a pullback.
We both got the color wrong. The market was nowhere close to being in the pink of health, right? But yeah, I think it was a tough session. And what stood out for me, Nigel, was that while this whole tariff conversation is a global conversation, we got hit a lot more than some of the other markets. So actually, let's just start there. Even if you're looking at the Nifty's chart, then, this was a day where we've seen all-round weakness, though there was some attempt at a pullback right at the end. But nonetheless, I mean, it's a 180-point kind of a knock on the index. And this is, remember, last 3 days of the last week also the market was struggling. We've been making lower highs for the last 4 days now, including today's session. So that's, an area of concern. And the mid-cap market is where the pain really was. That's what was sort of bearing the brunt of the fall. The index was down 2%. The advanced decline ratio was down even more. And sectors, we'll get into more details as we go ahead. Metals, PSUs, real estate. I mean, these are the favorite whipping boys of the market off late. I just want to take up two stocks as examples and then we'll dive straight into, talk about the nature and the texture of the market. Erstwhile favorites are being whipped around in this market without, by the way, any major misses in numbers. Trent was that example from last week. And, running into today, we're talking about a stock like PG Electroplast, which has been the erstwhile favorite poster child of the EMS space, and the numbers are fine, but suddenly the market is just beating down names where valuations are high. So this is a very different market with perhaps a very different mindset, Nigel. So I guess painful start to the week, one would have to say.
Well, that's right. Painful start to the week. But if you want to clutch onto one positive, it'll be that at least on a closing basis, we defended the 20-day MA.
Yes.
I think the crucial support now is at around 23,250 to around the 23,300 odd mark. That's a crucial band. At least for today, we did defend that one. But let's get straight to our first segment of the day. Vivek standing by. He's going to tell us all the stock movers of the day. Vivek, take it away.
Well, good afternoon. Not so much to cheer as far as the market is concerned, especially as far as the broader end of the markets, the advanced decline ratio was quite weak. But looking at the set of stocks that did quite well, in fact, select FMCG names, and in fact, the top gainer today as far as the Nifty was concerned was actually Britannia. Cooled off a little bit in the last hour of trade, but again, select FMCG names, especially in the first half of the session, did quite well. The other stock that did quite well from the broader end of the markets was actually Vatek Wawa. Cooled off a little bit, but this particular stock, after seeing an order cancellation from Saudi, once again got a very large order from Saudi again. So that particular stock doing quite well in the session today. Kotak Mahindra Bank, saw a very strong close as far as Friday was concerned. Today built onto those gains and closed higher by close to 1.5%. And Engineers India, although the top line was quite muted, Q3 results saw significant margin expansion, and that stock from the broader end of the market is doing quite well. But on the other hand, quite a few laggards as well. Have a look at Trent. This particular stock continued its falling pattern, almost 5% lower today as well. And like you just mentioned, this particular stock has been in a free fall, especially in the last 15-20 trading sessions. The metal pack, again, something that you alluded to, the entire pack today was under pressure. A lot of news flow, plus significant selling pressure. Look at names like SAIL, Vedanta, Nalco, all of them down, anywhere between 4 to 5%. Alchem Labs, another stock from the broader end of the markets, the healthcare universe did see significant selling pressure. Alchem Labs, even though Q3 results were quite strong, especially on the margin front, the management did not raise the guidance, and the street didn't like that, given the fact that that implied a muted Q4. And lastly, have a look at Delivery. A seasonally strong quarter is what the street anticipated, but it was a muted quarter, and the stock that was already under pressure, and had been an underperformer, saw further selling pressure today. Again, one of the top laggards as far as the broader end of the markets was concerned.
Okay, all right, Vivek, thanks very much. Indeed, what a difficult day today for the bulls. Let's now straight away head across to Nimesh for today's, D-Street chatter. Nimesh, what did you pick up around this fall? Neither is the FPI selling, reducing, and levels are not really holding in the last couple of sessions.
Forget the Nifty part. The bigger pain today was in the broader market names. The mid-cap index, small-cap index, both ended 2% lower. The breadth was quite weak as well, right? A lot of individual names in the broader markets were down 10, 12, 15%. I guess what's clearly happening is the reset of multiples in the broader market stocks. All the stocks rallied pretty hard. They're trading at very expensive valuations, and now that's a bit of reset happening across the broader market stocks. So in terms of flows, I don't think there is a very large sell-off from the larger FIs, or for that matter, DIs as well. There was selling in select banks, but equally buying in the tech names as well. So that sums up the kind of market which was there. Clearly, selling in the broader market names, and the breadth was quite weak as well. In terms of individual stocks, though, the first stock on my list was Wipro. In a weak market, that stood out. There was buying interest from larger FIs in Wipro, and expect high delivery volumes in the IT names, and within that, Wipro stands out. So that's the first name. The second is Tata Motors. Again, a large cap name under pressure of late, seeing a lot of selling as well. But now at these levels, after the sharp sell-off, there is a bit of institutional interest back as well. So there are buy flows, and some HNIs as well have been active buys in Tata Motors at these levels. So that's the second name. Aegis Logistics, the other interesting name. It was under pressure today, down 5%. Has been seeing selling pressure as well. I understand a leading long-only fund has been an aggressive seller in Aegis Logistics, and hence that stock saw a bit of underperformance there. And the last is Cummins India. After the results, some sort of pullback is there. There is buying as well from larger FIs, is what I understand, in Cummins India at these levels.
Okay, all right, Nimesh, thanks a lot for that. Well, let's focus on the rupee. It fell sharply in early trade on the back of Donald Trump's reciprocal and steel tariff threats. Lata joins us to fill us in with more details on that. Lata, over to you.
It was mayhem in the morning because the rupee opened almost at 88, 87.9550 to be precise. Now, it appears that this was not very out of sync with other Asian currencies because some of them did fall about 0.8%. The fall in India at 87.95 would have worked out to about 0.6% fall. And there were ringgit and all had also fallen around the same number. And that's because obviously tariff talk, two kinds of tariff talk. One was reciprocal and the other tariff threat that came was on steel and aluminium. And therefore, obviously, a lot of Asian importers were impacted. But when it opened at that big number, the Reserve Bank appears to have made inquiries whether this is really importers coming in and buying or FPIs buying dollars, and noting that this is more position taking by what you can call speculators very loosely, but largely banks. They went in and they supported the rupee like hell. People are talking about $2 billion, some are talking even $3 billion. But it clearly looks like a Reserve Bank support because it vertically fell the dollar from 87.95 all the way to 87.56.57. Has been more or less stable at that level. Now, you stock market guys are lucky. You'll get some 22,800 support and 23,800 resistance. When we try to ask these questions of traders, forex traders, the level they themselves tell us the levels we gave you 87.50 at the beginning of the year as level that will be reached in March and 88 by end of the year are all today, have hit today. So where do you go? At the moment, there's a working figure of 82.25 by March and 89 by December. But who knows? These levels could be just, erased in a day.
No, that's right. Lata, take that point completely. Actually, over the weekend, RBI Governor Sanjay Malhotra had said that the fall in the rupee is due to Trump-related tariff policies and that the Indian Central Bank will only manage excess volatility. Listen in.
Most of the depreciation is driven by the uncertainties which have come about because of the global and especially the Trump related tariff announcements, and hopefully that should settle down and that should help us in the downward movement of inflation. For the rupee price depreciation is something which the market forces, as I mentioned, determine. We have a number of instruments at our hands to control and manage liquidity.
Well, President Trump had announced his plans to implement 25% tariffs on both steel as well as on aluminium imports. Remember, in the reaction to Trump 1.0 tariffs, initially we did see a surge both in steel prices as well as in Midwest premium on aluminium. However, the reaction to the metal index is negative today. This is because the risk sentiment was risk off today, and that was what took center stage. The fear is that tariffs will be detrimental to sentiment as well as demand globally, which is not good for stocks, obviously. So there are many variables that are at play. Let's focus on steel first. And the US imports of steel was roughly around 28 million odd in 2024, with bulk of the imports coming in from Canada, Brazil, Mexico, South Korea, as well as at Vietnam. Now, Indian steel producers' export into USA is very, very minimal. But the fear is that the steel earlier imported into the US could be dumped. For example, Vietnam exports into the United States, it doubled to 1.3 million tons. That is in 2024 in comparison to 2023. However, some believe that this will act as another reason to strengthen the ferrous company's demand for some kind of safeguard duty. So that's the optimist way of looking at it. Moving to aluminium then, the US imports of aluminium was roughly around 5.5 million tons in 2024. Canada, they accounted for more than 50% of the aluminium imports into the United States. However, the impact on the Indian aluminium players, what is that? Well, the rupee will see some kind of weakness. Also, as I mentioned earlier, the Midwest premiums will move up. So aluminium producers will gain on pricing. But there could be a ripple impact on demand, which in turn will hurt Novelis. Things are still very, very fluid as there is still clarity awaited on the date of implementation with regard to these tariffs. Will there be concessions in some countries? And also, how will these countries reciprocate is going to be important. For the time being, it was a sentiment negative and pressure tactics from Trump that weighed on metal stocks in today's trading session. That's why that was the top loser.
Okay, yeah, explains the heavy pressure on a lot of those metal stocks, ferrous and non-ferrous. Well, we have to take a quick break, but as we do that, let's talk about brighter things and happier things. And that was the commentary that came in from Mahindra & Mahindra this morning. We were in conversation with Anish Shah, Group Chief Executive Officer and Managing Director at the Mahindra Group. He spoke about a whole range of issues, including some of their latest electric vehicle launches and, of course, the pickup in the tractor segment, in the tractor business. Take a look. We'll take a break and we'll come right back.
Margins will be slightly lower to start with because you would expect that with a new product, also because it's electric. And we will be showing margins separately for ICE versus electric. And over time, they will catch up because that's where the investments come in for. And we would expect margins to be similar to ICE in the longer run, but it will take us time for us to get there. Our target, and we have been fairly audacious in what we do, is to get to 40% in every segment we play in. So yes, we have a while to go, but that is part of the journey. So we do see a lot of green shoots in rural, as we've talked about earlier as well. Yes. For the fourth quarter, we expect 15% growth year over year, and that's a very healthy growth in this space. For next year, a little early to say as yet, because it will depend on this particular season and how that goes as well. Okay. But overall, we remain fairly optimistic about where rural is right now and prospects for a tractor business next year.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं।
Welcome back. You're tuned into Markets Forward. Well, Surabhi, today I think the highlight of the day was that chat that we had with the top brass at Axis Group. tell us more.
No, absolutely. And it was a very interestingly timed conversation, given the market that we're in the midst of. And Axis, of course, going to be having their investor conference very, very soon. So ahead of that event, today we sat down with Mr. Amitabh Chaudhary of Axis Bank, who spoke about the impact of the RBI rate cut that we saw last week and why he thinks that more liquidity measures are perhaps still needed. We also caught up with the Neelkant Mishra and discussed the potential fallout of US reciprocal tariffs on India. And we also had Atul Mehra, who heads investment banking at Axis Capital. He's also the MD of Axis Capital itself. He highlights the risk of high equity supply in 2025. He says that the market could end up seeing $50 billion of fresh equity supply. The question is, can it be absorbed? Take a look at this very interesting conversation, and we take your leave on that note on this edition of Markets Forward.
Our view is that we have to keep watching the risks quite closely. The credit growth and deposit growth remains muted. RBI has assured during his monetary policy announcement that they will provide durable liquidity, and they do realize that the credit growth does need to pick up for the GDP growth rate to come back to the 6.5–7% range, and that's an important element of that. So hopefully as RBI takes these measures in the next couple of quarters, we'll see a positive movement. But right now, I mean, while we are optimistic about what could happen, we remain cautious because the real scene on the ground is we are not seeing enough movement at this point in time. You know, as all of us have been pointing out, if the growth slows down, if rupee depreciates, and it has depreciated so rapidly, if global uncertainty remains, tomorrow exports could get impacted, if let's say tariffs come in. We cannot say that, by the way, this will not extend to secure forms of business. We are in the risk-taking business. The credit costs are normalizing. We have seen some, obviously stress in some of the sectors. We have to be watchful and cautious that this should not extend to other asset classes also. No, I'm not suggesting that RBI goes slow on some of the measures they have taken. I'm just saying that some of the measures, and individually the measures, have been in some cases so tough and tight. The credit growth has dropped to a level where, obviously you are seeing some signs of stress develop, or it is having an impact on the GDP growth rate. If this same credit growth could go back to 14–15%, it will have a positive reinforcing message in the overall growth rate of the economy, and some of the stress in the system could also go away. I'm not for a minute doubting what RBI said. I'm just saying we need to wait for those measures to come out and play out, and then hopefully we'll see positive signs. I'm quite optimistic. But the measures RBI has taken on liquidity have been sufficient enough to take care of the deficit in terms of liquidity. They are not led to any surplus liquidity.
If we can get liquidity into the system, if we can get credit growth to start moving up, we will start to see, I think, the domestic economy reviving. If we are able to revive credit growth from 11 to 14–15%, I think we should be able to see a significant rebound in economic momentum as well.
23, we saw total activity of around $15 to $18 billion. In 24, we saw around circa $40 billion. In 25, we could see as high as $50 to $55 billion of sale through various corners. So that's the supply that is going to hit the market. As long as we have the domestic flows which are robust, and there the key indicator to watch out for is the SIP flows. I think as long as the SIP flows are adequate or in line with what we are seeing, we have no reason to be worried or concerned about.
I want you to recount the day that you walked into the State Bank of India at 22.
End of the day, my face was filled with black streaks because, while you're changing the carbon, it comes onto your fingers. My hands were aching. My head couldn't add 2 + 2. First day was like one whirlwind. People people don't work in the public sector. Total myth. In the last 4 years of my life at least, I never went to sleep before 1:30 in the night. I came back with 2 middle-sized suitcases and I had to clear all of those files. Yeah, exactly. Banks have the trust of the people. And the day they told me that somebody is coming to, take your picture so that they can paint it, I deliberately put on a red sari. Giving up is very simple. It's a 30-second email you can put in order to resign.
कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीजें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty declined for the 4th straight day, the longest losing streak in 2 months. Mid-caps and small caps see sharper cuts amid a broad-based sell-off. The Indian rupee hits a record low as it moves within striking distance of the 88 mark against the US dollar. But a potential RBI intervention manages to stem the fall. Dealers expect the rupee to remain under pressure in the short term. Gold prices hit a record high as investors hunt for safe havens. Finance Minister Nirmala Sitharaman warns banks and NBFCs over the recent 18% spike in gold loans turning sour. Says action will be taken if gold loan rules are violated. US President Donald Trump announces 25% tariffs on all aluminium and steel imports. Also promises reciprocal tariffs on top of existing duties on metals. The Nifty Metal Index slides as investors fear steel earlier imported into America could be dumped in India. Prime Minister Modi en route to France for the first leg of his two-nation trip will hold bilateral talks and co-chair a summit on artificial intelligence with Emmanuel Macron. The French president tells Network 18 that he, along with Prime Minister Modi, will push for tech sovereignty at the AI summit. Another setback for Byju's in less than a week. NCLT's Bengaluru bench refuses to allow closure of insolvency proceedings against Byju's despite a settlement proposal with BCCI. Says ball is in lenders' court. US-based lenders constitute over 99% of the committee of creditors and have opposed the settlement proposal in the past. Riot-hit Manipur faces a political crisis. Chief Minister Biren Singh resigns 21 months after ethnic violence broke out. Governor declares the upcoming assembly session null and void. The state is staring at potential president's rule. Asia's largest aerospace and defense exhibition kicks off in Bengaluru. More than 150 foreign companies and representatives from over 90 countries will be in attendance. Right, let's start with the market. Stocks got battered on Dalal Street as the market slipped for the fourth straight session. This is the longest losing streak in 2 months, with the fall showing no signs of abating. Nifty and Sensex recorded cuts of nearly 1%, but it was the broader markets that took it on the chin. The mid-cap and small-cap index tanked over 2%. Prashant Nair is here with the day's trading action. Prashant.
It was a tough day with the market taking a bit of a swoon and never really finding its feet through the course of the day. And the problem, of course, was with broader markets more than large caps. So, let's just take it from the top. The Nifty up on your screen did recover about 30-40 days from the sort of point low. And the Nifty Bank starting at about 224, 225 did see a bit of a bounce, 120 odd points worth. But the mid and the small cap indices, 2% flat out cuts on both those, although there as well from the absolute low point intraday, there was about 0.4, 0.5% kind of pullbacks that you saw. 5:1 declines to advances, and that was the extent of the broader market decline that we really saw. So very few pockets of green sectorally or otherwise. I'll start with what was down on the Nifty. Trend continues to come off the sharp cut on the earnings day last week. Today, top loser on the Nifty, Power Grid, Tata Steel, Titan, ONGC, Bajaj Finance were some of the names. Names like Bajaj Finance had broken out after about 2 or 3 years, but they're almost back in that range once again. Very few on the upside, not really worth mentioning. So I'm going to go straight to broader markets and where the losses were. Alchem Laboratories was a big cut today. Big number one volume and loser today. Max Healthcare, sharp cut. KRN was fairly recent listing. Tilak Nagar was limit down 20% on the back of news flow, of course, but it's done very well on the upside. Goldium International, one of those big new age kind of names which people were chasing, but now, of course, it's been down. Carraro, which is a recent listing, it was a pure offer for sale. It's back below its issue price, the IPO price actually. Five-star finance company, Safari, JM Financial, NetWeb, another one of those names which has done very well. Jyoti Structures, Acme Solar, Kotak recently initiated, stock did well, but is basically back below those levels. Aeroflex Industries and EMS, some of the other names which came under fair bit of selling pressure. Some gainers as well. Reddington stood out. Signature, the real estate player, ITC Hotels, Varroc Engineering, Newland Laboratories, and something like a Camlin Fine was another one. There was, of course, the problem with the currency as well. The rupee, of course, almost got to 88, and then there was massive buying which came in. Reportedly, the RBI in the market supplying, dollars. So I think we'll, of course, have to wait for confirmation on that, but there was a massive move in the currency. a lot of of course, all of this is tied up with what Trump does with tariffs. Reciprocal tariffs is essentially what we heard from President Trump in the US, and that is what is keeping markets nervous. And that is the reason why, that backdrop is the reason why this meeting between Prime Minister Modi and President Trump in the US this week will be very, very closely watched. Back to you.
Thank you, Prashant, for that. Aswath Damodaran, New York University finance professor and a well-known stock valuation expert, has called the Indian equity market the most expensive in the world. In a blog post, Damodaran argued that no amount of hand-waving could justify the valuations for Indian companies. Damodaran said that though US and China too fall into the most expensive valuation category, India was trading at significantly higher levels than most markets. He also cautioned, and I quote, "At the wrong price, even the safest market with great historical returns are bad investments." Axis Bank CEO Amitabh Chaudhry says the overall sentiment is a bit cautious at the moment. The bank's chief economist Neelkant Mishra believes economic revival is possible if credit growth can touch 14%.
I think the sentiment in our minds does remain a bit cautious at this point in time. RBI has taken a step forward in terms of cutting the interest rates. I mean, while we are optimistic about what could happen, we remain cautious because the real scene on the ground is we are not seeing enough movement at this point in time.
If we can get liquidity into the system, if we can get credit growth to start moving up, we will start to see, I think, the domestic economy reviving. If we are able to revive credit growth from 11 to 14, 15%, I think we should be able to see a significant rebound in economic momentum as well.
Trump's tariff threat is also moving the forex markets. The Indian rupee moved closer to 88 levels against the dollar. But a potential RBI intervention seems to have stemmed the fall, at least for now. Lata Venkatesh is here with more on the money markets. Lata.
It was mayhem in the morning because the rupee opened almost at 88. 87.9550 to be precise. Now, it appears that this was not very out of sync with other Asian currencies because some of them did fall about 0.8%. The fall in India at 87.95 would have worked out to about 0.6% fall. And there were ringgit and all had also fallen around the same number. And that's because obviously tariff talk, two kinds of tariff talk. You know, one was reciprocal and the other tariff threat that came was on steel and aluminium. And therefore, obviously, a lot of Asian importers were impacted. But when it opened at that big number, the Reserve Bank appears to have made inquiries whether this is really importers coming in and buying or FPIs buying dollars, and noting that this is more position taking by, you know, what you can call speculators very loosely, but largely banks. They went in and they supported the rupee like hell. People are talking about $2 billion, some are talking even $3 billion. But it clearly looks like a Reserve Bank support because it vertically fell the dollar from 87.95 all the way to 87.5657. It has been more or less stable at that level. Now, you stock market guys are lucky. You'll get some 22,800 support and 23,800 resistance. When we try to ask these questions of traders, forex traders, the level, they themselves tell us the levels we gave you, 87.50 at the beginning of the year, as level that will be reached in March, and 88 by end of the year, are all today, have hit today. So where do you go? At the moment, there's a working figure of 82.25 by March and 89 by December. But who knows? These levels could be just, erased in a day.
Thank you, Radha, for that. Gold prices have hit another all-time high and there's no stopping the rally. The yellow metal has gained over 10% since the start of 2025, thanks to continued safe haven buying, thanks to the tariff wars and the uncertainty surrounding global trade. Gold prices have also been on a tear back home, and gold loans, NPAs, have seen a sharp spike recently. After NPAs in gold loans surged by 18%, Finance Minister Nirmala Sitharaman warned banks and NBFCs. Speaking in Parliament, she said action will be taken if financial institutions are found to be flouting the gold lending norms.
There is a process of giving enough number of notices to the bank account holder to say your servicing is not up to the mark, and that in the eventuality of you not coming back to pay, we will be forced to go on an auction. Now, even for going on an auction, there are very well laid out procedure. If there are specific instances where the Honorable MP thinks these laid out norms are violated, I'm quite willing to take the details and act on it.
On to all the action from the oil market. Oil prices inched higher after Trump's latest tariff threats on steel and aluminium. The move could dampen global economic growth and energy demand. Meanwhile, prices of cryptocurrencies remain volatile after Trump's tariff moves. While Bitcoin edged up above the $97,000 market, other cryptocurrencies like Ethereum slipped above 1%. The global crypto market declined 0.3% in last 24 hours. US President Donald Trump has fired a fresh salvo in his administration's trade war. He's announced plans to formally impose 25% tariffs on all steel and aluminum imports, thereby expanding his protectionist campaign into the metal sector as well. Addressing the media at his resort in Florida, Trump also outlined plans to unveil reciprocal tariffs later this week. Remember, Trump had imposed similar duties on steel and aluminum during his first term as well. However, he later granted duty-free quotas to some nations, including Canada and Mexico.
I'll be announcing probably Tuesday or Wednesday at a news conference reciprocal tariffs, and very simply, it's if they charge us, we charge them. Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum too.
10%?
No, 25%.
25 for aluminum as well?
25 for both.
The road to Washington for Prime Minister Modi will go through Paris. He has embarked on his two-day bilateral visit to France. PM Modi will co-chair the AI Action Summit with French President Emmanuel Macron. Ahead of the summit, President Macron is set to host PM Modi for a dinner which is likely to be attended by several tech CEOs at the president's official residence in Paris today. Speaking to First Post and France TV, President Macron said he'll push for tech sovereignty along with Prime Minister Modi and reduce dependence on US and Chinese AI models. Macron also said that both India and France can carve a third way forward in the tech race, which has largely been focused on US and China.
If you depend on others to produce medicine or technology, then things can go wrong. So we need that partnership because we have shared interests and because we have the same worldview, focused on friendship and also interests. So together we will develop technological sovereignty. We want to train our talent, that they can go abroad, but they should also be at home. And we want to create data centers in India and in France.
Shares of Ola Electric declined in trade today after reporting a weak set of numbers in the third quarter. The stock was also impacted after brokerages including Goldman Sachs and Citi reduced their target prices on the company's stock. This comes as the company plans to enter the EV motorcycle segment. Speaking to CNBC-TV18, Ola Electric Mobility's CMD Bhavish Agrawal said that the company will be aggressive in responding to competition, which may impact gross margins going ahead.
There are some variables which we control and there are some variables we don't control. So our product, the supply chain, the gross margins are all under control, our operating costs. But if the market is aggressive, we will, since we have the leading gross margin profile and vertically integrated manufacturing, we will be aggressive in responding to market. So that might have some impact on gross margins in the near term. So our strategy remains to increase penetration from a position of strength vis-a-vis products and manufacturing.
Mahindra CEO and Managing Director Anish Shah has said that he expects electric vehicle margins to match up to the ICE margins over a period of time. Speaking to CNBC-TV18, he added that he remains optimistic on tractor industry and is seeing a healthy trend in rural area. Shah also said that Prime Minister Modi's visit to the United States is important since the American market is crucial for Mahindra.
Our target, and we have been fairly audacious in what we do, is to get to 40% in every segment we play in. So yes, we have a while to go, but that is part of the journey. So we do see a lot of green shoots in rural, as we've talked about earlier as well. Yes. For the fourth quarter, we expect 15% growth year over year, and that's a very healthy growth in this space. For next year, a little early to say as yet, because it will depend on this particular season and how that goes as well.
Okay.
But overall, we remain fairly optimistic about where rural is right now and prospects for attractive business next year.
Facebook parent Meta platform is looking to lay off over 300 employees, impacting around 5% of its workforce. Reports have said that the employees were informed through a memo last week. The report also cited that Meta CEO Mark Zuckerberg told his staff in January 2025 that the company would raise the bar. He also said that the company will make quick move to remove low performers. And on that note, we'll slip into a short break, but coming up next, riot-hit Manipur faces a political crisis. Chief Minister Biren Singh resigns 21 months after ethnic violence broke out. More details when we return. Welcome back. Another setback for Byju's. In less than a week, NCLT's Bengaluru bench has refused to allow closure of insolvency proceedings despite a settlement proposal between promoter Ravindran and BCCI. Now the court has directed lenders to decide on it instead. Ashmit Kumar joins us now with the details. Ashmit, what does this mean for Byju's now?
Well, it's a difficult situation that Riju Ravindran and Byju Ravindran find themselves in. Bear in mind that just a few days back, we had the NCLT, which had reconstituted, reshaped the COC. By reshaping, they had essentially included the US lenders back on board. The reason that's significant is, well, because US lenders account for 99.41% of the voting share. So that's largely it. The US lenders is the COC. That decision happened just a few days back. Today, the NCLT was required to decide on whether or not Riju Ravindran can pay the BCCI and settle the dispute which began this entire insolvency proceeding. The answer to that the NCLT has given is that, one, will not take a decision. The NCLT will not take a decision. It has instead directed Riju Ravindran to file this application before the COC. Now, that clearly is a difficult position for him, given as how the US lenders have been batting steadfast against any form of settlement. The US lenders have argued that their funds which they advanced to the Byju subsidiary in the US has in fact been siphoned off by the likes of Riju Ravindran, Byju Ravindran, that the amounts are large. We're talking about north of 11,000 crore rupees, and the fact that there is no certainty whether these funds which are being used to settle the BCCI payment dispute is in fact those very same funds that the US lenders had advanced, now being round-tripped for a settlement. Now, these are allegations that were made, and it's the US lenders which are now charged with deciding on the fate of this settlement and on the fate of withdrawal of these insolvency proceedings. So clearly a tricky position for both Byju's as well as their founders, Byju and Riju Ravindran. Back to you.
Thank you, Ashmit, for that. Manipur Chief Minister Biren Singh resigned from his post close to 2 years after the start of an ethnic violence which has since singed the state. The move came a day ahead of the state's budget session and amid rising dissent within the BJP over his handling of the ethnic violence. Biren Singh stepped down from the top post after a meeting in Delhi with Union Home Minister Amit Shah.
मणिपुर की जनता के लिए उन्होंने ये इस्तीफा दिया है और उन्होंने भारत सरकार को भी जो रिक्वेस्ट किया है कि हमारी मणिपुर के इंटीग्रिटी को बचाना है, हमारे मणिपुर के जनता को इतना सेफ्टी रखना है, ये सब उसके मन में है। इतना विकास का काम जो 2017 से करने के बाद अचानक हम कुछ प्रॉब्लम जो फेस किया है, बहुत दुख हुआ उसको भी, और अभी आने वाले दिनों के लिए उन्होंने सोच के रिजाइन किया।
The BJP, the NDA got a huge majority in February 2022. But within 15 months, Manipur began burning. So that is the first question. How did Manipur get to where it is today, even after a double-engine sarkar, even after such a huge majority in Manipur? And second question, why is the Prime Minister avoiding going to Manipur? This resignation of the Chief Minister is a direct result of the Congress's no confidence motion.
Politically speaking, it's uncertain as far as Manipur's future is concerned, but what really aggravated circumstances to this extent, what CNN News 18, CNBC Network 18 has learned is that there were intelligence inputs and political assessments which suggested that at least 20 MLAs from the Bharatiya Janata Party could be willing to support the Congress's no confidence motion that they were planning to bring in if this budget session of the Manipur Assembly had gone through. If you recall, last evening after N. Biren Singh submitted his resignation, Governor put in an order through his secretariat making his earlier order calling for a budget session from today null and void. So now that this immediate crisis has been averted, the government, the central government is looking at next move. There is a high likelihood that governor's rule could be invoked. The governor's report is expected to come to the centre in a couple of days. The budget session of Parliament ends on the 13th, and there is a high possibility that post that the central government could take a call on whether the next Chief Minister from Bharatiya Janata Party will replace Biren Singh or whether Governor Ajay Bhalla for now will be at the helm of affairs in Manipur, giving the central government enough elbow room and enough time to speak to all stakeholders and decide who is the best suited candidate to replace Biren Singh and bring the Kukis and Metis together in the interest of peace.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
I want you to recount the day that you walked into the State Bank of India at 22.
End of the day, my face was filled with black streaks because, while you're changing the carbon, it comes onto your fingers. My hands were aching. My head couldn't add 2 plus 2. First day was like one whirlwind. People don't work in the public sector. Total myth. In the last 4 years of my life at least, I never went to sleep before 1:30 in the night. I came back with 2 middle-sized suitcases and I had to clear all of those pipes. Yeah, exactly. Banks have the trust of the people. And the day they told me that somebody is coming to, take your picture so that they can paint it, I deliberately put on a red sari. Giving up is very simple. It's a 30-second email you can put in order to resign.
presented by Policy Bazaar.
CNBC-TV18, the Policy Bazaar Insurance Show.
From the beginning of this special insurance series with Policy Bazaar, we've had a special focus on India's health insurance setup, the right awareness, suitable policy, adequate coverage, and effective claims. Today, we unfold a new edition, currently nascent but promises to cover the country's healthcare expenses in a big way going forward. Inclusion of Ayush treatments through health insurance. To discuss what kind of treatments get included under Ayush, the scope, the size of these treatments, and can your health insurance policy cover all of them for you, we are joined by Mayank Bathwal, CEO at Aditya Birla Health Insurance, Amit Chhabra, the Chief Business Officer General Insurance at Policy Bazaar, Siddharth Dominic, the CEO at CGH Earth Wellness, and Thomas Devasya, the former member non-life at the Insurance Regulatory and Development Authority of India. For Thomas Devasya, until very recently, he was the member non-life with IRDAI. More relevant is that he's acknowledged as a technical expert and a client advisor in general insurance, reinsurance, including health. He's also developed and underwritten bespoke group health programs that embedded features that are today referred as wellness. Thank you, gentlemen, for joining us today for this discussion on a very, very interesting topic, that is, how to put this missing piece of the puzzle of insurance into the scheme of Ayush treatments. Thank you so much. To start with you, Siddharth, as a conversation starter, 46% of rural and 53% of urban individuals availed Ayush treatments, and these numbers and the data are provided by MOSPI. In fact, another interesting data point would be that 95% of the people in the country today are aware of Ayush treatments. So though it would be new in the context of insurance, but the term Ayush and the treatments there are not new to Indian population. But for people who've not heard this concept, break it down for us. What are the treatments that get included as far as the umbrella of Ayush treatments are concerned? And second thing, you've been running a wellness center. Over the last couple of years, what has been the approach from people? Are they inquiring about these treatments? How has the adaptability gone up as far as these treatments are concerned?
Yeah, thank you, Yash. I think I'd like to begin just to say that we as CGH Earth Wellness, we've been in the business of offering Ayurveda, holistic Ayurveda for the last 22 years. And we've seen a world of change over the last 20 years. When we started, it was an international audience we were catering to. But over the post-COVID, we have seen a huge increase, a 50% increase in the number of Indians who have been seeking alternative treatment, traditional sciences. So when you ask me the question, what do you mean by Ayush? I think it's all those sciences are the knowledge that resides in India, from Ayurveda, Yoga, Unani to Siddha, and naturopathy, homeopathy, and all those sciences. So suddenly the world is taking recognition of these sciences and seeing the wonders that it can do to lifestyle conditions, lifestyle issues. And there is much more awareness of one's health today in a post-COVID era. And this is really reflecting in the kind of population of people who are inquiring with us for our kind of products.
Mayank, with that, the other side of responsibility also comes on insurers like yours. The regulator recently also spoke about how insurance companies as an advisory should include Ayush treatments. Let's just understand the structure of any health insurance policy today. For new policies, for existing policies, does it get embedded in the policy even if it's an old policy? And for new policies, do people have to seek a rider or does it come with the policy? If you can help us understand that.
I agree that, I think Ayush is clearly becoming a very, important part of the mainstream healthcare, service delivery. And I think in that context, now all health insurance products cover Ayush treatments as well. So there's, as the question that you asked, whether it's only old or new, no. Whether it is existing products, whether it's new products, all of those products cover the Ayush benefits across the entire spectrum of Ayush, as Siddharth just elucidated. One thing that we have to keep in mind is that traditionally the health insurance products in India have generally catered to inpatient expenses. So if you're in the hospitalization expenses, the effort and work on bringing in outpatient expenses into the insurance stream is still work in progress. I mean, we have made some progress across the industry. We ourselves, as at Aditya Health Insurance, do a lot of that, at least in the corporate space now. In the retail, we are working because of various reasons. And to that extent, Ayush, whilst inpatient treatment will be covered 100%, outpatient will be restricted to where the existing product caters to outpatient generally.
Mr. Devasi, I want to come to you with a question. Of course, as I started, asking Mayank also, the regulator from its part has sent out an advisory to insurance companies to look at the coverage here. In your understanding, what more should be done from the regulator's end to ensure that the advisory is followed up and taken up by the industry in a meaningful and a significant way ahead?
Indeed, the advisory that you allude to would be the one that was issued sometime in January 2023, making effective 1st April all Ayush coverage. But there are certain regulatory interlocks that are created by the IRDA, typical of any other regulator. So it also there was the regulations on policyholder protection, where one of the stated objectives was that the insurers should ensure policyholder-centric governance. In ordinary language, it means that you should operate with fairness and to certain ethical standards. Then that was reinforced with even regulations on corporate governance, which required board-level, monitored, board-driven committees and subcommittees that are going to look at product construct, product take-up, policyholder service levels, how grievances are redressed. So it is not just that we issue or the IRDA issues a regulatory advisory and then sits back. Okay, regulators do not operate a hand-holding function, but IRDA as a developmental regulator has a standard practice of monitoring products. So like Ayush, it will monitor the Ayush scope of policies. It will look at service levels impediments. It will look at the generation of grievances. It will look at the take-up of Ayush coverages via claims analysis. And it will keep monitoring. So that's standard practice. So I think the industry is in good hands.
Amit, I want to come to you with a question. Since you also communicate and interact with policyholders directly in that sense, how are you looking at different ways to tell policyholders, to sensitize them that this is something that they should be looking at if it is their preferred way of treatment? It can be covered under insurance. Here are the full benefits. How do you tell them and reach out to them with that ultimate message?
So it's quite a dichotomy, if you look at Ayush and health insurance right now. See, historically, most of the Ayush treatments have been OPD, outpatient, So like I remember my first or only stint with Ayush has been my mom taking me to a homeopathic doctor, for a fever or a minor ailment. You get those medicines, you take them over a period of time and you recover.
Correct.
They are considered to be extremely safe. People trust that a lot. But largely, what we have seen is that Ayush treatments are outpatient in nature. Most of the voluntary health insurance in India historically has not really covered for outpatient. They've all been inpatient treatments where people have bought health insurance.
Correct.
From the purpose of, covering for cancer and heart attack and knee replacements and cataract and so on and so forth. So I think that is one big sort of gap, I would say, between where Ayush coverage is and where consumers think Ayush coverage is. I think that is one gap. The other issue is how do you provide cashless inpatient Ayush treatment? That's the other thing, because consumers of health insurance typically prefer a system where you get cashless health insurance. So I think that's the other sort of issue to solve, because if I am a consumer and I'm buying health insurance and I want let's say inpatient Ayush treatment, I would expect cashless coverage. I would not want to pay from my own pocket and then go into a process of reimbursement. So So these are the couple of things that we really focus on when we talk to our consumers. One, we're trying to sensitize people that outpatient coverage can also be bought when you buy a health insurance policy, because that would mean that your trip to a homeopathic doctor or to a yoga center or stuff like that can also be covered, because that's the more likely expense that might happen.
Correct.
And second thing is, in case there is an inpatient treatment required, then that can be done in a cashless manner as well.
Okay, makes sense absolutely to what you're saying. Mayank, just to carry that question forward, with respect to it incorporating itself in existing insurance policies as well, is today one big problem of sort of understanding the data and pricing these products accordingly?
See, firstly, I think we must understand that it's an alternate treatment. It's not that you're doing allopathy also and you're doing Ayush also. I mean, so therefore you are either going for Ayush at a particular point of time, or you're going for the tradition, the currently covered, let's say allopathic treatment. So that's not the big concern that, will I be charged more because Ayush is covered? That should not be concern in the mind of the consumer, because some people will go for one, the other one will go for the other treatment. For Ayush, I think we'll have to work together with the concerned stakeholders, people like Siddharth and the ministry and other stakeholders in the Ayush treatment, in terms of what should we use as data to price our products for, what could be the incidence rate, what should each treatment type cost us in different categories of, let's say, treatment facilities, etc. And I think that work is on. As we interact more, over somewhere we have to make a beginning. Just because we don't have data, we can't say, hey, we can't price it and offer it. Fact is, we are offering it now. So as we start getting more and more consumers using these services, I think we'll start gathering data.
Correct. Mr. Devasya, to come to you with an important point that, the Ministry of Ayush also said in a very recent meeting. They said that the Ayush treatment should be based on transparency, standardization and scientific approach. These are the three important pillars that they spelled out as far as the treatments and the insurance coverage is concerned. I want to speak to you about one of these 3 points, and that is standardization. From the regulator's point of view, how should the regulators sit with the industry, and what should be the parameters for standardization of treatment costs going ahead, which will help the insurance companies also to identify the claims in the right way?
My personal view is that it's not within the regulatory ambit to actually go and supervise standardizations of things that are not in its domain. So my view is this: if you look up the work that is done by the Ministry of Ayush, which incidentally I think in late 2023 or 22 had also set up a committee on core experts for insurance. And the industry has coordinated with that. Okay, so the work that is done there is basically to actually mirror the clinical data standards of conventional medicine, allopathic or English or Western, okay, and bring in that same organization into the entire, set of Ayush, forms of treatment.
Correct.
Okay, and I believe that there's substantial work done there. They've also gone into standardization, creation of awareness. They've also, looked at the Drugs and Cosmetics Act, okay, to ensure that quality standards of Ayurvedic products and services, or Ayush products and services, are also available and visible.
On that note, we have to take a very, very short break. Lots more as far as Ayush treatments and the concept of insurance is concerned on the other side of this short break.
CNBC-TV18, the Policy Bazaar Insurance Show.
I do believe we're making progress. We want to stop the Ukraine-Russia war, and I want to stop it just because I hate to see all these young people being killed. The soldiers are being killed by the hundreds of thousands.
CNBC-TV18, the Policy Bazaar Insurance Show.
Welcome back to this special insurance series, the Policy Bazaar Insurance Show. And today's discussion is on a very, very new concept, which is Ayush treatments and how these treatments for you can be covered through the right insurance policy. Siddharth, to start this second part of the discussion with you, for you also, I mean, just from the point of view of commercial sense also, it is important to be, tied up with insurance companies so that, people coming to the wellness center for treatments also get that advantage. Is it difficult today to sort of go out and make these tie-ups with insurance companies? What are the problems that you're facing, and how, according to you, what would you require from insurance companies to have, expand your network in terms of the coverage here?
Yeah, as an operator, the kind of issues what we've been hearing from patients who come to us has been the difficulty in processing insurance in case of an Ayush product. And I think the difficulty comes from there is no standardization. The lens used to look at Ayush offerings is very similar to those used for allopathic treatments. Whereas this whole process has to be looked at with a different lens. So I think this conversation is something, and there needs to be a lot of regularization that has to happen. There are people who are not accredited. How do they look at, what kind of lens do they use for that? I think it's a big subject which Ayush is
opening it up for different, correct. Yes. Makes sense, absolutely. Amit, to come to you, today insurance is being looked at as a tool to cover large, big-sized healthcare expenses. Even today, with facilities like OPD as well as outpatient treatment, insurance numbers tell you is not used that extensively, because a lot of people have this idea that if I tend to use my insurance policy, it does take away certain benefits that could be in the form of no claim bonus in the following year. Ayush treatments, though on one side they're not very well understood, but also thought of as treatments which would not require any significant cost, and I can shell out that money out of my own pocket rather than using the insurance policy. How do you look at this entire dichotomy, the dynamics of using an insurance policy for an Ayush treatment that you want to have?
So yes, actually the dichotomy is actually getting a bit better, I would say, in the last couple of years. A lot of innovation has happened in products, and I'll give you some examples. So one, a lot of policies now come with what is called a claim protector kind of a benefit, or an NCB protector benefit. What it means is that if your claim is a small claim, so let's say you have a policy of 10 lakh rupees, sum insured, and you claim less than 1 lakh rupees, then your no claim bonus is not impacted. So that is a benefit which protects your no claim bonus. That's one. Secondly, a lot of policies now come with actually what is called cumulative bonus and not no claim bonus. So that basically rewards you for being with the insurance company and not really linking it with your claim behavior. So a couple of these innovations have come in, and that they've sort of dealing claim and your policy benefits as such. That's part one. See, at the end of the day, a consumer is buying a health insurance policy to claim. If you disincentivize too much, then somewhere there's a conflict. That's one. Second thing is specific to Ayush. Again, I think as this develops, I think, and as I would say health insurance integrates more with Ayush, you'll probably start to see a lot of savings coming from people who claim for Ayush treatments rather than the traditional allopathic treatments. See, what's happening is hospitalization is becoming more and more expensive. Modern treatments are coming in, robotic surgeries are coming in. The cost of a regular hospitalization is becoming expensive and expensive. As consumers use more of Ayush rather than as an alternative rather than going for the regular hospitalization, I think the insurance companies will start to see a lot of benefit in terms of the costing that happens to them. And I think as we start to see a benefit, automatically that benefit will get passed on to the consumer as well. So I would say probably in a few years down the line, insurance companies may say that if you opt for an Ayush treatment rather than a regular hospitalization, I will give you a certain benefit. So I'll give you another example which is real right now. A lot of companies say that if you go to the hospital, I recommend, or if you opt for home hospitalization or treatment at home, rather than going to a hospital, they give you a HospiCash benefit. Correct. So you get some 5,000 rupees a day if you opt for hospitalization at home.
Of the insurer's choice or at home. Yes. No, that will be very important. I think the point that you make to encourage these treatments through giving incentives to policyholder. But since we have two stakeholders of this entire, Ayush and insurance dynamics, Siddharth, to start with you, today, as you see people coming to your wellness center itself, as a general trend, how many of them come for treatments, curative treatments, and how many of them come either for recreational purposes or relaxation or other things that Ayush treatments do help?
Last 20 years of our operation, we have seen we started off in the space you defined as rejuvenative / wellness. But now 95% come for curative. So that's the big shift. People are coming for very, very serious health issues and concerns. They don't see the solution modern medicine can give. They think traditional and Ayush treatments can provide answers to their conditions.
Mayank, just one question before we conclude this discussion. In your sense, from the insurer's point of view, what could be the kind of benefits that you are looking at in terms of co-pay, in terms of room rent, or any innovative ways in which you look to incentivize people to take up this treatment?
I would say that, if we are practical, I think we're a little bit away from that situation, Yash, because I think first we have to get people to be aware of this. We'll have to solve the problem of what's a network, what's a paper. I think we'll have to first solve that problem rather than I don't think so today we are necessarily reached that conclusion.
Correct.
At some stage with enough data, maybe that can happen. The benefits can be in various forms. It could be in copay, it could be some additional benefits in terms of increase of your sum assured, like it happens in others. It could be some other benefit like HospiCash or some other, healthcare services benefits, etc. I don't know what shape and form it will take in the future because I think it's a little bit futuristic for now.
Mr. Devasya, to come to you with the concluding question, what according to you would be some of the low-hanging fruits which the insurance industry should aim for immediately to clear out and make the foundation for a very easy claims process and treatment process?
We do not understand that Ayush is actually something that goes to the credit of health insurers who are laboring under paying up for conventional medicine treatments. Let me pull a very close comparison. The same underwriting broadly is the same concept. But if I pick up property or infrastructure or construction risk insurance, the very insurer, the very underwriter is giving a whole lot of incentives like you risk-proof your property, I will give you premium credit.
Correct.
Okay. You do loss prevention, I will give you credit. And let's say the loss occurs, you have instruments for loss control, I will give you credit. What is Ayush? Ayush is nothing but adapting your lifestyle into something called healthy lifestyle. I don't want to wait, let's say, 5 years down the line. I feel that IRDA should intervene and put a stop on this and understand that insurance needs to be delivered and enforce that just as they enforced Ayush.
Valid point. Thank you so much, gentlemen, for this discussion. With that, we've come to an end on this very special edition of the Policy Bazaar Insurance Show. We'll come back soon. We'll return soon with another interesting theme, another interesting episode. Till then, stay safe, stay insured.
CNBC-TV18, the Policy Bazaar Insurance Show.
Presented by Policy Bazaar.
And I expect to have many more conversations. We have to get that war ended. It's going to end, and we have to get it ended. And we have to get it ended soon. Should have never happened, would have never happened if I was president.
Hello and welcome to News Center. I am Ashmit Kumar. Now, tariffs, trade and defense collaboration is likely to feature high on Prime Minister Modi's agenda when he meets US President Donald Trump in Washington later this week. Now, Donald Trump has singled out India on multiple occasions as a tariff abuser. However, he's also been generous when it came to praising the Prime Minister Modi, who he called is a great man. Now, India's top bureaucrats told CNBC-TV18 last week that India had already streamlined tariffs when it came to the US imports. India's defense secretary had also said that they are ready to procure more defense equipment from the United States. The statement is important since Trump has vowed reciprocal tariffs on metals later this week. This after announcing plans to formalize 25% tariffs on steel and aluminium. However, the road to Washington for Prime Minister Modi will go through Paris. The Prime Minister is en route to France for the first of the two-leg of his two-nation visit. He will co-chair the AI Action Summit, which French President Emmanuel Macron. We will be discussing Modi's upcoming trip to the United States with our guests in just a bit. But first, here's President Trump announcing his latest tariff salvo.
I'll be announcing probably Tuesday or Wednesday at a news conference reciprocal tariffs, and very simply, it's if they charge us, we charge them. Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum too.
10%?
10, no, 25%.
25 for aluminum as well?
25 for both.
We should not really anticipate something which is not really stated. The kind of thing which you say, tariff against India. This has not been stated. I mean, if the US admin or anybody has not really stated, so why should we really be saying so? So that will be premature and not warranted because, these are different grounds on which the tariff is being put in. So far as we are concerned, we are a very open economy. If you really look at the US imports into India, most of them are into a very, the tariffs are very low.
We do have some procurements which are on the anvil where American companies would be in the picture. And as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course, we'll be, those are carrots that will be, that we will be able to dangle before the Americans. We are already, meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Well, we're now joined by former Commerce Secretary Ajay Dua. Thank you so much, Mr. Dua, for joining us on the show. And shortly, we'll also be joined by Ambassador Meera Shankar, former ambassador to the United States. But Mr. Dua, coming to you first. Ominous words there coming in from President Donald Trump aboard Air Force One, talking about imposing tariffs on all aluminum and steel coming into the United States. Now, India has limited exposure when it comes to export of steel or aluminium to the United States, so we don't really get impacted there. But there is certainly that overhang. Donald Trump calling India the tariff king, imposing these tariffs. There is conversations within Indian circles as to what this might actually translate into as we head deeper into 2025. Your quick thoughts to begin with on the tariff overhang on this bilateral conversation between President Donald Trump and Prime Minister Modi.
Ashmit, I don't really apprehend that the tariffs upon India would be the central theme when Prime Minister Modi meets President Trump, for the simple reason that we are not in that category of high tariffs on imports, particularly from the United States. The goods which come to India from the United States are largely, as you know, LNG, crude oil, diamonds are actually re-exported in a way, but sent back to us after having been worked upon or in raw form. All those items, their duties are either zero or near zero, and certainly not more than 10%. So the average will be somewhere between 0 to 10%. So I think while talking about when President Trump talked about it well before his swearing in, he was talking in terms of general level and general perception that India protects itself, whether it is for its Atmanirbhar program or made in India that we've been living.
Right. Mr. Dua, let me bring in the recently concluded budget. We saw multiple tariff lines for whether it's high-end bikes, high-end luxury cars, solar cells, chemicals. We saw reduction and rationalization of customs that we charge on a number of these tariff lines. Is that one in anticipation of any action that may come from the United States? And if that's the trajectory that the Indian government is taking, can we expect even deeper cuts as we head into 2025 or even in Washington with the Prime Minister meeting Donald Trump?
Probably, yes, that the action which was taken was in anticipation of any move by President, any kind of so-called threatening move by President Donald Trump. Harley-Davidson mobiles, which is the more prominent one, which always figures at one time saying we are levying very high duties because we don't let Harley-Davidson come into India. We allowed that, then we are protecting it a little bit through our mobile industry by levying duties, higher duties on that. On that, we have relented because it doesn't make too much of a difference to India. The number of mobiles which Harley-Davidson, they cost too much, between 3 lakhs, the lowest model, to some 24 lakh rupees, the highest one which comes into India. There are only 3,000 to 4,000 bikes which are exported to India, and the people who use those bikes can probably afford to pay a little more duty also. That was our logic earlier. Now, if it makes a difference to the United States, we have sort of even brought this down further. The question is, what are the goods which really come into, or which India exports there? We are not much of an exporter of steel products or of aluminum, which in the last term also, President Trump levied a duty, 25% and 10%, if you recall. He's talking about, which was undone by his successor. He's talking about globally levying a duty, not just for India, a duty of 25% on steel imports.
So not aimed at India, but India may compensate for this fear, this apprehension in the mind of Donald Trump with perhaps a few duty cuts being announced in Washington. Mr. Dua, let me bring in a new dynamic here. This is the Elon Musk dynamic. When we talk of this apprehension in the mind of the US administration that US has not been able to make inroads, that India enjoys a trade surplus, they have a deficit with us. And here walks in Elon Musk, again, has the year of the president. And at the same time, his companies haven't quite enjoyed the kind of inroad success that they've seen elsewhere. So whether we talk about electric vehicles, whether we talk about Starlink, haven't quite managed to make the inroads here, regulatory challenges here for both these companies. How much of a factor will that play? We're already hearing reports that Elon Musk will be calling on the Indian Prime Minister. How much of a factor will that be as far as conversations between Trump and Modi are concerned?
I would not, Ashwat, I would not underplay it. It is very possible that the very fact that the President Trump during his election campaign called India the tariff king, it's one of the tariff king sort of countries, that it was because of President Elon Musk having got close to President during his campaign, and the fact that he had wanted us to reduce the duties on his Tesla motors coming into India, and he had one meeting with the Prime Minister. Second, he dropped out of at the last moment when he came to know that he's not going to be getting any duty cuts after even calling on the Prime Minister, Indian Prime Minister, a second time. So it could could have given a broad impression that to President Trump, when hearing from Mr. hearing from Mr. Musk about, the Indian duties on his vehicles, his high-cost Tesla cars. But I think even there, the fact is the president himself, Donald Trump, is himself now saying, I am not, and he's passed an executive order on the very first day of his swearing in on any subsidy being given to mobile renewable sources of energy, as well as electric mobility. That includes the battery operated cars. So he cannot now be expecting that India would, because for us, it is outright kind of foregoing income, revenue, if we are expected to duties on Tesla in India, while in the United States, there is no special concession being afforded to renewables or electric mobility.
Right, Mr. Dua. Let's go across to our other guest, Ambassador Meera Shankar, who's joining us live on the phone line. Ambassador Shankar, again, the overhang. I was just discussing with Mr. Dua on the overhang that exists between this meeting, between India, between Modi, as well as Donald Trump. The question I wanted to ask is that in this overhang, when we're looking at issues of deportations, when you're looking at issues of duties, tariffs being announced by the US president, what to your mind will be the key aspects that you'll watch for in terms of agendas that India will try to drive home with the US president?
I think India will try to re-establish the strategic partnership on a firmer footing with the new Trump 2.0. I think they will deal pragmatically with some of the issues which could be difficulties in the relationship. For instance, on illegal migration, India has already said that they will take back illegal migrants, but perhaps they need to point out to President Trump that it becomes more difficult to navigate if it is done as part of high theater in military aircraft with people coming in handcuffs. It becomes an internal issue in India. So a more discreet approach, as was the case in the past, with, chartered aircraft or civilian aircraft, I think works better in Indian conditions. And what they have to point out is that itself is something which Trump should also, the US should also want, because after all, if this issue becomes like a, political issue on which there are high emotions, then it becomes far more difficult for the Indian government to navigate. Now, on tariffs, you have a statement today by, I think, the Commerce Secretary, that the tariffs on the top 30 goods that we import from the US range from 0 to 7%, 7.5%. So that's not very high. And he also explained down tariffs on motorcycles, which have engines which are not produced in India. So it's not eating into the established domestic market. But I do believe that you need a mixture. You don't need a mixture of complete flexibility in terms of, acceding to everything the U.S. says. You need the ability to be able to hang firm on some issues and to pragmatically concede on certain issues. Otherwise, you see what happens with a country like the U.S. is whatever concessions you give are just pocketed and it's moved to the next goalpost and you whet the appetite for more.
You whet the appetite for more. Clearly a tightrope walk that the Prime Minister will have to do, balancing multiple issues simultaneously. Ambassador, I also want to ask you on the personal dynamic between the two leaders. Public memory, if you recount the public memory, what you have in your mind, there are images that are thrown up of Howdy Modi, the big two figures together. That one figure weighs heavy on the mind of the public imagination. But given since Trump 2.0, we've seen strong language being used against India. So whether that's deportations, whether it's about AI sovereignty, whether it's about tariffs being imposed, whether it's about the trade deficit, You think that Howdy Modi factor is firmly behind us, that this is completely a new dynamic that the Prime Minister will have to tread in Washington?
I think Trump has come on an agenda to impose tariffs on all countries across the world, and he is making no exceptions. So India too will be in the crosshairs. But at the same time, we should not be a priority for the U.S. because we are not among the top exporters to the U.S. Our total trade, two ways, in goods and services is about $200 billion, little short of that. And the trade surplus that India has had, it's a very small one, ranging between $20 to $35 billion. May have been a little more last year, but not very much more. So when you're looking at countries who have trade surpluses of hundreds of billions of dollars, yes, India could come into focus for some sectional interests which push, some constituency of Trump, which pushes, like happened with the Harley-Davidson, or agriculture. And it could also come into focus for harmonizing policies on artificial intelligence or digitization. But I don't see us as being a priority target for the U.S.
Sure.
Those are Canada, Mexico, and China, who together account for more than 42% of imports into the United States. So I think they are going to be the priority, then followed by the EU. But one difference that you'll notice this time is that his MAGA constituency has been directly targeting persons of Indian origin, especially legal immigrants in the U.S., beyond those who are there illegally. They've also been targeting legal, professionals, saying that they should stop the H-1B program because this leads to the browning of America. So a clear racist undertone to the demands and the comments being made, though big tech and also President Trump till now have said that they are in favor of continuing the program, and the U.S. needs it because they have a skill shortage, and this aids their competitiveness. But what you might see is, because I don't think the debate has ended amongst Trump supporters, it will continue.
Sure.
And what you might see is perhaps stiffer conditionalities for H-1Bs, higher fees, making it more difficult to get extensions, and so on. So this is part of Trump's global agenda. It flows from the promises he has made to his domestic constituency to get manufacturing and jobs back to America. Now, all countries have to deal with this. They have to cope with this the best way they can.
Right, Ambassador. Thank you so much for joining us with that perspective. Clearly, it will certainly not be easy as what it was during Trump 1.0. A number of dynamics have changed in terms of how the relationships are between the two countries, between the two leaders. Clearly, a lot to look out for as Prime Minister gets set to land in Washington tomorrow. But that, unfortunately, is all the time that we have as a part of this discussion. I'd like to thank both of our guests, Mr. Dua, Ambassador Shankar. Thank you so much for joining us. And with that, we'll slip into a very short break. But coming up, the government's ambitious 2018 plan to build a refinery in Maharashtra's Ratnagiri has run into trouble. A special report when we come back.
As far as delisting, etc., is concerned, at this point of time, no, I think we continue to be as is. We continue to run our businesses. We've given commitments to our business partners, our customers at large, that we take responsibility as a responsible company for whatever we do in the country. Our focus is continuing to, under the sort of conditions that you're seeing, and you explained earlier when you opened across the businesses, making sure we deliver strong growth and profitability.
Welcome back. You're watching News Center with me, Ashmit Kumar. Now, the government's ambitious 2018 plan to build a 60 metric ton per annum refinery in Maharashtra has run into troubled waters. People have come out in protest. Multiple locations have been changed, and now the government plans to split the project into 3 smaller ones. But CNBC-TV18 Santiagora reports that the project has taken on a political hue, and resistance from pro-environment groups is mounting. Take a look.
In 2023, thousands of villagers from Maharashtra's Barsu-Solgaon region began protesting against the central government's plans to build a 3 lakh crore rupee 60 MMPTA refinery in the area. These protesters believed the refinery would cause a severe ecological damage to the region and harm the mango and cashew plantations there. The protest turned violent. Hundreds of villagers faced arrest. Interestingly, this was not the government's first choice of location. It had originally chosen Nanar for the refinery, around 10 kilometers away as the crow flies. That plan had also failed for similar reasons. The government deployed over 1,800 police personnel to safeguard teams that were tasked with conducting soil testing at 16 out of the 89 soil locations identified around Barsu, and then decided to call off the project.
That refinery was originally conceived as something very big, if I remember correctly, about 60 million metric tons per annum. And much before I became, well before I joined the Petroleum and Natural Gas Ministry, which is July 21, it became clear to everyone that no one, not only in India, but no one anywhere in the world had the experience to build something on that large a scale. Because then you need that much hinterland, you need that much of port and the size of ships which can come in, etc. So I think the position as of now is that instead of 160 million metric tons per annum, you're looking at possibility of 3 into 20 million metric tons per annum, and for which discussions are going on behind the scenes.
Naturally, this has become political. Opposition leaders who joined the Barsu protest questioned why the government shifted the refinery from Nanar to Barsu, issued a notification to acquire 2,300 acres, created panic among the people, and even conducted soil surveys if it lacked the capability to build such a massive project in the first place.
भारी नुकसान हुआ, लोगों को तो काफ़ी परेशानी हुई। कई बार लोगों को जेल में जाना पड़ा, महिला जेल में गई, धूप में बैठकर वहाँ निदर्शन करने प्रदर्शन करते थे, उनके ऊपर लाठी चलाई।
But the government says the basic reason for the project, which was to increase refining capacity, stands, and it doesn't matter whether that comes from one project or 3. It also adds that the projects will also fulfill the need to create over 1.5 lakh jobs and boost the Konkan region's economy. Indian Oil Corporation, Bharat Petroleum and Hindustan Petroleum, which signed the MOU for the refinery with Saudi Aramco in 2018, have not responded to CNBC-TV18's queries on the next step. The government says discussions on how to proceed are still ongoing and will include finalizing new locations. For now, after 6 years, there is still no forward movement on this project, and all it has brought are violent protests, injuries and police cases. What is clear is when the government does decide on the next course of action, the entire process will begin from scratch, and there's no guarantee that those sites won't see protest or further politicization of the issue. In Mumbai, with camera person Vijay Anand, this is Santya for CNBC TV18.
Well, with that, it's a wrap on this edition of News Center. For more news and updates, continue watching CNBC TV18.
Hello and welcome to this special edition of Market Masters. I'm Prashant and with me is my colleague Rupee Volatility. Axis Capital is holding its India flagship conference this week with the theme India as an Asset Class. The conference will see 132 corporates participating. It has also seen 625 client registrations so far. So a lot to look forward to from the conference itself. Now, as far as markets go, after a few years of absolutely stunning superlative performance, the market is cooling off just a little bit. Are we at a bit of a crossroads? How important is this going to be from here? Which way do we go? Which means a lot of questions ahead. We have with us the top team at Axis joining us. Amitabh Chaudhary is MD and CEO at Axis Bank. Neelkanth Mishra is Chief Economist, Axis Bank, and Head of Global Research at Axis Capital. We have veteran investment banker Atul Mehra, who is the MD and CEO at Axis Capital, joining us as well. Gentlemen, great to have all of you here. Thank you very much for your time here on CNBC-TV18. First up, let me sort of wish a fantastic conference ahead. And I'm going to get to maybe a mood check a little later if you've had the opportunity to sense the pulse there. We'll do that. Amitabh, we are speaking after a while, and I think it's so important to get a sense from you first up. And I think viewers and everyone watching will want to get that from you. You have a bird's eye view about, what's the state of growth in the economy, in the real economy, Amitabh, because we've had a bit of a cyclical, seasonal, whatever you want to call it, slowdown for the last few quarters now. The budget came in with some measures, tax cuts. The RBI on Friday has stepped in with a 25 basis point rate cut. How should we sort of see the trajectory of growth from here in the real economy? Amitabh, go on.
Well, I think the sentiment in our minds does remain a bit cautious at this point in time. We are seeing on one side government spending definitely picking up, but on the private side actually things have really not moved as much as we expected. Obviously the government has taken measures by infusing almost 1 lakh crores in the next 12 months or so in terms of some tax cuts. RBI has taken a step forward in terms of cutting the interest rates, but it has to ultimately reflect in the economy in real terms. I think we are watching the indicators quite closely. I think the power demand remains down. Cement is really not picking up as much as we want. So we need to be watching these indicators, and our view is that as these things roll forward, maybe the high frequency indicators will see a positive movement in May or June. So it remains cautious. Our view is that we have to keep watching the risks quite closely. The credit growth and deposit growth remains muted. RBI has assured during his monetary policy announcement that they will provide durable liquidity, and they do realize that the credit growth does need to pick up for the GDP growth rate to come back to the 6.5–7% range, and that's an important element of that. So hopefully as RBI takes these measures in the next couple of quarters, we'll see a positive movement. But right now, I mean, while we are optimistic about what could happen, we remain cautious because the real scene on the ground is we are not seeing enough movement at this point in time.
And that is very well put. You mentioned May or June. How would you describe this slowdown, Amitabh, as you see it? You'd be seeing in so many segments across the bank, right? Is this a bit of a temporary thing? Is this maybe a little entrenched? Which areas, if you can? And maybe, I mean, how many quarters out before we are on the mend, in your opinion?
No, well, I said, a lot of it is in the hands of the government and RBI. They have, RBI has taken some proactive steps to ensure that the lending in some sectors is reduced or contained. And it has led to, obviously, a clear deceleration in credit growth. RBI has also been on the deposit growth side. Enough has been talked about as to why deposit growth has been muted. And the combination of these two factors is obviously causing, from as far as the banking sector is concerned, a slowdown in overall growth. And because the growth is overall slowed down, obviously it has its own impact on the economy. On the other side, while the government spending was not there in the first half, we're expecting it to pick up the second half, so that's a positive sign. But the private capex is not picked up, and Neelkanth is here. I'm sure he can give you more insights. But overall, I think the good news is that the government recognizes something needs to be done, RBI recognizes something needs to be done, some steps are being taken, more steps are being promised, and hopefully, I mean, given where the Indian economy is, where it is placed, again, the overall global macroeconomic situation, even though there's a lot of uncertainty there, I think things definitely should move up where we can get back to our, the expected growth rate of 6.5 to 7%. Now, obviously, this is under this cloud, or call it umbrella, of a huge amount of macro, global macro uncertainty. But I think we've got our act right as a country. Hopefully, in spite of that uncertainty, we can get back to the 6.5% to 7% growth rate in the next couple of quarters.
Amitabh, on margins, just a quick bit, the higher yielding segments have seen a bit of a slowdown, unsecured, etc. At the same time, you got a repo cut. Will margins sort of be a little lower, and how much? Not just, maybe for you if you can, and for the industry?
Well, again, it depends on a number of factors, but yes, immediately there will be a clear passing of this benefit to a large part of people who have taken loans from us. So it will have an impact on margins, a negative impact on margins. The deposit rates, I don't think it will come down in a hurry. It will take some time for it to percolate through the system. Also, the repricing of deposits will take some time. So on one side, while you might see an immediate cut on the yields which you're getting on some of your assets, you might not get the decrease in cost of funds. It will take, I would say, somewhere between 2 to 4 quarters for it to happen. So margins will be under pressure. Now, this is assuming nothing else happens. But on the other side, if there is a little bit of an easing of liquidity, you see that economic growth is coming back, and so on and so forth. There are other levers which are available to you which can allow you to compensate for this immediate decrease in margin. So let's see how this pans out. But immediate impact is obviously there will be a decrease in net interest margin, nothing else changes.
Mr. Chaudhary, hi, morning, and morning to the other two gentlemen as well, Neelkant as well as Atul. Just to complete this point on margins, like you said, this will depend on a lot of different varying factors, but given where we are right now, unless and until something new happens on liquidity, would this compression be, could it be system-wide, 50 basis points, 100 basis points, more, less, what's the best assessment at this point?
It will not be nowhere close to the 50 basis points you're saying. It will be much, much lesser. Because at the end of the day, please realize that it's a 25 basis point cut. This does not immediately impact every asset class. All the loans are not linked to MCLR. So firstly, it impacts a certain amount, a certain percentage of your assets. Then it's a 25 basis point cut. Obviously, we will not sit here. There will be something on the margin which we'll do. So I don't think the impact will be anywhere close to 50 basis points. It will be much lesser. It will be too early for me to speculate and start giving some guidance on this. I think once we have a better idea, we will. But I can definitely assure you it's not a 50 basis point.
Okay. That's very, very reassuring. Thank you for that clarification, that it'll be much lesser than 50 basis points. And, we do want to come back to the whole unsecured piece as well. And in terms of regulation, what has been pushed forward, which is ECL, etc., and what hasn't. But we'll come back in just a minute. Let me quickly go across to Neelkant as well. We had an exhaustive conversation with Neelkant just after the budget on CapEx. And Neelkant's point was that you need to take a far more nuanced view. It's not like there's a lid on CapEx. But Neelkant, we're also dealing with very fast-changing global news headlines on tariffs. And the China retaliatory tariffs are a reality. We are hearing that, this week we'll see more action. So in that sense, how is India placed? We're also looking at this high-profile meeting between Prime Minister Modi and Donald Trump as well. So what should we start penciling in terms of any potential tariff impact for the Indian economy and therefore the market sentiment?
See, I've held the view for a while that while there is a lot of global turbulence, the levers for growth are completely internal. So there will be some impact. As we have estimated, if there are reciprocal tariffs, and this was done before the headline rates were cut in the budget, if US was to impose the same rates as India imposes on US imports, you would see an impact of about $7 to $8 billion. But I think that number is going to be a lot lower because India, as you must have seen in the budget, has actually cut those numbers. There is, I think, significant global uncertainty. I think there is, the more the uncertainty on investment. And therefore, it makes sense to be a bit cautious on external demand. But frankly, if we can get liquidity into the system, if we can get credit growth to start moving up, we will start to see, I think, the domestic economy reviving. The importance of the real estate cycle, importance of the power generation capex. You must have seen over the weekend also a very major steel company announced a 1 lakh crore investment. So, as we have discussed often on our shows, that when the real estate cycle is on an upturn, the cement volume growth and the steel volume growth is 8 to 10%. when the real estate cycle is on a downturn, both these numbers are quite weak. So the economic cycle and reviving it through internal means, through provision of liquidity. In fact, the governor very interestingly also mentioned that safety and efficiency have to be balanced, that there is a cost to excessive regulation, and that they will be taking a step back from that as well. So if we are able to revive credit growth from 11 to 14, 15%, I think we should be able to see a significant rebound in economic growth.
Okay. Our drivers of growth are internal, Neelkant. And this estimate was pre the duty cuts in the budget. You said $7 to $8 billion worth of impact. So
yes.
that is what is that
if
exactly?
there were reciprocal tariffs. So if Trump says that,
no, $7 to $8 billion less of trade if that were to happen, less of exports if that were to happen. This is essentially what you're saying.
Yes, so and that's the headline first cut impact. Of course, then there will be diversion, there could be price changes, and the impact would be net less. But if you just assume that the US was to impose the same duties as India imposes on US imports or imports from the US, then the headline, the first cut impact would be 7-8 billion. Of course, there will be manufacturers taking diversionary routes, routing to different markets, and the net impact could be even lower than that. But after the adjustments that were made to say, imports of high-end motorcycles and cars and the stuff that India imports from the US, the number could be even smaller than that.
Do you think tariffs we'll have to concede lower tariffs in response to the threat of reciprocal tariffs from here, even after what has been done in the budget?
See, remember that this is part of a negotiation. And every single leader, you must have seen the Japanese Prime Minister going to the US and sitting across and discussing things. So everything with the current US regime is going to be a negotiation. There will be economic and non-economic factors, both of which will start to matter.
Sure.
Will we have to bring down our tariffs even after the ones that we have changed? I think time will tell, but I suspect that it will be part of a broader negotiation and not just limited to the import tariffs on goods.
Absolutely. We have to take a quick commercial break here. Gentlemen, stay with us. We'll bring in Atul into the conversation as well and ask him what's causing FIIs to continue to sell. So that's coming up in just a bit. That conversation with the Top Access team continues. Stay with us.
Welcome back to the special conversation. We have the top team of Axis Bank with us just ahead of their investor conference. We've got a pulse of how the banking environment is looking with Amitabh Chaudhary. Neelkanth's given us a hint of what these tariff wars and tariff talks could mean for India. Atul, let's come to you now on the market sentiment. You know, we all were thinking and keeping fingers crossed in December that this FPI selling would end. Guess what? I looked at the latest numbers this morning. 85,000 crores already gone so far in 25. And that's just the listed market selling. And then there are the insiders who've been selling for a long time, promoters, foreign promoters, private equity, etc. in the deal market. What's your sense on the mood on India?
So the mood on India continues to be still good, still quite robust, still quite favorable. Nothing wrong. India still continues to be amongst the best performing markets and the most attractive market globally. Yes, there are a couple of things which have set us back, and those I call as temporary dislocation, not as fracture. We need to get this in order, and I think there are a couple of things which are weighing on the back of the minds of the investor. And first and foremost is this whole rupee to dollar equation. Second foremost is what are the earnings growth going to look like, and that is the most crucial question in the mind of every investor, whether it's a domestic or the FPI or the private equity or even the man on the street. The earnings growth is the crucial question in their mind. The third important factor is the whole geopolitical situation and the new world order. What does it look like and where does India stack up? How do we come out of that? And last but not the least is the resilient in the economy and how are we growing? So these are some of the broader themes that needs to be addressed. I think we have answers to it. We have path which is very clearly visible, but I think we need to remove some of the haze out of it so that the runway is clearly visible for more inflight of capital to happen into India.
You know, Atul, I completely take that point, but the other piece, the selling from insiders, and we kept seeing that through much of 23, a lot of 24, right? The block deal buzz that was going on, where either early stage investors were selling or Indian promoters were selling, and a lot of companies came to IPO as well. In the midst of all this, some global MNCs came and decided to list over here. For instance, you know, we've got the Hyundai listing, LG is about to list, but there are others who are winding up. For instance, Whirlpool, Akzo Nobel looking to sell a part of its business as well. So what's your sense on the big PE sort of mood? What does that tell us? And the MNC mood? I mean, what clues or cues can we pick up from these actions?
So let's divide this question into two parts. Have we seen the supply coming from what you call as insider? Yes, that will continue, and that will continue in a big way, even in 25-26 that we are currently on. Let me give you some data. In 23, we saw total activity of around $15 to $18 billion. In 24, we saw around circa $40 billion. In 25, we could see as high as $50 to $55 billion of sale through various corners. So that's the supply that is going to hit the market. And to add to it, you're going to see some of the foreigners, like what you mentioned, Hyundai, LG. There will be what we call as a whole host of companies which are turning upside down, which were listed, which were incorporated abroad, are getting folded into Indian structure. You will see a lot of activity on that count. And the reason for that is very clearly India is a great market. India is a very liquid market. India is a very robust market. And we have all categories of investors participating in it. So it's a market which is now a very matured market, and it is moving faster to being called as a developed market, no more a developing market.
But Atul,
we have a huge FII interest still present in India. We have domestic mutual funds, pension funds, insurance companies, family offices, high net worth individual, man on the street, retail investors,
absolutely. I mean, the depth
all
of the
participating
market
still in a very big way. So which is what makes India a great market.
Amitabh, you were one of the earliest, just to get back to the real economy banking, to kind of flag off this stress in the unsecured segment. I mean, we've seen the microfinance space go through a bit of a cycle. Opinions vary where we're at there. What is your own sense, Amitabh? You know, are we going to see a broader spike in retail NPAs across segments?
So Prashant, let me just slip in one word here before I answer a question. I mean, we are having this conference, Access Capital Conference, huge number of investors. I think perfect time to have this conference. A lot of uncertainty, but some steps have been taken, some more steps to be taken. So, you know, Atul and Neelkant and the entire team have put together a great conference. We're looking forward to it. So that's my two-bit. So as far as unsecured is concerned, yes, the stress started there. We have seen it extend to MFI. Obviously, we also see some of the governments or some of the local people reacting in a particular way. We have seen a stability, at least as far as the banks are concerned. We are seeing the stress stabilizing. I'm not saying it's stabilized, I'm saying it's stabilizing. I think you're seeing some positive signs on the MFI side also. But, you know, as all of us have been pointing out, if the growth slows down, if rupee depreciates, and it has depreciated so rapidly, if global uncertainty remains, tomorrow exports could get impacted if, let's say, tariffs come in. We cannot say that, by the way, this will not extend to secure forms of business. We are in the risk-taking business. The credit costs are normalizing. We have seen some, you know, obviously stress in some of the sectors. We have to be watchful and cautious that this should not extend to other asset classes also. Now, on the same side, you know, in the earlier part of the program, I said we are quite optimistic about, you know, what could happen because government and RBI is taking steps. But we at the same time, in the same breath, have to be watchful because the worry is that if we don't contain some of these things, it could extend to other asset classes. So we are watchful. We see no signs as yet, but we are watching the space very, very closely.
You know, Mr. Chaudhary, you said exactly the same thing to Shireen in that interview in Davos. I was listening to it. And you said that we need to watch very carefully if unsecured stress starts spilling over to other classes. Since then, we've had liquidity measures taken up by the central bank. We've had this 25 basis points rate cut. There was commentary that the RBI is going to step in with more liquidity measures if and when needed. What more would you want to see from the RBI? I don't think they're going to go easy on unsecured. I mean, at least the commentary in that press conference didn't give us a clue that they'll very quickly lower the risk weights for NBFC lending or lower some of the prudential norms for unsecured. What more would you want to see from the central bank?
No, I'm not suggesting that RBI goes slow on some of the measures they've taken. I'm just saying that some of the measures, and individually the measures, have been, in some cases, so tough and tight. The credit growth has dropped to a level where, you know, obviously you are seeing some signs of stress develop, or it is having an impact on the GDP growth rate. I mean, as Neelkant pointed out in his earlier comments, that if this same credit growth could go back to 14-15%, it will have a positive reinforcing message in the overall growth rate of the economy, and some of the stress in the system could also go away. I'm not for a minute doubting what RBI said. I'm just saying we need to wait for those measures to come out and play out, and then hopefully we'll see positive signs. I'm quite optimistic. But the measures RBI has taken on liquidity have been sufficient enough to take care of the deficit in terms of liquidity. They are not led to any surplus liquidity. Interest rate cut is not going to lead to higher credit growth, in my mind. Interest rate cut has been done to kind of spur the economy and bring private capex or some of the capex back. Let's see how much time it takes for that, that lift to happen. So I think some measures have been taken. I think some more have to be taken, and they have to be consistently demonstrated for people to get the confidence and for the growth to come back.
I'm really glad that you answered that question, Amitabh. Lots of interest around there. But I think, of course, the big talking point is going to be the Access India Capital flagship conference this week. Lots of foreign investors, lots of client registrations, as I pointed out earlier. And, of course, to hear from some of the top companies here in the country. Amitabh, Neelkant and Atul, great to have all three of you ahead of the conference speaking to us here at CNBC-TV18. Wish you all the best of luck.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे, जंगपुरा के लोगों की जितनी भी चीज़ें हैं उनको हल करेंगे। बाकी तो अब बाकी देखते हैं।
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty declined for the fourth straight day, the longest losing streak in 2 months. Mid-caps and small-caps see sharper cuts amid a broad-based sell-off. The Indian rupee hits a record low as it moves within striking distance of the 88 mark against the US dollar. But a potential RBI intervention manages to stem the fall. Dealers expect the rupee to remain under pressure in the short term. Gold prices hit a record high as investors hunt for safe havens. Finance Minister Nirmala Sitharaman warns banks and NBFCs over the recent 18% spike in gold loans turning sour. Says action will be taken if gold loan rules are violated. US President Donald Trump announces 25% tariffs on all aluminium and steel imports. Also promises reciprocal tariffs on top of existing duties on metals. The Nifty metal index slides as investors fear steel earlier imported into America could be dumped in India. Prime Minister Modi en route to France for the first leg of his two-nation trip will hold bilateral talks and co-chair a summit on artificial intelligence with Emmanuel Macron. The French president tells Network 18 that he, along with Prime Minister Modi, will push for tech sovereignty at the AI summit. Another setback for Byju's in less than a week. NCLT's Bengaluru bench refuses to allow closure of insolvency proceedings against Byju's despite a settlement proposal with BCCI says ball is in lenders' court. US-based lenders constitute over 99% of the committee of creditors and have opposed the settlement proposal in the past. Riot-hit Manipur faces a political crisis. Chief Minister Biren Singh resigns 21 months after ethnic violence broke out. Governor declares the upcoming assembly session null and void. The state is staring at potential president's rule. Asia's largest aerospace and defense exhibition kicks off in Bengaluru. More than 150 foreign companies and representatives from over 90 countries will be in attendance. Right, let's start with the market. Stocks got battered on Dalal Street as the market slipped for the fourth straight session. This is the longest losing streak in 2 months, with the fall showing no signs of abating. Nifty and Sensex recorded cuts of nearly 1%, but it was the broader markets that took it on the chin. The mid-cap and small-cap index tanked over 2%. Prashant Nair is here with the day's trading action. Prashant.
It was a tough day with the market taking a bit of a swoon and never really finding its feet through the course of the day. And the problem, of course, was with broader markets more than large caps. So, let's just take it from the top. The Nifty up on your screen did recover about 30-40 days from the sort of point low. And the Nifty Bank starting at about 224, 225 did see a bit of a bounce, 120 odd points worth. But the mid and the small cap indices, 2% flat out cuts on both those, although there as well from the absolute low point intraday, there was about 0.4, 0.5% kind of pullbacks that you saw. 5:1 declines to advances. That was the extent of the broader market decline that we really saw. So very few pockets of green sectorally or otherwise. I'll start with what was down on the Nifty. Trend continues to come off the sharp cut on the earnings day last week. Today, top loser on the Nifty, Power Grid, Tata Steel, Titan, ONGC, Bajaj Finance were some of the names. Names like Bajaj Finance had broken out after about 2 or 3 years, but they're almost back in that range once again. Very few on the upside, not really worth mentioning. So I'm going to go straight to broader markets and where the losses were. Alchem Laboratories was a big cut today. Big number one volume and loser today. Max Healthcare, sharp cut. KRN was fairly recent listing. Tilaknagar was limit down 20% on the back of news flow, of course, but it's done very well on the upside. Goldium International, one of those big new age kind of names which people were chasing, but now, of course, it's been down. Carraro, which is a recent listing, it was a pure offer for sale. It's back below its issue price, the IPO price actually. Five-star finance company, Safari, JM Financial, NetWeb, another one of those names which has done very well. Jyoti Structures, Acme Solar, Kotak recently initiated, stock did well, but is basically back below those levels. Aeroflex Industries and EMS, some of the other names which came under fair bit of selling pressure. Some gainers as well. Reddington stood out. Signature, the real estate player, ITC Hotels, Varroc Engineering, Newland Laboratories, and something like a Camlin Fine was another one. There was, of course, the problem with the currency as well. The rupee, of course, almost got to 88, and then there was massive buying which came in. Reportedly, the RBI in the market supplying, dollars. So I think we'll, of course, have to wait for confirmation on that, but there was a massive move in the currency. A lot of all of this is tied up with what Trump does with tariffs. Reciprocal tariffs is essentially what we heard from President Trump in the US, and that is what is keeping markets nervous. And that is the reason why, that backdrop is the reason why this meeting between Prime Minister Modi and President Trump in the US this week will be very, very closely watched. Back to you.
Thank you, Prashant, for that. Aswath Damodaran, New York University finance professor and a well-known stock valuation expert, has called the Indian equity market the most expensive in the world. In a blog post, Damodaran argued that no amount of hand-waving could justify the valuations for Indian companies. Damodaran said that though US and China too fall into the most expensive valuation category, India was trading at significantly higher levels than most markets. He also cautioned, and I quote, "At the wrong price, even the safest market with great historical returns are bad investments." Axis Bank CEO Amitabh Chaudhry says the overall sentiment is a bit cautious at the moment. The bank's chief economist Neelkant Mishra believes economic revival is possible if credit growth can touch 14%.
I think the sentiment in our minds does remain a bit cautious at this point in time. RBI has taken a step forward in terms of cutting the interest rates. I mean, while we are optimistic about what could happen, we remain cautious because the real scene on the ground is we are not seeing enough movement at this point in time.
If we can get liquidity into the system, if we can get credit growth to start moving up, we will start to see, I think, the domestic economy reviving. If we are able to revive credit growth from 11 to 14, 15%, I think we should be able to see a significant rebound in economic momentum as well.
Trump's tariff threat is also moving the forex markets. The Indian rupee moved closer to 88 levels against the dollar. But a potential RBI intervention seems to have stemmed the fall, at least for now. Lata Venkatesh is here with more on the money markets. Lata.
It was mayhem in the morning because the rupee opened almost at 88, 87.9550 to be precise. Now, it appears that this was not very out of sync with other Asian currencies because some of them did fall about 0.8%. The fall in India at 87.95 would have worked out to about 0.6% fall. And there were ringgit and all had also fallen around the same number. And that's because obviously tariff talk, two kinds of tariff talk. One was reciprocal and the other tariff threat that came was on steel and aluminium. And therefore, obviously, a lot of Asian importers were impacted. But when it opened at that big number, the Reserve Bank appears to have made inquiries whether this is really importers coming in and buying or FPIs buying dollars, and noting that this is more position taking by what you can call speculators very loosely, but largely banks. They went in and they supported the rupee like hell. People are talking about $2 billion. Some are talking even $3 billion. But it clearly looks like a Reserve Bank support because it vertically fell the dollar from 87.95 all the way to 87.56, 57. It has been more or less stable at that level. Now, you stock market guys are lucky. You'll get some 22,800 support and 23,800 resistance. When we try to ask these questions of, traders, forex traders, the level, they themselves tell us the levels we gave you 87.50 at the beginning of the year as level that will be reached in March and 88 by end of the year are all today, have hit today. So where do you go? At the moment, there's a working figure of 82.25 by March and 89 by December. But who knows? These levels could be just, erased in a day.
Thank you, Radha. For that, gold prices have hit another all-time high and there's no stopping the rally. The yellow metal has gained over 10% since the start of 2025, thanks to continued safe haven buying, thanks to the tariff wars and the uncertainty surrounding global trade. Gold prices have also been on a tear back home, and gold loans, NPAs, have seen a sharp spike recently. After NPAs in gold loans surged by 18%, Finance Minister Nirmala Sitharaman warned banks and NBFCs. Speaking in Parliament, she said action will be taken if financial institutions are found to be flouting the gold lending norms.
There is a process of giving enough number of notices to the bank account holder to say your servicing is not up to the mark, and that in the eventuality of you not coming back to pay, we will be forced to go on an auction. Now, even for going on an auction, there are very well laid out procedure. If there are specific instances where the Honourable MP thinks these laid out norms are violated, I'm quite willing to take the details and act on it.
On to all the action from the oil market. Oil prices inched higher after Trump's latest tariff threats on steel and aluminium. The move could dampen global economic growth and energy demand. Meanwhile, prices of cryptocurrencies remain volatile after Trump's tariff moves. While Bitcoin edged up above the $97,000 market, other cryptocurrencies like Ethereum slipped above 1%. The global crypto market declined 0.3% in last 24 hours. US President Donald Trump has fired a fresh salvo in his administration's trade war. He's announced plans to formally impose 25% tariffs on all steel and aluminum imports, thereby expanding his protectionist campaign into the metal sector as well. Addressing the media at his resort in Florida, Trump also outlined plans to unveil reciprocal tariffs later this week. Remember, Trump had imposed similar duties on steel and aluminum during his first term as well. However, he later granted duty-free quotas to some nations, including Canada and Mexico.
I'll be announcing probably Tuesday or Wednesday at a news conference reciprocal tariffs, and very simply, it's if they charge us, we charge them. Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum too.
10%?
25%.
25 for aluminum as well?
25 for both.
The road to Washington for Prime Minister Modi will go through Paris. He has embarked on his two-day bilateral visit to France. PM Modi will co-chair the AI Action Summit with French President Emmanuel Macron. Ahead of the summit, President Macron is set to host PM Modi for a dinner which is likely to be attended by several tech CEOs at the president's official residence in Paris today. Speaking to First Post and France TV, President Macron said he'll push for tech sovereignty along with Prime Minister Modi and reduce dependence on US and Chinese AI models. Macron also said that both India and France can carve a third way forward in the tech race, which has largely been focused on US and China.
If you depend on others to produce medicine or technology, then things can go wrong. So we need that partnership because we have shared interests and because we have the same worldview, focused on friendship and also interests. So together we will develop technological sovereignty. We want to train our talent, that they can go abroad, but they should also be at home. And we want to create data centers in India and in France.
Shares of Ola Electric declined in trade today after reporting a weak set of numbers in the third quarter. The stock was also impacted after brokerages including Goldman Sachs and Citi reduced their target prices on the company's stock. This comes as the company plans to enter the EV motorcycle segment. Speaking to CNBC-TV18 Ola Electric Mobility's CMD, Bhavish Agrawal said that the company will be aggressive in responding to competition, which may impact gross margins going ahead.
There are some variables which we control and there are some variables we don't control. So our product, the supply chain, the gross margins are all under control, our operating costs. But if the market is aggressive, we will, since we have the leading gross margin profile and vertically integrated manufacturing, we will be aggressive in responding to market. So that might have some impact on gross margins in the near term. So our strategy remains to increase penetration from a position of strength vis-a-vis products and manufacturing.
Mahindra CEO and Managing Director Anish Shah has said that he expects electric vehicle margins to match up to the ICE margins over a period of time. Speaking to CNBC-TV18, he added that he remains optimistic on tractor industry and is seeing a healthy trend in rural area. Shah also said that Prime Minister Modi's visit to the United States is important since the American market is crucial for Mahindra.
Our target, and we have been fairly audacious in what we do, is to get to 40% in every segment we play in. So yes, we have a while to go, but that is part of the journey. So we do see a lot of green shoots in rural, as we've talked about earlier as well. Yes. For the fourth quarter, we expect 15% growth year over year, and that's a very healthy growth in this space. For next year, a little early to say as yet, because it will depend on this particular season and how that goes as well. Okay. But overall, we remain fairly optimistic about where rural is right now and prospects for a tractor business next year.
Facebook parent Meta platform is looking to lay off over 3,000 employees, impacting around 5% of its workforce. Reports have said that the employees were informed through a memo last week. The report also cited that Meta CEO Mark Zuckerberg told his staff in January 2025 that the company would raise the bar. He also said that the company will make a quick move to remove low performers. And it's time for a short break. Coming up next, riot hit Manipur faces a political crisis. Chief Minister Biren Singh resigns 21 months after ethnic violence broke out. More details when we return.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Another setback for Byju's. In less than a week, NCLT's Bengaluru bench has refused to allow closure of insolvency proceedings despite a settlement proposal between promoter Ravindran and BCCI. Now the court has directed lenders to decide on it instead. Ashmit Kumar joins us now with the details. Ashmit, what does this mean for Byju's now?
Well, it's a difficult situation that Riju Ravindran and Baiju Ravindran find themselves in. Bear in mind that just a few days back, we had the NCLT, which had reconstituted, reshaped the COC. By reshaping, they had essentially included the US lenders back on board. The reason that's significant is, well, because US lenders account for 99.41% of the voting share. So that's largely it. The US lenders is the COC. That decision happened just a few days back. Today, the NCLT was required to decide on whether or not Riju Ravindran can pay the BCCI and settle the dispute which began this entire insolvency proceeding. The answer to that the NCLT has given is that, one, will not take a decision. The NCLT will not take a decision. It has instead directed Riju Ravindran to file this application before the COC. Now, that clearly is a difficult position for him, given as how the US lenders have been batting steadfast against any form of settlement. The US lenders have argued that their funds which they advanced to the Byju subsidiary in the US has in fact been siphoned off by the likes of Riju Ravindran, Baiju Ravindran, that the amounts are large. We're talking about north of 11,000 crore rupees, and the fact that there is no certainty whether these funds which are being used to settle the BCCI payment dispute is in fact those very same funds that the US lenders had advanced now being round-tripped for a settlement. Now, these are allegations that were made, and it's the US lenders which are now charged with deciding on the fate of this settlement and on the fate of withdrawal of these insolvency proceedings. So clearly a tricky position for both Byju's as well as their founders, Baiju and Riju Ravindran. Back to you.
Thank you, Ashmit, for that. Manipur Chief Minister Biren Singh resigned from his post close to 2 years after the start of an ethnic violence which has since singed the state. The move came a day ahead of the state's budget session and amid rising dissent within the BJP over his handling of the ethnic violence. Biren Singh stepped down from the top post after a meeting in Delhi with Union Home Minister Amit Shah.
मणिपुर की जनता के लिए उन्होंने ये इस्तीफा दिया है और उन्होंने भारत सरकार को भी जो रिक्वेस्ट किया है कि हमारी मणिपुर के इंटीग्रिटी को बचाना है, हमारे मणिपुर के जनता को इतना सेफ्टी रखना है, ये सब उसके मन में है। इतना विकास का काम जो 2017 से करने के बाद अचानक हम कुछ प्रॉब्लम जो फेस किया है, बहुत दुख हुआ उसको भी, और अभी आने वाले दिनों के लिए उन्होंने सोच के रिजाइन किया।
The BJP, the NDA got a huge majority in February 2022. But within 15 months, Manipur began burning. So that is the first question. How did Manipur get to where it is today, even after a double-engine sarkar, even after such a huge majority in Manipur? And second question, why is the Prime Minister avoiding going to Manipur? This resignation of the Chief Minister is a direct result of the Congress's no confidence motion.
Politically speaking, it's uncertain as far as Manipur's future is concerned, but what really aggravated circumstances to this extent, what CNN News 18, CNBC Network 18 has learned is that there were intelligence inputs and political assessments which suggested that at least 20 MLAs from the Bharatiya Janata Party could be willing to support the Congress's no confidence motion that they were planning to bring in if this budget session of the Manipur Assembly had gone through. If you recall, last evening after N. Biren Singh submitted his resignation, Governor put in an order through his secretariat making his earlier order calling for a budget session from today null and void. So now that this immediate crisis has been averted, the government, the central government is looking at next move. There is a high likelihood that governor's rule could be invoked. The governor's report is expected to come to the centre in a couple of days. The budget session of Parliament ends on the 13th, and there is a high possibility that post that the central government could take a call on whether the next Chief Minister from Bharatiya Janata Party will replace Biren Singh or whether Governor Ajay Bhalla for now will be at the helm of affairs in Manipur, giving the central government enough elbow room and enough time to speak to all stakeholders and decide who is the best suited candidate to replace Biren Singh and bring the Kukis and Metis together in the interest of peace.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
I want you to recount the day that you walked into the State Bank of India at 22.
End of the day, my face was filled with black streaks because, while you're changing the carbon, it comes onto your fingers. My hands were aching. My head couldn't add 2 + 2. First day was like one whirlwind. People don't work in the public sector. Total myth. In the last 4 years of my life at least, I never went to sleep before 1:30 in the night. I came back with 2 middle-sized suitcases and I had to clear all of those pipes. Yeah, exactly. Banks have the trust of the people. And the day they told me that somebody is coming to, take your picture so that they can paint it, I deliberately put on a red sari. Giving up is very simple. It's a 30-second email you can put in order to resign. I do believe we're making progress. We want to stop the Ukraine-Russia war, and I want to stop it just because I hate to see all these young people being killed. The soldiers are being killed by the hundreds of thousands. And I expect to have many more conversations. We have to get that war ended. It's going to end, and we have to get it ended. And we have to get it ended soon. Should have never happened, would have never happened if I was president.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Another setback for Byju's. In less than a week, NCLT's Bengaluru bench refuses to allow closure of insolvency proceedings against Byju's despite a settlement proposal with BCCI. Says ball is in lenders' court. US-based lenders constitute over 99% of the committee of creditors and have opposed the settlement proposal in the past.
Shares of Ola Electric slipped in trade today on the back of weak third quarter. Also, brokerages trimming the target price further weighed on the stock. This comes at a time when the company made a foray into EV motorcycle segment.
Fintech startup Rupee Flow has raised $1 million in funding in a pre-seed round led by Piper Serica Angel Fund. Rupee Flow will use the funding to roll out a full-stack NRI investment platform, introduce instant UPI access, and expand its global presence.
Sequoia Capital's Evergreen Fund has grown to $19.6 billion. According to a U.S. Securities and Exchange Commission filing, the fund's total includes new cash commitments, shares of now public companies that Sequoia previously backed, and cash returns from mergers and acquisitions.
OpenAI is pushing ahead on its plan to reduce its reliance on NVIDIA for its chip supply by developing its first generation of in-house artificial intelligence silicon. The ChatGPT maker is finalizing the design for its first in-house chip in the next few months and plans to send it for fabrication at Taiwan Semiconductor Manufacturing, Reuters reported.
All right, those are the headlines that we're tracking for you today. But our top story, there's another setback for Byju's in the span of less than a week. NCLT Bengaluru's bench has refused to allow the closure of insolvency proceedings against Byju's despite a settlement proposal between the promoter Riju Ravindran and the BCCI. Now, the court has instead directed its lenders to decide on the matter. Ashmit Kumar has been tracking that story in the court for us and joins in with what this means for Byju's now. Ashmit.
Well, it's a difficult situation that Riju Ravindran and Byju Ravindran find themselves in. Bear in mind that just a few days back, we had the NCLT, which had reshaped the COC. By reshaping, they had essentially included the US lenders back on board. The reason that's significant is, well, because US lenders account for 99.41% of the voting share. So that's largely it. The US lenders is the COC. That decision happened just a few days back. Today, the NCLT was required to decide on whether or not Riju Ravindran can pay the BCCI and settle the dispute which began this entire insolvency proceeding. The answer to that the NCLT has given is that, one, will not take a decision. The NCLT will not take a decision. It has instead directed Riju Ravindran to file this application before the COC. Now, that clearly is a difficult position for him, given as how the US lenders have been batting steadfast against any form of settlement. The US lenders have argued that their funds which they advanced to the Byju subsidiary in the US has in fact been siphoned off by the likes of Riju Ravindran, Byju Ravindran, that the amounts are large. We're talking about north of 11,000 crore rupees, and the fact that there is no certainty whether these funds which are being used to settle the BCCI payment dispute is in fact those very same funds that the US lenders had advanced, now being round-tripped for a settlement. Now, these are allegations that were made, and it's the US lenders which are now charged with deciding on the fate of this settlement and on the fate of withdrawal of these insolvency proceedings. So clearly a tricky position for both Byju's as well as their founders, Byju and Riju Ravindran. Back to you.
Absolutely, Ashmit. Thank you for joining us. Moving on, also on what's brewing, CNBC-TV18 learns that IPO-bound B2B platform Zetwork is actively engaging with family offices to secure an investment ranging between $20 million to $30 million. The company is also in negotiations with additional family offices, high-net-worth individuals, and ultra-HNIs for further investments ahead of its impending IPO. Zetwork has also selected several banks to facilitate its IPO. And to talk to us about all of this and more, joining me now is Amrit Acharya, the co-founder and CEO of Zetwork. Amrit, welcome back to Startup Street. Let's talk about the IPO. How soon can we expect Zetwork to list, and what is the IPO size? You know, the public offering is expected to raise at least $500 million with a potential valuation of approximately $5 billion. If you could confirm this.
Thanks for having me on the show. We are looking to raise
around that number that you just described. Of course, the final valuation, that's something the markets decide. What we can share is we just raised a round in December. We raised around 90 million in that full year from a couple of venture capital firms. We did it at 3 billion pre-money. So in some shape, that'll be the anchor point on how we decide the final IPO pricing, the sizing, etc. But yeah, ballpark in those numbers.
How soon are you planning to list?
No, we are looking to do it. We're looking to file the DRHP this year, and that may happen in 6 to 9 months. And however long it takes to get the approval, post which we'll be ready.
All right. You've also selected, Amrit, several merchant banks to facilitate Zetworks IPO. CNBC-TV18 has in fact learned that the list includes Axis Capital, Goldman Sachs, Jefferies, JM Financial, JP Morgan Chase, and Kotak Mahindra Bank. Can you throw some light on this?
Yeah, we're still in the process of fully finalizing that list, but some of those names are correct. Like we have finalized, for example, Axis as a left lead. We'll be working with Goldman and Kotak. And few others we are in process of finalizing that. We'll do that shortly, but yes, we'll be hopefully working with 4 to 5 banks in the process.
All right, 4 to 5 banks, and you've confirmed some names from our list. Amrit, in December, like you mentioned earlier, Zetwork raised $90 million from investors, including Khosla Ventures, Indigo co-founder Rakesh Gangwal, and others. And like I mentioned earlier, sources tell us that you're looking to raise between $20 to $30 million. Can you confirm this? Who are the investors, and where do you plan to use the funds?
So we are still in mid-process. We have not finalized this raise yet, but we're looking to raise around 30 million. So the main intention for us is, so far, we have built the company, a little bit under the radar, a little bit doing our own thing, focusing on niche areas. And mostly we have done it with the support of, private equity, venture capital, traditional investors. As we are looking at the next phase of growth for us, we want to learn from people who have actually built businesses in India, who have done it over, many years, sometimes even decades, and have seen many cycles in the Indian economy, both positive and negative. That's our main motivation. So we're looking to do that over the next.
So you're confirming our numbers, though. You're also looking to raise another round, and CNBC-TV18 has learned that you're in conversation with other family offices. Is that true? Apart from this 20 to 30 million, are you looking at another round?
No, it's the same one. It's the same one.
It's the same one. Okay, let me talk about your US operations. They've grown rapidly. You've generated, 20 to 25% of the company's global revenue. Going forward, what's the revenue mix going to be, Amrit, and what are the growth targets for that region?
Yeah, see, we believe that manufacturing is at an inflection point like IT services were 20 years ago. Make in India for the Indian economy, but make in India for global economies, leading with the US, leading with Europe. These, I think, will be big macro themes for us for the next 10 years. So today it's around 2025. It used to be 0 3 years ago. So you can imagine it's growing faster than the rest of the business. We would like it to be even as high as more than 40-50%. And that's the direction we are working towards. Yeah.
All right. One final question, Amrit, before I let you go. How are the evolving global supply chain dynamics, particularly the China Plus One strategy, impacting your business operations? If you could give us a breakdown of revenue from your different businesses. You've got renewables, electronics, precision parts, and more.
Look, close to a third of our revenue is renewables. Close to another 15% is what we call precision manufacturing, which goes into aerospace, med devices, high-end manufacturing. And then the remaining is electronics and capital goods. This mix will also evolve. Almost 60% of our revenue directly or indirectly comes because of China Plus One. These are global companies either based in India or based abroad who used to buy a lot of product from those markets and are now moving their production to India. The headline, of course, is Apple setting up a huge supply chain for iPhones in India, but it's an industry-wide trend. You talk to most customers, they're all somewhere in that process of figuring out how much of their supply chain they want to transition. So we believe that, next 10 years, that will be a big team, and that's what we want to operate on.
All right, Amrit, we are pressed for time, so I'll have to quickly wrap up our conversation. But many thanks for joining us on Startup Street today, and wish you the very best with your listing plans. Thank you.
Thank you.
Moving on, Bizloan, a non-banking finance company for small and mid-sized firms, lands an investment of 35 crore rupees in a Series A funding round. The round was co-led by the Michael and Susan Dell Foundation and Blink Invest. This startup aims to expand its credit solutions across rural India, largely in the underserved markets. It's optimistic that the funding will allow the NBFC to empower over 2,500 micro and nano businesses in just 12 months. Now, the 9-year-old company is eyeing new avenues of growth with the recent fundraise. Joining us now to take this discussion forward is co-founder Rahul Jain. Rahul, thank you so much for taking time out and being here with us on Startup Street. You know, Bizloan offers credit solutions for small businesses. If you could sort of take us through what you have on offer and where are you seeing the most demand?
So we at Bizloan, we fund in tier 2, tier 3 cities. We fund in Bharat. So we fund to the customers basically who don't have a documented income. So we fund basis their undocumented income which they have, and that is our key niche also, and that's what we understand well. This works basis our strong and proprietary net credit model of ABC, which we follow, and which help us to evaluate these micro and small enterprises and nano enterprises to fund.
Right, absolutely. And if you could sort of, take us through the kind of clients you cater to and across which sectors are these, and, what's the average ticket size of these loans and the impact you hope to create?
See, so our average ticket size is around 6 lakhs. And what we do is we fund to small traders, we fund to small retailers, we fund to dairy, we fund to barber shops. So we fund to all small businesses, the small eateries, the sericulture in Karnataka. So whichever are the small and nano businesses which are there in these markets, we fund to them for their business growth.
All right. And, with the funds that you've currently raised, you aim to expand these credit solutions as well as your presence, right? So if you could elaborate on your fund allocation plan and what are the new credit solutions on the anvil?
So we are a 30-branch network. So this current fundraise is basically a growth fund. Part of it would also be used for technology, but basically this is a growth fund. We are a 30-branch network as of now. We are in Haryana, UP, part of Rajasthan and Karnataka. We want to expand our network to 60 branches next year and double our book. So we want to cater to, up North Karnataka. We want to fund to North Haryana. We want to fund in Uttarakhand. These are the markets we want to expand.
All right. So you've also...
I'm sorry, I missed UP.
So these are the markets that you're looking to expand into. And, you've disbursed nearly 774 crore rupees in loans across 26 branches that you have. So what's the target that you've set for yourself this year? And by how much do you want to grow the book? And also, how has it performed in terms of, gross NPAs, collections, etc.?
So we will close this year with a gross AUM of around 165 crores. And we want to double the book next year. We would be at around 300 plus crores. And as far as when we talk about or on the performance of the book has performed well. We are at a gross NPA of 2.1% with a net NPA of 1.4%.
All right. And if you could sort of, take us through, you pointed out that you want to expand further in North Karnataka and North Haryana, but if you could sort of take us through how big your presence is right now in India, how many cities do you hope to be in by the end of this year? What's the expansion plan on that front? And what about branches as well? You have 26 currently. So are you looking to open up more branches? What's the target on that front?
So we have moved from 26 to 30 branches now. We are typically in Haryana, UP, Karnataka, and part of Rajasthan. These are the markets which we are present. So we have chosen our markets and we are expanding now further in North Karnataka. We are expanding now in North Haryana. And next go-to market is what we are doing is now further in UP, and Uttarakhand is the next next state which we want to expand. So we want to be a 60 branch network by next year.
So a 60 branch network by next year, and you're looking at Uttarakhand as your latest market. All right.
Haryana and Haryana is again a big market, and up Haryana it's a big market. Up Karnataka is a big market. These are the markets we want to further expand.
All right, so looking to double down on these markets as well. All right, Rahul, thank you so much for taking time out and being on the show with us today, and we wish you all the best going forward.
Thank you so much. Thank you so much.
With that, it's time for us to head into a short break. But coming up next, cybersecurity startup Astra Security has raised $2.7 million in a growth capital round led by Emergent Ventures. We speak with Shikhil Sharma, the co-founder and CEO of Astra Security, to know more about the company's growth plans. Stay tuned.
As far as delisting, etc., is concerned, at this point of time, no, I think we continue to be as is. We continue to run our businesses. We've given commitments to our business partners, our customers at large, that we take responsibility as a responsible company for whatever we do in the country. Our focus is continuing to, under the sort of conditions that you're seeing, and you explained earlier when you opened across the businesses, making sure we deliver strong growth and profitability.
Welcome back. You're watching Startup Street. Now, cybersecurity startup Astra Security has raised $2.7 million in a growth capital round that was led by Emergent Ventures. Now, the company had previously raised about $120,000 in a seed funding round from others in 2018. This round of fresh funds is going to be used to accelerate its development, enhance its capabilities, to uncover some vulnerabilities in cloud environments, and double down, more importantly, on its focus on using artificial intelligence. For more on this, joining me now is Shikhil Sharma, the co-founder and CEO of Astra Security. Shikhil, thanks very much for joining us here on Startup Street. You know, you've been cash positive while scaling. What made this the right moment to raise funding, and how do you plan to deploy the money, this $2.7 million you've raised?
Thanks a lot for that. And yes, we've built the business in a very scalable, we've scaled massively, but we built the business in a sustainable way, because that's been our DNA since day one. And with AI coming in, we saw a massive opportunity that we could actually build a really, really large outcome out of our business, hundreds of millions in revenue. And that led us to actually raise this growth capital from emerging ventures.
Okay. I was reading that you've uncovered more than 5,500 vulnerabilities a day last year and helped customers prioritize remediation of more than 2 million of those. You claim the number could triple by year end. Largely, what does this tell us about the evolving, threat landscape and the work that you're doing in this field?
Oh, absolutely. That number is correct, and it's growing massively as we speak in 2025. So with AI coming in, right, everyone is talking about productivity. We're talking about AI agents to do your financials, do sales enablement, sales outreach, customer relationship management, you name it. Everything using AI, right? Which means like people are becoming super productive. Interestingly, threat actors and hackers are also getting more productive and innovative. So hackers are also building these AI agents which hack 24/7. So as we all know, you need fire to fight fire. So at Astra, we're essentially building this platform which mimics hacker behavior to find vulnerabilities continuously in our customers' websites, APIs, cloud servers, you name it. So that's how we actually using AI. We realized that one interesting insight that we had was that whenever you hear about a breach or a data which got leaked due to a hack, a lot of times it's not really one vulnerability. And a lot of times it's not even a vulnerability which is a high severity vulnerability. So what usually causes a breach is essentially 2 to 3 vulnerabilities combined with each other. And those vulnerabilities could be one medium severity vulnerability, one low severity vulnerability, but combined with each other to actually cause a breach. So what happens on the organization side is whenever they get a pen test done or a security scan done, they just prioritize based on that severity score that they get, that it's a high severity vulnerability. But usually there are other vulnerabilities which get overlooked, that's the kind of correlation that we are able to offer to our customers where we tell them that, hey, I mean, you're just looking at this low, high severity vulnerability in silos, but probably you should not be looking at it because there's some other defense mechanism in your system which is mitigating it. How about looking at this medium and low severity vulnerability in your APIs and your cloud servers, which can be combined to actually cause a breach which can be fatal. So that's something that organizations seem to value quite a bit.
All right. Speaking of organizations, you've built a client base across 70 plus countries. And, if I look at your customers, they range from ITC to Mamaearth to Muthoot Finance. It's quite a wide range. Tell us where you see the next big growth opportunity, the next big market in terms of growth for you, across segments, across geographies. What are you looking at?
Absolutely. I mean, the innovation's been received really well by customers across the geos. Interestingly, we do not have any feet on the ground in the US right now. And that is one of the areas where we would plan to expand with this fundraise, where we, without having any feet on the ground in the US, we've managed upwards of 60% of customer base, which is in the West, in addition to a lot of customers in India and APAC region. So we've realized that with this inbound marketing, we've managed to crack customers across the globe. So if we actually are putting a targeted efforts with sales team and people on ground in these geos, the growth potential and the types of customers that we'd be able to get would be many, many more. And a special focus would be on mid-market as well as enterprises going forward, because we've realized that when it comes to mid-market, these set of organizations usually have good amount of budgets for security, but they do not really have the expertise of choosing or navigating through the sea of jargons of all sorts of keywords that cybersecurity field comes with. So we've built a solution which actually is essentially helps them navigate through that. Helps them achieve the outcome without navigating through the jargon. And works really well for lean to no security teams or engineering teams which are security conscious.
All right, Shakil, we'll have to leave it at that. Thanks very much for joining in with that, and we wish you the best with your venture going ahead.
Thank you.
And with that, it is a wrap on this edition of Startup Street. From Shruti, Ritu and me, goodbye and many thanks for watching. More news and updates coming up on the other side. Stay tuned.
What changed to make quick commerce a high conviction bet?
2020, when we were sort of raked through the coals for ruining a perfectly good food delivery company and like bringing their stock price down, I think we had a lot of conviction that this will work.
When Dipi puts out a note to shareholders to say that this is actually going to be the engine of growth over the next 10 years, how does that make you feel?
Over the years, we've gone through enough to not sort of be either in the vindictive zone or to be, in the celebratory zone. I think we try to stay very stoic about it.
How are you looking at the race that's currently on?
A lot of those bets are being taken for sector-focused quick commerce companies. And they will probably do a better job for those use cases than we will.
Freezers and heaters, you've got Dyson hair dryers and so on and so forth available on Blinkit as well. Are there going to be any limits at all?
Come March, people were searching for like air conditioner 15,000 times a day. We didn't think that, people would be searching for, car accessories and car repair things on our platform, but they do.
Doing the deliveries yourself, what did that teach you?
The most love that we get is when parents forget to like print out something for their kids the next morning, right? And then they use a print service. Somebody forgot their hair dryer at 6 in the morning,
yes.
right?
Yes, me. So what are the 4 or 5 things that you're prioritizing today?
We are very keen to solve the problems around pharma and access to, timely access to medicine.
There is going to be a discounting war, and what does that mean as far as profitability is concerned?
We are a way to for the customers to live a better life. So we can't be gouging them for pricing, like we said, right? We can't be like, hey, you pay 20% extra just because I'm coming to your house in 10 minutes.
Kunal Kamra has been tweeting about the landlord mentality of companies like yours.
The gig economy in India is actually not a lower cost structure. Most of the gig economy workers in India actually earn higher than they would if they were actually making wages, like as a full-time employee.
Let's get into Bistro, because this is the latest in the chapter of love and hate between you and the Restaurants Association.
Not me. I think this is a matter for.
Do you cook?
Yeah, I do, actually.
In 10 minutes?
I think I take a lot longer.
How different is Albinder Dinsa today from the 22-year-old version?
I think I was fairly nerdy, so I thought I would be an engineer of some sort. Stopped worrying about who I am as much as,
just getting the job done.
Just getting...
and enjoying it while you're at it.
Yeah, I think that's way more important.
Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. There's not a lot that people agree on these days, but there is certainly a consensus call that worked through 2024. And that was the fact that quick commerce in India has been a great disruptor. It's been a game changer, not just for the commerce business or digital commerce business, but it has changed customer expectations, fulfillment expectations across different sectors and across different categories. What will the future look like? What will be the lines between quick commerce and e-commerce, or is it going to just be one? To talk to us about all of that and more, we have with us the man who is the current market leader in the quick commerce wars, and these wars are getting very, very competitive. Albinder, thanks very much for joining us here on CNBC-TV18. It's great to have you back on Young Turks. But, that's what I want to start with. I mean, the degree of skepticism. The skepticism was founded on the fact that this was not a model that worked. It was a model that you tried a decade ago in 2015 with Grofers. It didn't take off. And suddenly, in 2022, things changed. I want to understand from you, what changed to make quick commerce a high conviction bet?
So I think when we started in 2015, the challenge was that the ecosystem of customers was not mature enough. There were not enough customers in the top cities to support a very hyper-local focused business. The other issue was that even though the customer adoption was there, the customers liked the service, there was just not enough of them. The second issue was that there was not enough capital to support a large-scale build-out, especially in our cities, which can be very expensive if you're going to build out infrastructure, if you're going to build out, large-scale warehousing. A lot of the investor capital wasn't there because of the fact that there were not enough customers. And the third part was that, we really suffered in 2015 from a lack of last mile support, right? Which over the years after 2015, because of food delivery and because of horizontal e-commerce and a number of other players, there was enough of a gig economy ecosystem which got created, which brought a lot of predictability to last mile fulfillment in especially the large metros. And I think when we started again in 2020, when we opened the dark store again in July of 2020, that was way more smoother than what it was 5 years before that, right? That was because a lot of these problems were solved. There were now more customers that were exposed to e-commerce in one shape or form, whether through horizontal commerce, whether through cabs or food delivery or travel. So they now were transacting online. There were more customers which are transacting online. Of course, there was also, because there were now more customers, there was also the amount of capital that you could also get from the market was higher. And because food delivery in large part had solved the gig ecosystem problem for last mile delivery, it was just easy for us to also tap into it and say, okay, we will just replicate that and start another hyperlocal business all over again. So I think these are the three large factors which in 2020 were very different from what it was in 2015. And then, we saw that, because of that, we had the conviction to just sort of pivot the entire business towards quick commerce. And this time it worked, right?
And as I pointed out, I mean, this has really been the story of 2024. Did it take you by surprise as well? Because it certainly took everybody else by surprise. The strength, the pace of acceleration, the customer love and adoption. Did it take you by surprise as well?
Not really. So, like I said, right, between 2020 and 2022, when Zomato acquired us, right, we had already gone through this journey of knowing that this is a way better product market fit in this model than what we were operating in as growthers, which is why we also changed our name, right? So we had seen that journey throughout, right? So in 2020, when we were sort of raked through the coals for ruining a perfectly good food delivery company and like bring their stock price down, I think we had a lot of conviction that this will work, this should work, unless we really go out and mess this up. Thankfully, that didn't happen. And I think 2024 was just the acknowledgement of the market also realizing that, okay, this is different. And this is actually like, something which might work over here even faster than e-commerce did in the country.
So how does it make you feel today? You just talked about the fact that you were hauled over the coals, so to speak, when the Zomato acquisition of Growpers took place, and then you, of course, became Blinkit. But today, when Dipi puts out a note to shareholders to say that this is actually going to be the engine of growth over the next 10 years, it's going to outpace the core business, how does that make you feel?
I think, I just have a lot of gratitude for the fact that, we are here, we get to do this. It is a very interesting business to build. I think over the years, we've gone through enough, as a team, we've gone through enough, highs and lows to not sort of be either in the vindictive zone or to be, in the celebratory zone. I think we try to stay very stoic about it, that, this is just, we should just be grateful that,
we're still here.
We're still here.
And we're doing what we love to do.
Yeah.
Well, so let's talk about where things are today and what the future looks like and what potentially quick commerce could evolve into as far as India is concerned. Let's start by talking about the headroom for growth from here on. I mean, is this still over the next 5 years or so likely to be a top 10, top 20 city business? I mean, what are we talking about? I mean, there's all kinds of addressable market numbers. What's the number or what is the assumption that you're working with?
I think our assumption is also changing. So over the last, 2 years, we've been progressively opening newer cities. And we're finding that there is a different fit for the business model in smaller cities. We're actually building a supply chain for a lot of products, which traditionally has not reached, let's say, the 200th largest city in the country, right? And that is finding acceptance overall because I think consumption is going up. There is more affluence in our tier 3, tier 4 cities. So there is a demand for, better products and better services to be available there as well.
So how different are things for you from Blinkit's perspective when you deal with customers in Delhi or building out the supply chain in Delhi versus building it out in Alwar or Vellore?
So I think there are two parts to this. One is, what is the customer, how is the customer different, right? So what we are realizing as we go into the smaller cities is that the audience is a lot more, a lot more older. The majority of our audience tends to be slightly older. Their demands are slightly different, right? Whereas in the metro cities, we are seeing that our customers are skewing younger and younger as more of them get to work, they start working. This is like a more convenient way for them to deal with it. The supply chain part, I think that has been a revelation because traditionally a lot of the supply chain solutions that were built for our smaller cities, they were built on the back of the sale of FMCG products.
Right.
And that is a supply chain that has been operating for 70, 80 years.
Yeah.
Right? But that also had its limitations in what breadth of products and what kind of products could actually flow through that pipe. Right? Now, when we are going and we are building a new supply chain, which is a lot more sort of open for anybody to be able to access, then we are seeing that penetration for products which have never reached those places because of supply chain restrictions. Now they are actually finding adoption over there, right? So D2C brands have a higher salience in smaller cities because those are products that consumers would like to consume.
But didn't have access to.
Right. Their only access to them was horizontal e-commerce.
Yeah.
So whatever was the restriction of horizontal e-commerce, right? So for example, if it's a 60 rupee soap, chances are you're not going to be able to get it on horizontal e-commerce because the shipping cost would not be justified.
Yeah.
Right? So those kind of use cases suddenly open up when we go and actually build the supply chain.
So, typically now, given the expansion plans that you have for yourself, how do you see the mix changing as we move forward between grocery and staples and non-grocery and staples?
I think the mix has, grocery I think is still a large consumption basket, right? So the mix doesn't change that dramatically as people would generally think because that is still the largest consumption basket. You would always buy grocery products more than you would buy any other products in the market. So I think the mix change is there. Like, the other products salience would increase, grocery salience will go down, but it is not super dramatic. Right? It also happens at a very, very, very slow pace. Right. But what's interesting is that, we have to build solutions in quick commerce for a lot of different use cases, right? I mean, we started with categories like electronics and beauty.
Yeah.
But if you exit from here, you will today see like a large order fleet, which is delivering everything from like geysers, air conditioners, heaters. We launched laptops and all of these things on these supply chain rails, right? Because now we allow pretty much everybody to now come and list their product and sell. But if we don't have the right supply chain to be able to cater to them, then they will not be able to sell their products.
So let's talk about whether there are going to be any limits that you put in terms of what will go through these pipes. You were just talking about geysers and heaters. You've got Dyson hair dryers and so on and so forth available on Blinkit as well. Are there going to be any limits at all that you foresee in terms of what goes through these pipes?
I think there will be. Right, our point of view is that a lot of the high assortment categories are not something that we will be able to do that well. But again, we learn more as we walk and we see what the world is doing with the product that you've built, right? Because a lot of the time the customers tell us that this is what I would like in 10 minutes, right? And that is our cue to pick up that in data and then say, okay, let's enable.
So what are they telling you today? What would they like?
For example, last year was actually when we were like, okay, we should have done air conditioners. So at least let's do coolers. So we did coolers last year. Hopefully this year people will throw up something new altogether, right? I think our latest addition in the pipeline has been automotive, right? Which is, we didn't think that, people would be searching for, car accessories and car repair things on our platform, but they do. So now we have an entire selection of them. I think a lot of these products just come out of like what the customers tell us that, okay, I would buy this if this was available on Blinkit. And I think our job is to make sure that we make it available as soon as possible in the right way, with the right experience, all of those.
जंगपुरा विधानसभा का चुनाव हम सब कार्यकर्ताओं ने मिलकर बहुत मेहनत से लड़ा। जंगपुरा विधानसभा के लोगों ने भी बहुत प्यार मोहब्बत सम्मान दिया, लेकिन 600 वोट से लगभग 600 वोट से उसमें हम पीछे रह गए। तो मैं जो कैंडिडेट जीते हैं उनको बधाई देता हूं और उम्मीद करता हूं कि जंगपुरा की समस्याओं को वो हल करेंगे।
So a lot of the skepticism of the business has been like, look, let's not talk about innovation and all of that. There's no real innovation here. It is a labor arbitrage game that's actually playing out. And this continues to be part of the conversation or part of the criticism or the argument that is put forward. How do you respond to that? And, you know, there is some legitimacy to the labor arbitrage argument. How do you see that changing as well as this business grows, as more and more competition comes in and there is an escalation, so to speak, of the landscape?
See, I think let's talk about the flaws that people point out, that maybe it's only about labor arbitrage, which we believe is not the case. But I think it is still important to understand that it is not about labor arbitrage either, right? I think if you look at the gig economy in India in general, right, it is different from what it exists in the West. The gig economy in India is actually not a lower cost structure, right? It actually solves for very different issues, right? The nature of employment, the nature of flexibility. But if you look at sort of, the wages or the earnings that these partners would make against the wages that they would be able to earn, most of the gig economy workers in India actually earn higher than they would if they were actually making wages, like as a full-time employee. And I think, so that is important to understand.
Yeah, but flesh that out for us, because again, there's a lot of, and it's a visceral issue, and it gets people sort of excited about it as well. I mean, I don't know if you saw, but Kunal Kamra has been tweeting about the landlord mentality of companies like yours. Now, how do you address this? And when you talk about the fact that they are making more money than they typically would have had they been working in a regular job, what are we talking about? What are the numbers?
So I think normalized, if I'm not mistaken, like our latest number was somewhere around, like normalized for the same hours that they would have worked in a job. I think our partners take north of 25,000 rupees a month. And I think that that number will change depending on how the rest of the employment ecosystem changes, right? I think if you look at a ecosystem where you have, millions and millions of people who are signing up voluntarily to become gig workers, that is information and that is data, that this is something which actually works for them. Now, there's an argument that could be because of lack of opportunity.
Sure.
If that is lack of opportunity and that solves, then of course,
And that's not your problem.
That's we are playing in a market, right? So if let's say there is more demand for workers in regular jobs which are not gig work, I think we will have to pay more.
Yeah.
Right.
But do you foresee having pace? Is the cost of human capital likely to go up significantly?
I think it is likely to go up, but not because of competition within the space, not because of competition within gig work, right? So I think if we have more manufacturing jobs come into the country, right, we have more services jobs come into the country, we have a higher skilled workforce which is actually able to find different opportunities. I think those are much larger factors that will cause us to have to pay out more to attract more people to come and do the gig work.
Talking about the cost of services going up, and again, that is something that, there's periodically there's outrage on social media about what is happening as far as the platform fee is concerned, what's happening as far as the convenience fee is concerned, and so on and so forth. How much room do you believe that you have to be able to expand that further, to be able to get the consumer to willingly pay more for your service?
I think.
How much elasticity do you believe you have there?
See, we always believe we are at zero elasticity, so we have to do a better job to basically be able to ask the consumers to pay more.
Yeah.
And I think our learning over the last few years has been that if you build a service which is reliable and you build a service which actually adds value to the customers, then they will pay, right? You can't just arbitrarily charge anything, right? And I think to do that, our services have to get better, right? Like we have to be able to deliver a wider assortment of products in a certain timeline. make sure that they're always high quality, make sure that they're always delivered on time. A lot of these things, if you look at the customer behavior also, right? Customers will happily pay for a service which adds value to their life, right? Because they will find different reasons. We were talking about tier 3, tier 4 cities.
Yeah.
A lot of the older population which transacts with us, we never thought that they would also be willing to pay for delivery, but they really rationalize it. They don't want to take their two-wheeler at their age and then like drive to to get like simple products. They're like, I'll happily pay 15 rupees to just save that effort, to save the petrol. So I think consumers are very rational.
I know you've been spending time actually going out there and doing the deliveries yourself. What did that teach you? That process of actually being there in the dark stores, packing and then going out there and delivering. What did that teach you?
I think the first time that I did it, I think my perspective on what our business means to customers changed, right? And it is good and bad, like most things, right? Like the good is that, of course, customers love us because they see us as an upgrade to their lifestyle, right? But the reason that we are an upgrade to their lifestyle is because the other friction in their life is just so high.
Yeah.
Right, the inability to sort of be able. There is so much we are talking about traffic today.
Yeah.
Right, that is a feature of everybody's everyday life.
Yes.
If you are a working mother of two and then you have a job, you have to go back home and you have to take care of the children.
Yeah.
Right, there is just so much coordination and friction in everyday life. If there is a service which takes some of that anxiety down, that I forgot something.
Yeah.
Right. I think the most love that we get is when parents forget to like print out something for their kids the next morning, right? And then they use a print service. It is a thing to see that, suddenly the anxiety when it goes away, like, we were talking about, somebody forgot their hairdryer at 6 a.m, right?
Yes, me.
And that when you deliver that product, right? And that customers, you see the anxiety melt away on their face.
Yes.
Right? Oh no, like I was in panic and like all of a sudden, okay,
I'm not panicked anymore.
I'm not panicked anymore.
Yeah.
And that actually has an impact on their life quality. And I think that changed our perspective. That changed my perspective on the business. That our business is actually, we're not in the business of selling things. Right? We're in the business of sort of making sure that people can live better lives in our cities. They wouldn't be less anxious.
From your own personal experience, I mean, what are the pain points that are yet to be addressed? Where can you take out the friction from that you aren't already?
I think the most audacious one that we've taken on is the ambulance service, right? Because we want people, whether they're in large cities or small cities, that we want to play a part in making their everyday lives better, everyday lives easier, right? And I think that's how we come up with problem statements, whether it is a print service or whether it is this or doing like a lot of the other products which we do. And I think ambulance was sort of right on top of that list. But the challenge of getting it off the ground has been one that, it is a very, very disaggregated sector. It's not been really formalized in a certain way. So wherever we initially wanted to do it in partnership with a lot of like other people. But we realized
you couldn't find the other people.
We found the people, but we realized that they don't sort of adhere to the level of safety and standard and that we would need. So unfortunately, which basically meant that now we have to do a lot of the heavy lifting ourselves.
Who are you talking to at this point in time to ensure that this does get the kind of momentum it requires?
So I think a lot of it is, talking to the healthcare providers, which could be, the services that provide paramedics, talking to the folks that provide a lot of the equipment which goes into our ambulances. And the third is obviously the primary healthcare, which is, hospitals, talking to them about, how will, from everything from like getting patients to be able to offload them in a timely manner, to also be able to relay information to them in advance that here, this case is coming in with so-and-so complications so that they can be prepared ahead of time. So we're doing all of this.
Yeah, so what are the 4 or 5 things that you're prioritizing today, which could potentially be engines of growth over the next 2 to 5 years?
I think the largest ones where we're working on, apart from the ambulance service, we're also trying to sort of democratize the access to our supply chain for anybody who wants to sell. And I think that's a very different...
The marketplace.
The marketplace itself. And I think that has the potential to change a lot of the way that we think about what quick commerce is going to stand for 5 years down the line for the end customers. we are very keen to solve the problems around pharma and access to, timely access to medicine. But it is
in a space which continues to be grey, where you continue to be litigated in court between the Chemists Association and the online pharmacies. Is this legal? Is this not legal? Is that really a space that you're looking at?
I think we, because of all of these complications, it is something we've not gotten into. But we feel that it is a worthy cause to try to figure out if we can do it well, if we can do it while making sure that access to medication is available in a proper way. And I think we're just like what we are realizing a lot with the ambulance service, right? Like I think over time the rules of engagement for everybody in the sector are going to become more clearer and equal. And I think when that happens, we also want to be ready to be able to roll out a service like this.
Okay,
right?
So that's two.
There's Seller Hub. There is this. We're working on fashion, which I don't know if it'll go anywhere. But that would be an interesting space to also explore and figure out whether we can build a quick commerce business into it. Of course, we have also launched Bistro, which is essentially food in 10 minutes. And that is something also very interesting and exciting because it is. I never thought I would know so much about food science that I do now.
I'm going to talk about food science in just a second, but let's get into Bistro because this is the latest in the chapter of love and hate between you and the Restaurants Association.
Not me. I think this is Zomato folks.
So now you're in that space as well.
Yeah.
But and you've come out on Twitter and said, look, this is different. It's not Zomato. It's not Blinkit. It's outside of both of them, and we're not really taking on either the data or partners who are working on either of those two platforms. But how do you see this? How do you see this evolving? And do you believe that in a way you kind of lose out on the love of this ecosystem that's so necessary for Zomato, and is that going to be a challenge that you foresee?
See, just like everything else that we've done when it comes to the kind of products that Blinkit is able to offer or the services we're able to offer. So 2021, we had actually launched fresh food on the platform on Blinkit, right? We were still called Grofers at the time, but we had launched fresh food. And we had seen a decent enough response, but again, that was just sort of the regular model of, some seller was coming to the stores every day, keeping, 5 or 6 of their products, and then they would sell out or they would take them back, right? But the quality of the product, what the consumers were expecting, that did not align. So we didn't scale it up. We basically sort of let it be. But that has been a question that we keep getting asked from customers. Like we see those searches coming in, right? We see those customers looking for
10-minute food.
Right, which when you think about it, the same reasons that quick commerce works for packaged products or for all of the other categories is that the access to the customer, the hassle of actually like being able to get diapers in 10 minutes, that is a problem that we solve for the customers in the packaged space. When it comes to food as well, that same problem exists. Right, that what is my best way to sort of get something in a hurry? Is it going to be good for me? Is the quality going to be good? Is the taste going to be good? So we believe that sort of quick food delivery is sort of the same kind of a platform that like a QSR or a food court would be for the offline world, right? So when we started thinking about the problem, the solution was obviously that now you actually have to build out the supply chain, like we have to do it for quick commerce, right? Which means that we can't really sort of say that, okay, like, make something a day before, freeze it, and then microwave it and send to the customer.
So that's not what you're doing.
That's not what we do, right? I think what we're trying to do over here is, what is the best way to sort of put together this food, right? So that the last step is basically not going to be more than 5 minutes, but it still retains the goodness of the ingredients, it still maintains the goodness of the taste, right? So like a very simple example is, right, if you basically sort of make rajma and like keep it overnight, right, it is not going to taste the same tomorrow, right? The challenge for us is how do we put that dish together so that it feels like it is freshly made rajma.
So what are you doing? What's the secret sauce?
So they come separately. There are like 4 different ingredients which are prepared in different boxes. They're like freeze dried, they're frozen, and they're like shipped to the front end.
Right.
And at the last moment, that is when you're actually putting those ingredients together.
So you will keep I would imagine the assortment will be limited on this, just so that you are able to consistently deliver on the quality.
Yes.
Yeah. So how do you break bread now with your friends in the NRAI and get them to sit at the table with you on this issue?
I think for me, the job is a lot easier. Like, we are very open to working with anybody that wants to sort of, put their dishes onto the platform. Our objective function is to solve this for the customer.
So that's number 3 or 4?
I think that was 4th.
That was so. What's the 5th?
What is the 5th one? Actually, the large-scale supply chain, the intra-city supply chain, that's one of the most challenging supply chain problems. Like, I used to think that, solving large-scale warehousing for grocery products in India was a hard supply chain problem. But I think solving for this intra-city transit for a very, very large assortment of products, close to like 28,000 products, I think that is going to be, that is one of our toughest problems, because now we are investing for the first time, I think in our life, we are investing sort of 5 years down the line, that this is what our network and our warehousing infrastructure is going to look 5 years down the line.
So 5 years down the line, what is that going to look like, both in terms of warehousing, in terms of the number of stores, in terms of the number of cities that you operated?
So I think we don't have that good an estimate of what the scale of the business would be, but we have to invest ahead of time in basically saying, hey, we are going to have some sort of large-scale warehousing in this region as well, right? And that is going to be the basis of sort of how we set up the other locations, right? So we are essentially like, maybe we will set up 2 out of the 4 locations that we say today, but we know that in 5 years, all 4 of those warehouses are going to be there. So the network that we have to build out for that is what the call we have to take, and the work we have to do today, that this is what the network will look like 5 years out.
की जितनी भी चीजें हैं उनको हल करेंगे, बाकी तो अब बाकी देखते हैं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover